It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Woo!
Hola, everyone.
Hola.
¿Cómo está? Bien, ¿y tú? That's all I know. That's it.
That was pretty good.
Yeah.
That was pretty good.
Yeah, that's all I know.
You don't know pendejo?
Yeah, I know pendejo. Yeah, that one I know. Puta, I got that one. I don't have.
We're just start over.
I don't have.
I'm
You
so
brought
sorry.
me there.
I'm so sorry to our native Spanish speakers. I lo siento. I never actually even took Spanish, so that's all just from telenovelas. I
didn't take it either. Yeah. I wish I did though.
Do you take Spanish?
I did for 2 years. Don't remember a single thing. It was
That's how I was with Italian.
Yeah, but languages. That was like
Not my side of the brain.
I was in like the special classes for languages.
Well, that's okay, but like, look at how
I
fast.
just don't have that
Look at how
in
fast
Special,
you.
like Josh special, or like
Yeah.
got it.
Yeah, but look at how fast you could.
helmet too?
Yes, exactly.
Look at how fast you can sling an oil contract.
Yeah,
and
that's-
calculate that. Like that's
Math,
like.
I was up there. It was
So
great.
we all excel in, like,
math,
different-
sciences.
Yeah.
Science is not that great.
The opposite of your brother. Your brother's all English major, kind of AP class, and math. It's a struggle. Struggle.
That's
Very
what tutors are for.
What's that?
That's what tutors are for.
Yeah.
Do they even like write anymore though? Like is
No, so his teacher in the class that they don't use like their MacBook or anything like that.
wow.
They actually have to write, and they have to do it in class.
Oh, good.
Because she doesn't want any plajarizing
Sure.
or anything else like that. So basically,
no Chat GPT?
no Chat GPT. Yeah. So his
Yeah,
English
it's like
class-
sweeping kind of uproar across multiple school districts where more parents are demanding a return to, pen and paper. Like they're like, why does a 5-year-old need a Chromebook?
Right.
Like,
Right. Yeah, it makes sense. Yeah.
And there's even like neurological studies that if you write something that, like how we used to
You
take
remember
notes.
it more,
Right. Like
yeah.
it's just, it literally remaps your brain to, put pen to paper. So.
Very good. What'd you just do over there, young man?
Little Nasdaq, long Nasdaq here.
Oh yeah, 28,858 or so.
The little nibble.
Little nibble.
You're up 8 handles already.
Take it.
Take it.
And take it, run like a thief in the night.
Are those peonies?
I don't know I think they are more the Gerber daisies. I think maybe more
I've learned a whole lot about
flowers. I was like,
Well, no. Peonies specifically.
is that Michaela's favorite flower?
It is. I have
Chrissy's
been told.
favorite flower.
Well, do you know why? They come. You only have 1 month.
Starts with a P?
Have you got them yet?
No. I have
Peony season.
Peony season is 1 month.
not. Okay.
This 30 days, like until the end of May.
Oh, that's
If you don't go get them, and they
you're
are
gonna
hard
have to
to
see 'em
find,
again. Yeah.
you're going to be in the dog.
You literally have a friend that's running a multi-million-dollar flower company.
I do. And so I have those couple flowers. You can get those too. You
Flowers for Dreams,
It has
everybody.
peonies on there.
Mention Nick and get
I
nothing
support
off.
them. They do good work in Chicago. They're a legitimately awesome company. Flowers for Dreams.
We've had them
All over the
great.
Midwest now.
Yes, they're in Detroit and Milwaukee as well.
Yeah, that's the Midwest.
Yes, and I think they ship like U.S. wide.
Yeah.
So they do.
And they pick a charity every month, and the proceeds from flower sales go to the charity. Like, it's great for everybody. Flowersfordreams.com. Follow them on
very good.
Instagram.
Yeah.
It's awesome.
They are awesome. Thank you for that.
Yeah. No, I deeply believe in all the work that they do, giving back, charity. They help animals, all the
yeah.
other causes.
Yeah.
So I love it. Now, if someone would like to give me flowers, but you can buy flowers for yourselves, ladies.
But
I can buy my own flowers.
here's the hook, though. Do you know how much they are per stem?
Per
Per
stem,
stem?
they go? Oh, this is like ordering oysters.
$10.
Oof. Per stem. $20.
They're like $10 a stem.
Are they? Yeah.
It's they're
Could you put a price on love?
No. But I
No,
mean,
but you could put a price on
you know.
peonies, obviously.
yeah, it was quite the learning experience.
But if it's
I was like,
Chrissy's,
yeah, can I get a bunch of
Chrissy's favorite flower, then get in there, man.
Yeah.
Get in there. What are you doing?
You really should. You have literally 2 weeks left to get them. And
They
then
have
they're gone.
plastic ones?
No.
Like at Michael's.
Yeah.
There's no more Joann's.
Gone.
No, Joann's is gone. Don't you
Joanne-
argue with me about craft stores, Mr. Man.
I'm sorry.
Don't try to mansplain craft store. Like,
I went into a Joann's one time, the one on in like the South Loop that's right by the Home Depot.
they closed. Yeah, that one was. Yeah.
It was closing. I went there when I bought a TV at Best Buy, which was the last time I've been at a Best Buy. I think it was the first and the last time, but the first in like 5 years I had been at a Best Buy. But I was like, I'm gonna go see what this like Joann's is about. That's a store. They have
is.
like
They have everything.
yarn and fabrics and
They have fake flowers.
filled with single women.
Yeah.
Better than the frozen food section at Whole Foods.
Yes,
Or something like that.
yeah.
For sure,
Yeah.
I would imagine.
It's like shooting fish in a barrel.
Are you playing like a Big Daddy? Is that a Big Daddy joke? Don't go towards the frozen food section, Corinne. Your boobs will harden.
What?
Microsoft went down 5 points. It's a classic. Big Daddy.
Adam Sandler?
Yeah.
Yeah.
I don't remember that part.
Yeah.
That's funny.
You know that line.
I got you. You remember, I brought you back to a good place.
You know what the sad thing about that is?
What?
Is like Gus and E.
Yeah, they don't know it.
They've not even heard of those movies.
Right.
Oh, like the whole like Billy Madison era of just
That
like
whole-
Happy Gilmore, Billy Madison, Big Daddy,
Early
like
2000s
just that
comedy.
run by Sandler was insane.
They were 6
the
months
Wedding
old.
Singer,
It's
Right.
it's crazy.
The Wedding
They were-
Singer.
Yeah.
Yeah.
Yeah. It's sad. I've had that come to Jesus moment where I realize that I am just old. I am on status when I was
You're earning it.
when I was quoting Zoolander and he looked at me like I was like my hair was
What
on
is he
fire.
talking about?
And I was like, "You don't know Zoolander?" And he was like, "No, I've never heard of that." And I was like,
Open the schools.
That was
But it's just so weird to me because I guess because everything is like streaming now, but like our exposure, because there was only, so many TV channels growing up. So there's always like some old movie that was
Yeah.
on like TBS or something. And then so like that's how we would watch.
There's no better way to burn 4 hours.
Right, like you just- or like WGN.
2000s comedy.
Right. But just like watching older, than when we were kids,
Get
older
a commercial
movies.
every like 14
Now you got too many
minutes.
channels. You can go.
I know, but that's what I'm saying. Like the kids, they don't have that because even when I was growing up, like
They can't torture themselves by having to watch that stuff.
like because of Nick at Night, like I knew who Mr. Ed was. Like you ask a kid today, like who's
Yeah.
Mr. Ed?
Nobody knows who Mr. Ed is.
Yeah,
I don't even. I hardly remember Mr. Ed.
Well, Nick at Night. Remember those? Yeah.
Yeah.
All right.
All right. Well,
What'd you do last night? What's going on with you?
What was last night?
Monday?
Oh, watched the Buffalo Sabres game, which they.
Is that still a thing?
Yeah, well, it was game 7 for them. They're done, and they really lost it.
Who did they lose to?
The Canadians.
Oh, okay.
Canadians play like old school hockey. They skate hard. They dump. They don't have as many players as like Buffalo. Buffalo was kind of stacked. They seem like they were.
Don't the teams have to have the same number of players?
Buffalo lost in overtime.
Don't the teams have to have the same number of players?
Say again?
Don't the teams have to have the same number of players?
Yeah, but they just seem like Buffalo outshot them almost like 3-2.
You mean
at one
Montreal
point.
outshot them?
No, Buffalo outshot him. Montreal goalie stood on his head, and it was just it was something in the second period switched because Buffalo was down 2-0, and something in the second period just switched, and then they tied it, made it 2-2 when they went into overtime, and it seemed like Buffalo had the momentum and just a routine shot on goal, little screen, and it got in, and Buffalo went home. So
Gotcha. So
Yeah.
our trade desk will be sad.
Yeah.
yes. I don't know if we'll see Ryan today. I don't know if he's
Okay.
on the schedule. It'll be a hard one. It'll be a hard one for him today. I think we have Q and Glenn.
So
Oh, it's good. I need to talk to Glenn about. He was saw him at the Sox game.
Oh, he was enjoying himself.
Oh, he was enjoying himself.
wait, but did you go with him or you just happened to run into him
I get a text from him and it says, I like that hat you're wearing. I was wearing like a 97 Bulls like starter hat, like with all the championships on it.
Wow.
And I was like,
Where is he?
hell.
Hopefully at this point you're saying, I hope I have to turn around to see him. I don't want to have to see him.
So he goes
down by the field waving to me.
Yeah, so I start texting him. I'm like, where are you?
Oh, because you want his seats to be worse.
That's right.
I just got that. Okay, I'm sorry.
Yeah,
okay.
for sure.
Yeah. So he says I'm to your 8 o'clock, and so I turn around and I look. And I see him. He's like 3 or 4 rows up, like kind of one section over, and he's just like one of these
having a good time. He's young. So wait, but did he miss your impressive fast pitch performance?
Oh yeah, he didn't see that.
How fast? Over under? Would you say that Glenny can throw
he's young.
a heater?
He could get 7.
He's still got some elasticity in his.
I don't know. The kid's now like Gus. He a fit guy.
Well, he played baseball.
Yeah. Oh, he's an athlete. He's
Yeah.
an athlete. But he's like, my back hurts, my leg hurts. I'm like, dude, you're 25 or 6 years old.
Suck it up. You don't know what it's like.
You don't know pain. You don't wake up every day like this with the. I don't know. So I don't know. I would think that he could get in the set.
That Glenn could throw some heaters?
I think Glenn's athletic.
Okay.
Yeah. We've talked about like a Tasty Olympics and like.
We have. I just want to film it for social.
Yeah.
But
I think we would be. We're obviously a much smaller outfit than the rest of the business. So
Sure.
I think we would. I think we have some good specialists.
okay.
We have Gus. We have Mikey for like lifting.
Sure.
heavy stuff.
Yeah.
I mean, I am the mini game specialist. So,
Okay.
You know,
I can still play air hockey.
air hockey over here.
Yeah.
You're decent at ping pong too.
Okay, not
Yeah,
great.
yeah.
Not great.
Yeah.
I give Olympic performances and just serving face
There
every
you
day,
go.
honey.
Yeah.
Just
That 30
straight up.
handle. Yeah.
Just.
Sorry. 30 handles.
Anyway, we got a great show for you today. A lot of good stuff. Are you still playing pickleball though, Nikki?
I am.
How's that going?
Today, right?
Did you see the massive pickleball complex?
Johnny's Ice House.
Yeah.
Closing after like 100 years.
No, I meant the one here on Lake that's like open air where they change it for the seasons. It's
that one.
called like you go to like citypickle.com.
Big City Pickle.
Yeah, big, and I was like, I am not typing Big City Pickle into my search bar. I was like, I will lose my job. I will lose my job. Lester's gonna come over here, and he's like, Vanetta, you can't go to these websites. I'm like, but I just was looking for a big pickle.
Did you find it?
No.
Oh,
We got a great show for you today, though. A lot of really good content headed your way on this terrific Tuesday here on Tasty Live.
My peeps are sending me the videos from the movie.
From Big Daddy.
Stay away from the frozen food section.
I don't remember that section.
Yeah.
It's a good one.
That's funny. We got a great show for you today at the top of the 8 o'clock hour. We got a little Tasty Bites, top 3 challenges for small account trading. Fits right into getting you ready for the changes in the PDT rule. Tasty's going to be ready from day 1, June 4th. It is imminent. We are counting down and we are ready. But there are challenges that do come with trading in a smaller account, which is why we've always, from the jump, had a Tasty Bite level of series for people with smaller account sizes.
Yeah, it's a good one today. It's kind of looking at spread width, adding contracts versus widening the spreads, as well as just buying power on naked positions versus defining the risk with like spread trades.
Okay.
So kind of extrapolating out on the contract question, but also going to look at whether a naked position one contract has more risk or less risk than 10 contracts of a defined risk spread. They're going to use the same amount of capital to put the trades on, but like, do they have the same sort of risk profile? So we're going to kind of talk through that. It's a good one.
Perfect. And then, of course, it is a terrific Tuesday here on Tasty Live, and that means at 8:40 we got Let Me Explain. We got Chris Vecchio in the house. Ooh, his over-under in the fast pitch.
Ooh, that's
He's a fan.
Yeah.
He might have good mechanics, but I'm taking under 68 miles per hour.
Yeah. Vecchio strikes me as like a former baseball guy. I could see he kind of
his tennis. I don't know why.
Yeah, they could be tennis.
Yeah.
I'm in for chess.
Chess probably too. He has the, the glasses.
Sure, yeah.
I could see that too.
Well, he will be in at 8:40, and then at 9 o'clock we have a market measures. Is legging worth it?
Yeah. Another good one. So it's going to be looking at legging out of strangle trades, whether that is beneficial to you. Looking at different deltas. So does it work on a 16 delta strangle, 25 delta, 30 delta? So a good one. Another good one.
Nice.
Yeah.
And then around that 9:20 time frame, live from the trade desk, we have Quentin Q in the house, also good at the powerlifting.
Yes.
Yes.
Legitimately competes in the powerlifting.
Yeah. It would be a tough out.
Yeah, it's a good competitor for Team Tasty.
Yeah.
But Quentin in the house, and then also Glenn G Money. So you talk to your buddy Glenn on the FX side of things. And then, because it is Tuesday at 10 a.m., Liz and Jenny are going to be live from the floor of the SIBO. It's always electric.
Always electric.
When the ladies are live.
I'm coming on board. It's electric.
If you want to have your question answered by the lovely ladies instead of these two yahoos, just send them a tweet. Use the hashtag LIZJNY, and Liz and Jenny could read your tweet on the air. So you have trade questions or just
Name
want
could
to
be in lights.
Yeah.
Yeah.
There you go.
Beautiful.
But that is our run-of show for today, plus more great content after that. So keep it locked here. We're on till the break of dawn. Well, till 3:30. But in the meantime and in between time, do you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire.
This
leading story.
just in.
Top stories. Just in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is May the 19th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Maybe into it.
Are you into it?
Are you into it? Home Depot had earnings last night. I don't know if you have that.
Oh, I do not.
Oh, okay.
I did not see that.
Down
Maybe they came
around
out this.
$2.50, $3 or
Did it come out this morning? It came out last night?
believe so, yeah.
Okay, yeah, I didn't see it this morning.
Yeah. I told you the flower selection at Home Depot was horrible. We knew the stock's going to be a little soft.
Okay, Tom, thanks.
Kava after the close, Target, Lowe's.
Oh, Kava. Yeah, I forgot that one.
Yeah,
Not
some
that
good
many.
retail. Yeah.
The retail stocks, yeah.
Of course, everyone's just waiting for NVIDIA, which is tomorrow
Yes.
after the close. The entire global economy. Speaking of the,
It's going to be a big nothing burger.
well, we'll get to it.
That's what I
Speaking of
hope
the global economy, though, U.S. dollar steadies as Trump calls off the planned attack in Iran, citing Gulf leaders' request for more time. Leaders from Qatar, Saudi Arabia, and UAE asked Trump to hold off on Monday evening. So again, we're doing this back forth sort of thing. But first, we'll talk about currencies. My next story will be about the oil part of it. But let's talk about U.S. dollar, euro, pound.
My positions are getting better,
Yay!
which is nice.
Love that for you.
But we haven't traded a lot of the currency futures. I have a handful of positions long the dollar, which has been working for about a week now, but still at its lows.
Yeah, pound was up yesterday. It's basically unchanged today with the euro too.
We sold the 107 puts in the bonds, so we've got a little bit of long bond exposure, short volatility, but not a big position here. Gold, we're long gold too, so that hasn't worked as well.
In other news, U.S. small caps and consumer stocks and housing shares could bear the brunt of the yield spike. 30-year Treasury yields hit 5.12%. That's the highest since October of 2023. But that could greatly impact small caps, and that's the IWM. The Russell 2000's floating debt is around 32%, and IWM is down 10%. From recent highs. Unprofitable, debt-reliant small caps are the most exposed to these rising yields.
Hasn't been. I mean, they're off the highs, but it hasn't been.
They're all off their highs. I mean, it's the weakest of the group, which we've talked about. But I mean, it's hard to say. I mean, you're looking at 10% off of its highs without saying it's up a gazillion percent since last year.
Yeah.
I mean, it's It's a tough
But it does
way-
become
tough way to spin
interesting. It comes interesting. What do you choose? If you're like a super traditional investor, do you choose dividend yields here? Or do you choose treasury rates at 5%?
Chase the Ivy rank, NASDAQ 61 versus 48, 45.
That's not the dividends. I mean,
No.
I don't know at what period of time a dividend investor has been better off than just owning the NASDAQ.
Sure.
So, I mean, like,
I mean, IWM pays a less of a dividend than, say, the spiders,
Sure.
yeah.
just to put in perspective,
Yeah.
by 2-to-1 margin.
Are you doing anything in IWM specifically now, or
Haven't
Not
done
really.
much, to be
or
honest with
Russell?
you. Yeah.
Yeah. I mean, we've held short delta there at times. Don't have any right now, but I mean, it's been a Nasdaq focused rally.
Sure.
Everything, you know, all indices have lifted into this move, but I can't focus on anything other than these chip stocks that are moving 5 or 10% a day. It's just,
Yep.
there's just too much volatility there. But small caps have been good. Biotech stocks.
It's only
have
been good and better lately, right?
Yeah. Yeah.
Yeah.
Yeah, see? Yeah.
Yeah.
Hey, U.S. crude futures fall over 2% as Trump calls off scheduled Iran attack, easing supply fears. Brent crude down 2% from $112 around that 109 level, which is real nice. But Hormuz remains closed, and we are approaching that real critical time frame of like sort of a June cutoff, like kind of we need to, as Nikki says, poop or get off the pot before supply levels become critically low. But already they're saying even if we do flip the Strait of Hormuz open in June, we could still see outsized, gas and oil prices all the way through October into November. So it's not going to be an instant, relief for every consumer at the pump.
No, and I think if anybody's looked at oil futures in the back month would tell you this too, without the headline. I mean, they're elevated going out, 300 days or so. So this is not going to be the 2-week blip that we thought 3 weeks ago.
Oh, we screwed the pooch good.
Yeah, there we go.
It doesn't feel like oil, even when this situation ends, assuming it is ending in the near term, it doesn't seem like oil is going to have that move back to like in the first part of the war, it was kind of priced as if this was really short term. Like this was a month, maybe 2 months, and then we're back to like kind of 70s. Now it looks like
Oil has daily $3 ranges. You can put it that way.
But the curve has come up so much that it seems like we've priced in that the next year is near 100 oil. Like that's like seems to be the market consensus here. So I don't know if I don't know if we get the big move in oil, but it would be nice, I think, for equities if this whole situation ended. Although, I mean, we've rallied to all-time highs on this whole
During
thing.
all this,
So maybe it is a buy the river,
sell the news, or climb the wall of worry. Yeah, I don't know.
Yeah.
I agree.
Wall of worry. The SEC is readying plans for trading crypto versions of stocks. An innovation exemption could land this week. It would be 24/7 trading hours for tokenized stocks. You wouldn't have shareholder rights in the tokens, but the tokens would also trade without the consent of the companies they track, which is, again, controversial. So you could have a tokenized NVIDIA, a tokenized Micron, tokenized some of even the more, pricier stocks. Critics warn of investor protection gaps and market fairness risks. There are lighter regulatory requirements that would allow crypto-native platforms to offer tokenized stocks. What are your thoughts on this new venture?
I mean, I think it's coming. It makes sense to have everything tokenized, whether it be just for 24/7 trading or just for ease of settlement, both cash and like shares, because it gets rid of the T+1, which I think makes complete sense. You can Venmo somebody $50.
Right. Banks haven't been able to do it though. I mean, they still make you wait even when you do a wire. It seems like you can't.
All that. Yeah, but at some point,
I'm just saying. I think it takes a little bit more work But I agree with you. It should happen. It should be done. I don't know why it's not done.
I just don't think. I think this sort of stuff, along with like prediction markets, I think it's kind of peaked. Like I don't see, unless you're like a very small, like you're doing like $20, $50. I don't see anybody allocating serious capital to buying shares in the overnight session with $3 wide bid-ask spreads. Like if you have $50 and you want to,
Right. That was my other question about like the liquidity of the market and like how safe it would be for investors.
It's probably going to be much wider bid-ask spreads. I mean, something like a NVIDIA, which is penny wide during market hours, will probably be $1 wide.
Yeah.
Like, and you're not getting filled in the middle. You're hitting bids and offers. And so I don't see this like for a serious or a larger investor. I don't want to use the word serious, but for somebody that has like a large amount of capital, you're not putting $100,000 to buy NVIDIA an overnight session and paying $1,000 in a bid-ask spread.
Sure.
It just doesn't make sense to do that. If you're doing it with $20 because you're like goofing off at the bar with your friends, I can see that being the case. And I think that's really what prediction markets kind of are at this point.
It'll be interesting because this all just seems to be moving so quickly without maybe all of the possible ramifications being sussed out. But if it helps, certain pockets of the retail investor community, then
this will be better for day-to-day trading. Like this, the exchanges are probably not going to like this. Unless they're
NASDAQ and NYSE already approved it.
Yeah.
So.
Yeah. Well, they need to start moving this direction.
Yeah.
And having everything settle, instantly, which it should be. And then that gets rid of all the cash account rules, which are all silly too. The PDT rules only apply to margin accounts. So like the cash accounts have the settled day trading. You can't trade
certain spreads you can't do, I don't think, in a cash account.
That stuff is more regulatory. But from the FINRA standpoint of like the settled funds where you can't day trade more than whatever was settled in the prior session. So like, even though you have the cash, it's not settled because of T+1. So like all those things should go away here like now.
Yep.
Bitcoin Depot, North America's largest crypto ATM operator, has filed for Chapter 11 bankruptcy and is shutting down BTCD.
Damn.
They were publicly traded. They're shutting down 9,276 ATM kiosks. I've seen them. They have them all over here in Chicago. I've never obviously used one.
Yeah.
They Q1 revenue year over year was down 49%. And the company reported $389 million of ATM fraud losses last year. Yeah. They said the regulatory environment has shifted significantly and that their business model is unsustainable. So hackers stole $3.7 million from wallets in April, compounding the collapse.
Oof. Well, it doesn't happen if you have your crypto here. You're all good.
Yeah.
That's all I would say.
36,000 U.S. crypto ATMs remain, but the smaller operators now face even steeper odds.
Yeah. There's not a positive spin on anything crypto related, or there hasn't been for quite some time. I know we have some of the Clarity Act stuff that, may or may not go through, but crypto seems to be in as
What's it doing this morning?
Possible.
Under 77,000, 76.7,
like
which
$6,000
is
off the highs.
about as
From
low
middle
as
of
it's
last
been in the
week.
last days. Yeah.
Yeah, it got into like 82-ish.
But you did a trade in IBIT for your option trades today.
I did IBIT yesterday. I did a strangle in there. Ivy ranked relatively low at 20. But I said, you know what? I got to put small amount of money. It takes a little bit of capital to put a trade on. I didn't know where else to go. I didn't know what else to do.
Sure.
That's what I did.
How's that? What's it doing to you this morning?
It's unchanged. I just put it on yesterday.
All right,
IBIT is down 5 cents or so.
In just a wild display of a lack of legal knowledge. Elon Musk was handed a swift defeat in his jury trial versus OpenAI. The jury deliberated less than 2 hours, and it was really only that long because they wanted lunch. But the $134 billion of Musk's damages claim was dismissed. And it was dismissed because he was outside of the statute of limitations. Any first-year law student or any fan of Reese Witherspoon in Legally Blonde could have told you that there's a statute of limitations. You try to pursue a claim outside of that, it's pretty black and white for what the law says. That's why there's statutes of limitations. So he had 3 years if he was so, aggrieved by OpenAI that he could have then filed, but he waited past that, and he waited too long. And OpenAI, this is what they're thinking. Maybe the ticker will be OAIV. Maybe, not sure, but it's not publicly traded yet. So just in case you were wondering, Banana, what are these letters? So
Yeah.
But he's saying that he's going to appeal. So some lawyer's like, yeah, I'll take your money.
Yeah. I don't know much about this situation.
Nor do I.
But it's just dumb, less than 2 hour deliberation outside the statute of limitations.
Yeah.
Like any lawyer worth their salt would have looked at this case and have been like, you don't have a
Violate.
chance,
Yeah.
right? Sorry. But
How
they
do you
took his
file
money.
late? That would be my question.
Yeah, well, they
A
took his
team of
money.
Attorneys.
Yeah.
Well, it took him a while to realize how upset he was at OpenAI.
Yes, I've been there.
Yeah, I guess. But both Musk with SpaceX and Altman OpenAI are eyeing massive 2026 IPOs. So do with that what you will. Hey, ServiceNow had its best stock day. The ServiceNow stock had its best day in a year. It was up 8.9% yesterday. Bank of America initiated a new price target of $130. ServiceNow says subscription revenue target is now $30 billion. Nikki,
I missed this one. I wish the
ServiceNow?
markets were better in there. I was in the 80s,
Yeah.
mid 80s,
Mm-hmm.
talking about how I'd like to get a little bit long on this. I looked at the option market.
well, it'd been hitting the SaaSpocalypse.
This is true.
Yes, it did get hit.
yeah.
It's still hit. It's up
It's up another
$5 or
$5
$6 this morning, but
108, 109.
it's been cut in half.
yes.
I mean, this was a $200 stock in the middle of June or July of last year. So, I don't know how to feel about this. I think you're getting a lot of help from the weakness that you're seeing in the semiconductors. I think that rotation is certainly playing out right now. Microsoft is up a couple. If you look at IGV, it's up a couple. The cybersecurity stocks have gone bananas to the upside. They are ones that I've been.
I'll get to it. I got a story. I got your cyber
All right.
story.
Well,
but what's your ServiceNow play? If there's do you see
I have a
upside?
little bit long delta, but I was just getting at that. It seems like I don't know if I'm totally buying this entire move. The
I mean, it's cheap relative. Well, it is sort of, kind of.
Yeah, I guess.
You can't be convinced. Well, how about this? Seagate leads the memory chip sell-off yesterday after the CEO warned new factories would take too long to build. STX down 6% yesterday. Year to date, though, the stock was up 194%. Not too shabby. But the CEO said that factory capacity is just going to take too long. What, if anything, are you doing?
Back to May 1st numbers. I mean, it's given back the last 19 days or so, but it is a significant move lower from, I don't know, let's call it 820 down to 720. That's $720.
CME launching semiconductor futures.
They are.
That's what this says.
Okay.
To hedge against rising chip prices.
Oh. I thought they had. Is that the energy one that they're doing?
That I don't know. But we can ask Pete.
Yeah.
But we'll get some more clarity. But
Yeah, I feel like the board is probably going to have an issue with this speak from the CEO. I mean, it was a 15% move. Tough day.
Yeah.
6%.
also Micron lower yesterday
Yes,
as well.
all of them.
All of these stocks
all of
were lower, and Micron is down again about another $15 or so.
Gotta buy it on sale.
Yeah.
You can buy it on sale. Again, back to around May 1st-ish numbers.
But the commentary is so skewed because there's that
It depends on what the stock is doing today. I mean, that's how they.
yes, but there's all this talk of like no supply, but it also is going to take 5 years to build factories. So it's like, you need the factories to make more supply, but the factories take too long to build. So you're still probably stuck in,
Where you are today.
Yeah.
And now, Nikki, getting to your cyber sector stocks, Palo Alto Networks had a wonderful day. It hit its highest, the stock ticked up, and the market cap of the company crossed that $200 billion mark, which is pretty impressive for PA&W. The AI-driven cyber attacks have become the new norm, PA&W warns, and that sent shares of the company higher yesterday. Again, market cap hit new levels.
I mean, this was a stock that was kind of just languishing. I'll go back to May 1st, sitting around $180. It's going to be $250 this morning. Looks like it's up about $2 or so. It's had quite a run.
It's up 17% since the war in Iran started.
And so is my son on that scalpy of the NASDAQ.
I took half. I left the runner.
Oh, you left a runner. Oh, you learned that. Yeah, good for you.
I learned that? You know what?
I said this to him in a text message. I left a runner.
Stop triggering him.
At some point, you're gonna say, "Thank you, son."
Thank you, son. That was a good runner. I told him I left a runner.
Yeah, these cyber stocks, they're stratospheric now. I mean, they have parabolic moves. Nice cup and handle for the artist over there.
I'm a little teapot.
Yeah. Well, they have the cup. Maybe next you get a little dippy do to make the little handle, and then you just go straight.
Oh, is that what it is?
Yeah, yeah.
All right. Don't drop the cup.
Yeah.
V bottom.
V bottom.
There you go. Do you have a position in PA&W specifically?
I do not currently.
What's the IV in
IV
there?
rank of 101 is huge.
When are their earnings?
Earnings are June 2nd.
Oh, so you got a lot of time, kind of.
You have a lot of time.
sorta.
Markets are a little wide in there.
Okay, well, just be careful.
But still, yeah. Define
too
risk
shabby.
trade might be the way to go.
Hey, well, the options market is flashing an ominous sign ahead of NVIDIA's earnings, which are tomorrow. An 8% move is expected. Uh-oh.
That's the rest of it. NASDAQ.
Ooh, that's your second half, which is actually 30 handles, higher. You made 80 and 50 handles. Good job out of you.
Thank you.
NVIDIA's earnings are going to be the biggest near-term catalyst for the entire market. There's an estimated $1 trillion Blackwell-Rubin order backlog, and at 24x forward PE, NVIDIA is actually cheaper than Broadcom, which is 31 PE times PE, and AMD, which is 54. So what do we do? What do you do?
Well, NVIDIA expected move around $13, which is really only about 5%. Not the biggest. IV rank of 65 is good, but not the biggest expected move in NVIDIA. About average for what's been going on here. And it has earnings coming May 20th, which is tomorrow after the close.
I think it's actually more interesting here that it's not at all-time highs. Mm-hmm. But I'm playing for a nothing move. Inside move in either direction is perfect. And I think the fact that it's sold off a little bit is better for.
But sometimes it runs up before earnings and then it doesn't do anything.
It doesn't do anything, or it's gone down. It's had big moves to the downside, even though the numbers are just mind blowing. They're incredible. But it seems like, you get kind of that point where it's kind of a buy the rumor, sell the news event. And here, off the highs a little bit, I feel a little bit more comfortable.
It's down about $2 this morning, sitting around 220 and a half.
What about anything protective or defensive in that competitor sector, in a Broadcom, in a AMD? Because where NVIDIA goes, the rest of those
So goes the market?
Yeah.
Yeah. I've got short vol across the board in all of them. I just naturally, because they've all gone up like a bazillion %. I have short delta as well. So I would like to see vol contract, maybe a little bit of a downside move. That would be perfect for the space for my positions here.
Okay.
Oh, there you go.
Google is announcing a new deal with Blackstone to create a new AI cloud company with $25 billion in total investments. Blackstone's going to contribute $5 billion in equity. The total investment with leverage will be $25 billion. They're going to use Google's TPU chips, and the venture is aiming to compete with CoreWeave, which again has a $100 billion revenue backlog. Are you seeing a theme? The theme is backlogs.
Yeah.
Also, Google I/O, their developer conference, I think is going to start soon this week. So sometimes that is a little binary event for Google.
Google's sitting at 400.
Didn't Apple have something this week too?
Their WWDC is in June. It'll be like the first week of June. So it's close.
Yeah.
Sitting at the high end of its range. Google 400. It's been a leader, no doubt about it.
Okay.
What used to languish does not.
What are you doing in Google?
We did a call ratio spread yesterday. It's basically flat. I mean, it's has short delta, but it's more neutral.
That's omnidirectional,
Yeah.
like you young kids like to say.
Yeah, 410, 425. So my break even is like 440-ish.
Google I/O starts today at 10 a.m. Pacific time with a keynote presentation. It will be live streamed on Google's YouTube channel. So if you want to lock in and watch, I'm trying to be like non-biased, even though I am an Apple fangirl. But like if you're on the Google could be coming out with some cool stuff, so you can watch it today. 10 a.m. Pacific time is the time there. Amazon, I hate everything about this. Amazon's Alexa Plus can now generate full podcast episodes on any topic using AI co-hosts. It's free.
There goes our job.
It's free for Prime
Now this AI
members.
stuff has got to stop.
It's free for Prime members, and it only takes a minute or two to generate a full episode. Two AI co-hosts will carry on complete conversations with each other. Users choose the topic, length, and tone, and Alexa does all the research and scripting.
Once
Well, we had a nice run. Yep.
5 minutes.
yeah, seriously,
See you later.
that's the end of us. But once they need to like generate revenue from these and they start putting in the ads, it'll turn into like a Truman Show type thing where they'll like pull up, they'll be like talking about options and then they'll be like, this is your newest like energy drink. Try Celsius today.
Well, it's weird for me though because Apple owns Audible and they own Wondery, they have some of the bigger podcasts. Like they have the Kelsey Brothers podcast, like New Heights. They have Crime Junkie. Oh my God, I love Crime Junkie. Like they have all these really, tentpole titles in the podcast space. I don't know why you would want to cannibalize that.
I wish I knew.
Yeah.
If I knew why, I'd probably be Andy Jassy.
Andy Jassy. Andy Jassy. What are you doing in Amazon as a stock?
Long delta.
Okay.
Actually, down $1, maybe $1.50 or so at 263.
Yeah, I think Amazon is.
It's the winner.
Well, when you look at Nvidia or Google at approaching $6 trillion, and Amazon's kind of nowhere.
Got some catch up to do.
Yeah, maybe there's an extra trillion there. I mean, right? Amazon's at half the size of Google. Like
the numbers are so.
I don't know if that's maybe there's something there. I don't know. Or do you play for Google to go up?
No,
another
I agree. I agree with
like,
you. Yeah, you got to make some sort of.
That's the same amount of value. Is like, do you play for 20% up in Google or 100% up in Amazon?
Shifting gears real fast to the healthcare sector, United Health falls as Berkshire Hathaway exits its entire stake after a 45% 9-month rebound. Hey, you got to get in where you can fit in. UNH dropped around 5.3% in the pre-market yesterday. It did rally 45% before Berkshire exited. Berkshire had around 5 million shares. What are you doing in UNH?
Traded down to around 384 or so yesterday, closed at 391. Looks like it's 390 and a half, down about 50 cents or a buck. IB rank of 18.
I got a little long delta there the other day into this move.
In UNH?
Yeah.
Okay.
Yeah.
Markets in June are about 30 cents wide.
I don't hate the healthcare stocks here, like as an alternative to just all how tech heavy everything is.
Yeah. I mean, this was an $600, $700, $800 stock a year ago. and has come off, is half that. So.
Yeah.
Yeah.
No,
an
definitely
interesting
been on the downturn. Although it's had
Berkshire added Delta Airlines and tripled their Alphabet stake.
And added Macy's too.
Oh, yay!
Yeah.
I love Macy's.
That is not the basket. I mean, Google, yeah, but it's at highs. Like you could have
Yeah, but they tripled their stake.
like go to Amazon.
Sure.
That's what like. There's got to be more room to run on that. Yeah.
and
Wouldn't be my pick.
and they own Dairy Queen, Berkshire.
Oh, they do?
I think so. Yeah, I think Warren and Berkshire own Dairy Queen. I believe. I haven't looked.
No, isn't it A&W? Because isn't A&W like a Nebraska? I don't know.
DQ.
Something like that. Yeah.
Hey,
Dairy Queen
Lulu.
is owned by Berkshire Hathaway.
Oh, wow.
Yeah,
Yeah, you like a
There you go.
dilly bar.
1998.
I love a blizzard.
Yeah.
Lululemon's proxy battle with founder Chip Wilson is going fully public as settlement talks collapse. Wilson, the CEO of Wilson, Lulu lost its cool, and he says that ex-Nike CEO O'Neill is the wrong choice. The board has fired back, saying that Wilson has outdated perspectives and troubling conflicts of interest. This guy is a PR nightmare. If you've ever read anything about Chip Wilson, it's like I can't say any of like the quotes that he's actually like said about groups of people. I will get canceled.
I actually said this when you mentioned that the Nike top guy was going to Lulu.
Yeah.
Like they're getting a guy who hasn't been able to turn around Nike or do anything well at Nike.
And that's still valid.
Yeah,
But-
Nike on its butt,
Yeah.
Lulu on its butt, no pun intended. But Lulu 120 and change. Ivy rank of 63 is pretty good. Earnings are June 4th, or you might have did something there too. June markets are wide.
Okay. Yeah, so the Lulu stock is down 62% over the past 12 months. So,
Do with that what you may.
yeah. Yikes. Yikes. And finally today, this is great and it warms my heart. A Pizza Hut franchisee named Tim Sparks has bought 80 locations and he's converting them into retro classic restaurants
Yes.
of our childhood with the salad bar, with the booths, with the red cups.
And the hat, the Pizza Hut top.
Yeah. So
Bring
it's
those
going to have
back.
the checkered tablecloths, the Tiffany lamps, the Pac-Man machines,
Yeah.
the Book It reading programs. Your girl, I ran the table on that program. But Sparks started as a Pizza Hut dishwasher, and the revival is personal for him. People are driving hours to go to the newly vintage
Nice.
locations. So Pizza Hut owned by Yum Brands. I love everything about this.
Yeah. When I was driving back from Wisconsin, I saw a for sale old Pizza Hut, like with
Oh,
the
yeah.
red roof.
Yeah.
And all those need to come back. The old Taco
He's
Bell.
one franchisee, so he bought 80
You
of
can't
them.
do anything new. I mean, get your own thing. Get off of our block, okay? The Pizza Hut
What
pizza.
are you talking
What
about?
are you talking? What are you going on about?
Pizza Hut pizzas used to come in a metal tin also when they would.
Yeah, bring that back. You don't want that back?
That was the difference. Oh, yeah.
You want us to just destroy the ingredients, make them as cheap as possible, as engineered as possible, and put them in a microwave? Is that what you want?
Pizza Hut, the company, is still, though, planning to close around 250 stores. So, womp womp. Hey, you talked about earlier about how you just feel so old, and I feel the same way sometimes. You're just like, man, these kids in the office, I feel old sometimes. But Nikki, you and I, we're not too old, because
No.
look at this lady. Granny set a new Guinness World Record for crowd surfing.
Nice.
This is real. Watch this.
In this situation.
Oh, you've got to be kidding me.
I think she's 93.
Oh, God.
She's loving it.
That was awesome. Yeah.
Yeah, I think she's 92 years old. So
That's amazing.
get it, Granny.
You're probably probably wondering how I ended
Congrats.
Oh, no, I think she's 99. Sorry,
Wow.
just checked the comments. So anyway, thank you, Josh. That's great.
I don't know what to say. I don't want to do that. Okay. If
You don't. There's a weight limit.
Okay. All right. Good. Well, if it ever comes down to that, I don't want to do it.
Shots fired.
If I'm doing it out there, they did something to me. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with a look back at yesterday and a lot more. Even the S&P down 22. Back in 90 seconds.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with a little bit of a look back on yesterday. Let's go.
Sure.
How was yesterday for you before we recap it?
You want to what?
How was yesterday for you in the market before we recap?
It was good. I took a couple positions off. I managed some risk. It was not a fulfilling, it was like...
You get all you can eat.
It was like if you get a box of Girl Scout cookies and you get like a half a cookie. It was nice, but I want to eat that whole sleeve of Thin Mints.
I understand. Do you like your Thin Mints frozen? Or?
Oh, of course. I have a couple boxes in the freezer right now. That's why I'm thinking about those Thin Mints. I was eating some last night.
And
that was what it felt like.
Thank you for not bringing in the elk meat.
Oh, I'm bringing that for you tomorrow.
I don't want it.
Why? It's good meat.
I'm sure, but I don't want it.
Yeah.
Thank you.
The bear, I could understand. You don't want the bear. It's fine. Making a bear pot roast. I'm going to eat one bite and that's it. Just to say I did it. All right, let's do it. Look back at yesterday. A little bit of weakness. I mean, these numbers, it's hilarious to look at because it looked like death in the early part of the morning and in the overnight session, and then you just bottom up. It was a stair step higher from basically the open, or it was a stair step higher from like the middle of the day relative to where we opened. The Dow has been the strongest of the group here. Huge moves in Cat, Eli Lilly. Those have kind of been the bigger. And
moves. When you see those, when you hear about those stocks, that's not the place where we go for action.
No.
Right? Yeah.
No. No. When we look at the Mag 7, so you had Microsoft a little bit strong. You got kind of a rotation into those software names that have gotten killed. Microsoft has been relatively strong. I mean, like, it's not having these huge moves to the downside. It seems 400 seems to be a good kind of level.
It's up $4 this morning, 427.
Which is good. Amazon and Google have been relatively strong as well. To the downside, you had Tesla, Nvidia pulling back a little bit, Apple and Meta. You know, it's a very nothing. When you look at this list, it's basically, a scratch, small down move.
Agreed. And Nvidia down 1%. Tesla was down earlier. Now, Tesla was down earlier. Let's take a look at that right now. Tesla, it is still down about $4. Yeah. Off of 445 or so, back down to around 405, 406, well off its lows of 340. Tesla's got Ivy rank of 20, but it's been a mover.
Yeah.
I mean, just to give you an idea, over the next 3 days or so, NVIDIA has a $13 expected move. Tesla has a $16 expected move. No earnings.
No.
Put it in perspective. It is twice the size, but put in perspective on price.
Go. When we look at the sectors, so energy was really strong yesterday. You had oil getting to 105, I think was kind of the high print there.
I thought 104 and change, 104.18.
Okay, there you go.
Yep.
So just under 105 there. We're sitting at 103.59. There's been big moves in there, but volatility in oil has not expanded. It's been sitting in the 70 to 75 handle. If you look at OVX, CGI, give you the oil volatility. It's been sitting in that 70 to 75 handle. So it's not like vol is exploding there. There's not a ton of fear exploding there. It's an interesting market. And it's been great trading in USO. XOM has been a mover. Oil futures, there's been a lot of trade there. I mean, we've been doing butterflies and ratio spreads and buying in the risk and turning them into butterflies and kind of trading into these big moves across the board. Financials had a little bit of a bid there. Healthcare, despite UNH's move, had a little bit of a bid there. On the downside, you have biotech, metals and mining stocks. The metals in general have looked horrific. They did have a bid into the close yesterday. Gold and silver both rallied a little bit into the close. Semiconductors as well, kind of taking a breather here. Big move yesterday in the semis. You look at the dollar moves and they're huge, but percentage-wise, relatively light. Like the numbers are. You look at AMAT down like $30, and it seems like it's a huge move, but it was like 3 or 4%. Like nothing.
Like nothing.
Yeah,
that's right. Right.
Biggest movers to the upside here. So you got ServiceNow in there, some of the service stocks in the tech space here. FICO is in there. It was not. I actually saw that yesterday was the largest number of up stocks, like the best breadth in the market in May. It was like 70% of the stocks up because it was all the stuff.
I didn't know that.
Because it was all the stuff that it hasn't moved, right? Like it's been all the software stocks, the like smaller tech names. The ones to the downside were semiconductors and like Mag 7s. Like that was kind of the market. It was kind of that back to that like equal weighted move. And this list kind of shows you that, right? Like Dominion Energy. I know there was like a takeover news on Dominion and NextEra, NEE. So that was kind of the move there. But
is that ServiceNow again? You got to stick it in my face all the time. I wish the markets were better in there.
Yeah. On the downside here, so you had Regeneron at the top of the list, but the rest of it is really a lot of the Momo stuff. You got Light, Lumentum in there. VRT had a huge move to the downside, GLW, STX, and some of the memory names. You had your Quanta in there, Micron, Sienna, SanDisk.
These are the high flyers. I meant to mention them yesterday. They all took a breather. Now, we talked a little bit about it on the show. I don't think it's come to fruition today yet, but how it seems like it's a one-day kind of move rotation. It just seems like,
I figured volatility would be higher if there was more.
If there was more downside to these. Yeah, I agree with you.
Because these things are all at
Stratosphere. Yep.
I mean, SMH in general. The biggest part of the market is in banana land on the upside. And if this was like kind of a blow off, I would expect volatility to be a little bit higher. People kind of rush in to get some protection there, and there's none of that. There is no volatility.
No volatility. SMH down around $6 or $7. I saw it down about $15, just to give you a perspective, earlier this morning.
Nobody cares. Little dippy do.
Yep.
Until Wednesday. Wednesday's a big day.
Then everybody care. It's going to be a big nothing burger, in my opinion, but we'll see.
Think so? I think it's the only spot where we could get some market volatility, because you got vol futures expire, the VIX futures expire. You've got a big event after the close. Like, maybe that's your source of volatility. If you don't get the volatility there,
summertime,
and we could be at Mr. Vecchio and his 8,000 could be right around
by my birthday.
Yeah, by your birthday,
July 12th.
That would be good. Should I get you an S&P 500 8,000 hat?
You should.
When you look at
I don't look good in hats. Don't give me a hat.
You don't. We have the long face.
Why the long face?
Why so serious? S&P 500 returns yesterday.
It doesn't look like a down day, but it was.
Yeah, it was. I mean, small down day.
Yes.
Yeah, it was mostly tech. Everything else kind of held everything up. Here's your strong breath.
Yes.
You can see it here in the heat map.
Good point.
When you look across the board, there's a lot of mostly everything else was kind of in the green or flat.
We rallied that 20-ish handles, which we're down right now. 20-ish handles. We rallied about 100 and something on the NASDAQ. We're down about 100 and something on the NASDAQ right now. Volatility completely unchanged. It was weak yesterday. We'll take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send and Option Jive and the opening bell, the moment you've been waiting for. We'll be back in 90 seconds with Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. Well, with a little bit of a look back at yesterday, we did that. Now we got Confirm and Send, May 19th. Go. Even the S&P down 26, NASDAQ down 193, Russell down 16, and the Dow down 114. They're all down around the same.
No vol.
No vol. That's the big question. That was the big email that I got yesterday as volatility basically unchanged, down yesterday on the low. Even VVIX, which is volatility on volatility, is dead, 91 and change, as you can see here, the low end of the range. Usually when volatility is low like this, the path of least resistance has been to the upside. I don't know how it goes today. On a percentage basis, the biggest mover, maybe silver, down almost 2%. Oil's down $1, but still about $1 off of its highs. Confirm and Send, Tuesday, May 19th. Let's do it. If I have the funds to do all my trades as undefined risk, why would I ever want to use defined risk? Aren't the probabilities of being profitable better with undefined risk?
Yeah, I mean, probabilities are what they are, but you open yourself up to tail risk. And like, it depends on it. I don't know what we're talking about here, $5,000, $10,000, $100,000, $1 million, $10 million, who knows what this number is. But I think you have to be careful with just looking at probabilities and using that as like your only gauge of trading and risk. Like, you have to think about tail risk. You have to think about, the size of those positions, how much bigger they can get, especially if you're trading on both sides of the market. If you're on the short call side, those positions can get very, very big. And so I don't think I wouldn't want to bucket myself into one thing. I think that's another problem here is like, you don't want to have...
Strategy diversification is just as important as any other kind of diversification. Yes. I agree with you, and I think you hit the nail on the head when you first talked about how you open yourself up to tail risk. Now, they could be doing just naked puts. They could be doing puts, for 1x2s. I mean, there's many things you could do here because it doesn't have to be upside risk if that's the risk that you're really worried about. But you are opening yourself up to a little bit too much volatility would be my answer.
Yes.
But you're right. In a smaller account, maybe you do that because you need to maximize the amount of buying power you do. You got to play it from, I don't know what everybody has, that kind of thing. But strategy diversification, you want to have a portfolio that's around 65% probability of success on entry. You work your way from there. Next one, please. You're reloading?
Just one.
Oh, gotcha.
Near the lows, right where I got in.
Good job.
I know you talk about trading in uncorrelated underlyings, but it seems to me IV tends to become concentrated in sectors. So how do you branch out into uncorrelated underlyings when IVR is so concentrated?
I think this is going to come back to the same answer we had just a moment ago with strategy diversification. I mean, that's how you look at it. Now, I know IV and IVR kind of cluster, meaning, when all the Mag 7s have high implied volatility, there's usually one that stands out that has low implied volatility. And when most of them have low, usually one or two that have high implied volatility. So you find the IVR that you need. I don't think it's that hard.
Yeah.
You got to push that through for me.
Oh, I'm sorry. I mean, volatility does tend to cluster, especially right now. We're looking at like semis and software stocks. There's a lot of volatility in those names. I think to your point, it's not like there's nothing else to trade. We've traded Home Depot earnings. I don't where is that? What's that stock? It's basically unchanged. So that'll be fine. It'll be interesting to see where volatility stays there. You got Nvidia coming up. I mean, there's
a market somewhere for you.
There's something always. There's something always. We're short premium in bonds. Bonds have been moving around, so there's something always.
Yep.
Next one here. Are options a zero-sum game?
This has been the age-old question. I mean, if the world were to end tomorrow and you were to go back and look at all of the trades, I guess you can make it a zero-sum game. But intraday and as we're trading, and since the markets are basically 24/7, it is not a zero-sum game. Nick doesn't have to lose money for me to make money. We're not on both sides of the opposite sides of each trade. You can do things against your trade. I'm long stock and I sell a call.
It can't be zero sum because you don't know the intention.
That's right. You buy the call goes higher. I make money on the stock. You make money on the option that I sold. I mean, that was my example I was going to give.
And it doesn't.
Somebody else owned the stock from a grant that they were given lower, and they made money on the stock. So it's never a zero sum game.
Yeah.
Yep. So no, not a zero sum game. There have been a number of IPOs recently. How long do you wait before trading a new issue? Does it take time for the new issue to become tradable?
Oh, those options for CBRS. Cerberus.
Yeah.
They just came out.
I think they're going to be wide, right?
$2 or $3 wide.
Yeah.
Something like SpaceX, I'm sure those options are going to be fully tradable within like 24 hours.
Mm-hmm.
This one, I'm not so sure. So I'm not, targeting a specific time frame. As soon as they start to get liquid, I'm ready to go.
It used to take a week for the options to come out.
Not anymore because these are so big.
Yeah.
Companies, these are ready to rock.
Yep, that's what I was going to say. Sometimes, as you mentioned, you would think with SpaceX, maybe it'll be the very next day, 24, 48 hours later. It does. How do you know, like, when it's time to trade these? It's when the markets are tight enough, right?
Yeah.
You look at those markets just a moment ago, they're a couple of dollars wide. They're not tight enough. They're not ready yet.
Yep.
They're not cooked. They're not fully formed. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's down near their lows, about 6 handles off of their lows, down 35. NASDAQ down 240. Russell down 19. And the Dow down 150. Volatility up 2 cents. We'll be back in 90 seconds. Tasty Live.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son. Even the S&Ps are not, and the bonds are not. Matter of fact, the bonds just traded under 110, 109.31. That's about as low as they've been in recent history, son. What do you think of
that? 110. At the lows. What do you think?
Time to sell some putties.
I have some putties. You add?
No, if you have, you got to sit.
You add another one? The 106?
Did I stutter? No, you have to sit. Your time has passed, son. You could have been somebody.
I have it, but now I got, missing out. Just sell some more.
Top 3 challenges for small account and trading. Tasty Bites option jive here.
Let's do it.
Go.
So, a couple challenges that you face as a small account. So, due to the limited capital that you have, Tasty Bite account holders face 3 main challenges. Talk about asset selection, so finding appropriate underlyings. That's from a size perspective, from a strategy perspective. That is always going to be a challenge in smaller size accounts. Position scaling, so scaling up in positions is going to be tough. A lot of people will be stuck in 1 contract or 2 contracts. Maybe you get to 3 or 4 if you're in a smaller underlying, but it gets to be kind of a problem for you as you have smaller capital available. And of course, risk management. So avoiding large losses through position management and just being able to manage your risk in general is going to be a lot harder in a smaller size accounts. Defined risk trades, an iron condor, for example, much harder trade to manage than a strangle. There's just not as much flexibility. You can't withstand the moves as much. They don't move as fast. You can't cycle through that capital as much. So those are always things that you're going to be challenged with.
Yeah, and it is challenging, right? I mean, having a smaller account to do these things sounds quick and easy on slide 1, but it's difficult in practical application.
Yeah. So the SPY and the Qs, they've become considerably larger, and a lot of stocks in general have become a lot larger. While these indices offer relatively low volatility, their high buying power requirements make them a challenge for small account traders. So, people look at a $700 stock like SPY or Qs, and it's a daunting task to put on a position. You have to do an iron condor because you don't have the capital if you're in a smaller size account. And a lot of these buying powers, even in a larger size account, they're big numbers.
Yeah.
And so, you've got to kind of keep that in mind. And so, maybe looking at some of the smaller ETFs, which is the next thing that we're looking at here, might be your, a spot to go. So when you look at some of these smaller ETFs, one of the ways that you can reduce buying power is by using some of these alternatives, and even just going into the sector focus ETFs. These are some of the stocks that we use for my look back segment in the morning too. Selling premium in these ETFs can achieve a similar success rate to SPY with higher premium to stock price ratios. A little bit less liquidity is really the thing that you're going to run into here. Something like an XLK is generally pretty liquid. That's a tech sector ETF. When you look at the bid-ask spreads in June on some of these, they're not that great. Now that I'm looking at them, the market isn't open, but they tend to tighten up. When you look at like open interest on some of these, not the greatest, but these things have been moving around, and you got new strikes available here. But some of these ETFs might be an alternative for you. They offer similar exposure, a lot less capital to put up these, to put on these positions.
Correct. It's all about capital here, right? And that's what you're talking about. You're trying to get exposure without using as much capital as possible because you're in a smaller account.
Scaling is a little different situation. So scaling up is slightly trickier for small accounts because the increased buying power of each position each added position could be disproportionately large for small accounts. So There are two common scaling approaches: increasing the number of contracts, which is doubling, how much risk you have on the table with an iron condor or something like that, or increasing the position's total risk. So widening out the spreads, going naked. Those are the two kind of situations that you run into. And we're going to talk about kind of why avoiding increasing contracts is really the key here. And so when we look at the next couple slides, you're going to kind of see a look at adding contracts versus widening spreads, or adding more risk, quote unquote, by like going naked versus defined risk. So while adding contracts seems like the natural choice, like if you say, what do I do going from $10,000 to $100,000? Most people think you just add contracts. You just do the same thing. Just
that would be the simplest way, right? I mean, you could do it.
You could do that, but it's not, from a risk perspective, the optimal way to go. And it also helps you understand a little bit, not how much easier it is to trade with a larger account, but how much more flexibility you have with a larger account versus a smaller account where you're kind of pigeonholed into one single thing. That gets better when PDT goes away because it'll allow you to not have to worry about that aspect.
Yep.
But that was just another thing that was another challenge for smaller size accounts. So
point to bring up.
It's natural to think that you just kind of size up the accounts. If I'm doing 10 contracts at 100,000, I should do 100 contracts at $1 million. That's not. You don't have to go that route. So
it's probably not prudent to go that route either.
No.
Right.
Well, we're going to go show you why exactly here. So using wider iron condors provides a better probability of profit and lower tail risk compared to simply doubling the contracts. A lot of people don't look at or don't consider the actual risk, the tail risk, and where that risk is on the distribution. If you have a $5 wide spread, your risk is here. If you have a $20 wide spread, your risk is a lot further out on the curve. And so you will collect a lesser premium on these trades in terms of like total premium when you add up all the values here. But you're going to where your risk is a lot further out of the money and is a lot lower probability. So your full max loss that everybody is so worried about, it's going to be a lot less likely and a lot lesser, as you can see here when you look at the two contracts of the $5 wide versus the $10 wide one time, is going to be a lot lesser. And that is really the key here. The nominal difference in your premium that you're collecting, which might be 10 or 20 cents, is going to be a multiples less than the amount of tail risk that you have, a max risk.
Coupled with managing this early and a lot of mechanics that we
faster moving, those are things that you can't.
You never get the full loss. I mean, not never. I mean, no, really never get the full loss until expiration. I mean, there's always something left in the trade.
You can't quantify the faster moving position here.
That's right.
In this trade.
That's right.
And so this is also applicable to naked positions versus defined risk positions. So for larger accounts and for larger scaling, strategies like naked strangles can provide similar premium with a lot less risk than a spread trade. So, and you're going to be improving win rates and the speed of the trade and the flexibility of the trade too. So here we're looking at a 7-contract $5 wide iron condor at the 25 delta, or a 1 standard deviation strangle one time. Mm-hmm. And so you'll see here, you use about the same amount of buying power from a risk, I use that as your risk for a strangle. Theoretically, you have unlimited risk on the strangle. But from a perspective of like, what is a realistic risk, we always use buying power. When you look at the premium here, you're going to have more premium on the iron condor because you're doing this closer at the money a lot more times. But your pop and your relative loss is going to be a lot greater on the iron condor. You're going to have a lesser pop and more losers at a bigger magnitude than your 1-contract SPY strangle. Can you move that strangle in a little bit? Sure,
why not?
Yeah, and you'll probably...
A lot of times I will, trying to collect more and then managing it earlier, hopefully, if it works for me, right? That's what I'm looking to do.
But this is, you can't, when you look at this in a binary fashion on the trade page, you look at this and you say, oh, well, they have the same amount of capital outlay, the same amount of risk, so to speak. but I have a lot more reward on this iron condor. I would rather do the iron condor because I can make more money. Well, you're also going to lose a lot more money, and you're going to have a more frequent probability of losing that money.
Correct.
So the third thing that we're looking at here is actively managing positions, and that consistently outperforms holding them to expiration. Our analysis strongly favors exiting when profits reach a certain percentage. We usually target that 50%. And here you'll look at like managing at 21 days, 50%, and then at expiration. You can see across the board, at expiration is going to be the worst thing you can do on a SPY strangle, just because you're holding a lot of risk for a lot less reward than what you start with.
Perfect.
So the main benefits of actively managing positions, so you, increasing number of occurrences, you're going to reduce your gamma risk exposure, higher success rates with strangles versus tighter iron condors that are closer at the money, lower P&L volatility. It's counterintuitive, but going to that one contract SPY strangle is going to have a lower P&L volatility than the 7 contract $5 wide iron condor, because your P&L is a lot more binary from in that iron condor. It's going to be all winners or or a full loss, a full win or a full loss. Whereas that strangle, you have a lot more of a variable there, and so your distribution of P&L is a lot wider with that iron condor.
Good.
Couple takeaways here. So traders can use some of these sector ETFs. You can get into the country ETFs. There's a flavor for everyone in these ETFs, but I think the big thing here with scaling and with sizing up positions is you don't necessarily just multiply everything by the added capital that you have. Think about this from a risk perspective. Think about this from a probability perspective, from a risk management perspective, flexibility, how much you can manage these trades, roll these trades, and not everything is binary. You have to look at everything like with flexibility that it has.
Flexibility, exactly. You're exactly right. Good job out of you. We got about 4 minutes before the market opens. I'll come back and talk about this market. It's a little bit of a different market than we had about an hour ago. Silver
Bonds
selling
down at
off, gold
109.
selling off, bonds at 109.30.
Now do you sell the puts?
Now you can sell the put. Even the S&Ps are down 44. Nasdaq's down 270, just about a 1% move. Volatility up 12 cents, a minor. We'll be back in 90 seconds. Opening bell. Talk more about that. It's Tasty Live. I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky Nikki, we are back, son. You know what that means? The opening bell in just about a minute. It's a little bit of a different market than I was expecting to wake up to. Even the S&P is down 41, NASDAQ down 260, just about a 1% move on the NASDAQ. Russell down 23 in conjunction with the NASDAQ. Dow down just like even the S&P is about half percentage point, which is 200. Volatility up 13 cents, not moving, now near the low end of its range. Bonds crashing, down 109.27. Low, they just made it right now, down 17 ticks. Bitcoin hasn't moved 76.5, but on the low end of its range. Oil just turned green, up 4 cents, 104.41. You can see here, bid for quite some time.
That was a big move in oil.
Big move in oil.
Like a full
big
point.
move in silver, down $3.50.
Yeah, they just smacked the metals.
They smacked the metals. Gold down 64. Net gas is up 5 cents. Market's going to open here in about 5 seconds. We'll let that happen.
Do you get long some silver here?
Silver seems to be the play. SLV is even a viable product here, I believe, with June.
I'm going to do the SIC.
You could. That would be just a pure futures
SIC, so it's 100.
100 shares of stock.
Yeah.
Yep. Perfect.
Yeah.
Push that through. Good job out of you. What gives there?
That was my NASDAQ. I took another 30 or 40 out of that.
Oh,
shoot. I should have held it. It just rallied 50 handle.
They did just rally 50
Oh, my
handle.
God.
NASDAQ, I quoted down just about 1%. It's down just about 0.5% now. It rallied about a third of a percentage point or so. Push that through. That'd be good, too.
They're coming through for the pigs here.
Volatility up 18 cents.
Like CRM up $6.
Well, let's take a look and see what's trying to be the bucker to the upside. Microsoft up $8.50. Snow up $7.50. CRM, as you just mentioned, up $7. Let's put your close through on your scalp. Good job out of you.
Good job out of you.
Adobe down 6. ServiceNow up. I'm sorry, Adobe up 6. ServiceNow up 4. Crowd up. Even Bob is up. CRWD, Netflix up a buck and change or so. Palantir up $1 or change. Let's see what Nvidia's doing. It's a little bit weaker. Yes, down $2. Still down $2. Let's see what your leaders to the clubhouse to the downside are. SanDisk down 20 week yesterday, week today. VRT down 9 or 10 was weak yesterday. Home Depot for earnings down around $9. Gold, Tesla, RXLB, that's Rocket Labs, down around $8. Tesla down around $7. How do you say NBIS? Nebius? Nebius down $7. Nebius. Volatility up 22 cents. That's about as high as it's been today, as even the S&P is down 42. Talk to me, Goose.
I'm just going through my positions here.
What do you see when you go through your positions? What are you looking for?
I'm just taking more like short premium that I have on. I'm taking that off the table.
Okay. Nothing wrong with that.
Is Home Depot open right now?
Home Depot options, if they're open, you'll see them as green and red. I will show that to you right now. It does not look like it's open yet. They're all white. So they have not traded yet. Go to the shorter dated options. They're all white. So they're not open yet. That's not a Tasty Trade or the brokerage firm thing. That's that's your liquidity providers doing that. Yes.
Takeoffs.
Take
off some of my long Microsoft. I feel like I gotta hold it.
Even the S&P is about 5. Just traded
it's
down.
Taco Tuesday, so they got it.
It is
Taco Tuesday.
Yeah, we need the.
I wish I held that Nasdaq. My God, look at this.
Nasdaq's actually catching itself a big bit. It was down around 300 just a moment ago, or 250 or so. It's down about 100 right now. Even the S&P's got down to almost to Sunday night's lows, which was 73, 75, which seemed to have been a little bit of a bounce from there. Although it's only up about 10 handles from there. You didn't miss anything.
Yeah.
Something. Right?
Yeah.
Very nice. Going back across the board here to what's moving, VRT still down about $10 or so. Home Depot down around 8. I don't think those markets are open yet. AV.
Yeah, no, they're open now.
Okay, beautiful. Tesla down $7. Qualcomm down $4. Your beloved Amazon down 4. AAOI down around 3.5. Let's see what your Google is doing. Google down 3 also.
Yeah, they're coming for the pigs today.
Coming for the pigs, like Microsoft or
No, not Microsoft, but like the only stocks I see that are up right now are like CRM, Adobe. I mean, like if you look at IGV,
well, they're coming for the pigs. Nike would be up, and it's not.
Well, that
so they're not coming for
those,
all the
those
pigs.
are those are like the dead pigs.
That's the dead pigs.
Those are the dead pigs.
Got it. I didn't know which pigs you were talking about.
Yeah.
Russell's the weakest of the group, down 1/3% again. Russell being the weakest of the group as bonds and interest rates seem to be going higher here. Bonds down 17 ticks, 109.27. Silver down 4.5%, just about on its lows, about 40 cents off of its lows.
Right on the dance floor with a bunch of stuff. Like I'm not at. Like nothing has moved enough to take off, but I'm like right there.
Right there. I'm so close.
I'm right there.
I'm so close. I'm so close. Well, you've got 31 days till expiration. 30 days to expiration. So you got another week before you're going to look to roll from June to July.
I'm going to take off half these diagonals that I did in Microsoft. Like I've got a bunch of working orders that are like
register. Yeah.
All right.
I like it.
I did those at 12.70 and closed them at 17.25.
Oh,
like $400, but I still have some of it on.
Okey-dokey.
Long Microsoft.
Okie dokie. Even the S&P's just traded down at 377. That's about 2 handles off of the lows from Sunday night.
Do I take like 90 cents out of this oil butterfly that I have? I'm long the 90.93 call spread
in CL or
in CL, and I'm short the 105 108. It's $3.
90 cents is $900 or so.
$900. It's $3 wide if we stay right in the middle of here for the next 28 days.
I run like a thief in the night.
You think so?
Mm-hmm.
Ooh, what do you put it in at? 93?
Sure.
Oh God!
Well, you gave it away.
Gave it away.
Gave it away.
I did that. I did the Super Bowl, if you remember. I did the 70.
You push all those through for me? Yeah, I remember. You bought the call spread, sold the put spread, right?
Yeah. Which one you need? The Microsoft?
And oil, which you just put through, which is good.
Yeah. So I'll show this on the order chains.
Oh.
So on the 7th, we did the 75-70 put spread.
Mm-hmm.
This was into, and we could see this on the view market snapshots here.
Market snapshot.
Oops, sorry. Oh, God. My new hands here. Hold on. Let me get everything.
Oh, God. Lord have mercy.
Okay.
Help me.
Now I'm here. So we did this. Oil was trading at like 85. It's at 104 right now. We had a rally up to like 92 and change. That's when we bought in the put spread and sold out the 105, 108 call spread. We did that for 17 cents. So we owned this butterfly for a 5-cent debit, which is $50.
That's right.
So we owned the 90.93 call spread, short the 105, 108 call spread. We had that on for a 5-cent debit. It's a butterfly that we legged into the up move. It took about 2 weeks for us, and we got a good move. We just closed with oil at 104 and change here. It was about as perfect of a move as we could get,
right?
To close that one out. And so now you're sitting there with an up to $3 spread, which is $3,000. It's marked at 90 some odd cents, so about 1/3 the width right here. With 28 days, it's a tough decision. You look at that trade, and a lot of people and even I'm like sitting here like I think oil's going to stay here at 100. Like this is my spot. I've been trading for this.
You're going to have an opportunity
to get it. See, that's with a 70% implied volatility, and even when you look at oil, the expected move is $16. So this could be fully out of the money, and that's a 50-50 shot.
That's correct.
And you'd say, it's a tough, but it's a hard. it's a hard decision to make because you're like, this is perfect. I played this perfect. It's right where I need it to be.
It's not 2 days, it's 28 days. Like you said, implied volatility is so large, the expected move is so large. I think you run like a deep.
Oh, they canceled the crash.
They canceled the crash. Even the S&P is down 31. About
and I
20.
had it. I was a little Johnny.
You were not a little Johnny.
I was a little Johnny.
You did good. You did very good. You ready to take a quick 90-second break?
Yes.
I mean, the market, NASDAQ was down almost 1%. It's almost unchanged right now. The Russell's still down 1%. That's 27. Bonds are still weak, 109.28. Oil still bid at 104, got up to 104.22. It got up to 104.70. Silver still down almost 5%. Gold down 1.5%. Gold silver ratio, I'll just mention it because it's something that we've put on and done, is 61. We were buying it closer to 54. Back to the middle of its range, kind of in no man-ish land. We'll be back in 90 seconds. We got more Tasty Live after this. We got my man who's going to explain it all to us, Mr. Chris Vecchio in the house. We'll be back in 90 seconds. Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more because it certainly has meant a lot to us. It saved us a lot of money and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. You got a chance to reload everything. Even the S&Ps are down 46.
Yeah,
and
but I
change.
closed the NASDAQ right here. Actually, lower, I think.
See, now you like all your sales. Before you hated them. Now you like them.
I know.
One thing I like all the time is when this man comes on the show. Mr. Chris Vecchio, let me explain. What's up, Mr. Vecchio?
It's a day where I'm digesting what I watched last night in that Oklahoma City Thunder San Antonio Spurs game, I was really amped up about the Knicks marching their way to the final. The Cleveland Cavaliers, who cares? I didn't even know Cleveland was still a city, quite frankly, until recently. But Wembanyama, I don't know how anyone's stopping him.
Oof.
Did you see his warm-up video? That was kind of a funny one where he had the one guy like slapping like around, and he just he looks like a spider.
He trained with monks last offseason.
Really?
He shaved his head, went to Tibet. Lived with monks for like 3 months. He's like locked in. He's the most locked in I've ever seen him.
So how do you prepare? How do you
prepare?
How do you prepare for? Do you do like a monk outing? Do you like some Tai Chi in the backyard or something?
Start with a nice Bikram yoga.
There you go.
Then a lobotomy, because that's the only way you can stand being a Knicks fan for the past 35 years.
Oh, but this is your moment. This is your moment, though, Chris.
Hey, we had Walt Frazier.
Yeah, that was in the 70s.
When he says we, he means like he did at that age.
Yes. That's right.
That's a little Scoopy
Nick,
on Service Now from yesterday.
When you suffer with a team for many years, you are allowed to say we.
Yeah, sure. I agree with you.
That's fair.
And market's suffering a little bit right now. Even the S&P is back to Sunday's lows, 73.75. I'm rounding up here. NASDAQ off of, right there at Sunday's lows too. Russell's the big one to the downside. Russell down 41, 1.5%, twice as much as everything else. The Dow's down 360. First time volatility's been up. It's up 22 cents. That's a 1% move to 2050. It's a very small move, I think, for the recent move that we've had in the overall market. Bonds, canary in the coal mine. I know you're a macro guy. You're going to tell me why they're 109.27 and why gold is down 74 cents and silver is down twice as much. Well, almost 3 times as much though. What's that?
I said ouchie on the metals move. But today's Taco Tuesday.
The taco has to come, but it might come on the close.
We got a taco yesterday. He front ran the Taco Tuesday.
You know, you mentioned the rates there, Tony. It is America's 250th anniversary, so I'm going to pull out a quote from 251 years and 1 month ago to the day.
Okay.
When Paul Revere said the British are coming. The rate hikes are coming.
The rate hikes.
Oh.
Do you think
we got a problem?
They've told us, they said, no, rate's too high.
Unfortunately, the way of the world, Nick, is that the inflation that we're seeing make our way through the system is just becoming embedded. Last week, we had a 30-year bond auction that fetched 5% on the coupon for the first since August 2007. Hey, Tony, August 2007 was a famously good time to start getting long stocks, right? Oh, no, checking my notes here. That was right at the top before a crash. So I'm looking at what's happening here in the rate structure. So you have the 20s and 30s both sitting above 5%. The 10s are racing there. We're making our way, churning our way through 4.6 right now. The market is looking at a hike, but potentially for December. That's a long way from now, which means there's a lot of gap to cover. Let's say if the Fed signals it's going to need to do something sooner than that. Most of the FOMC board has been talking about wanting to do something sooner if inflation sticks around. And we're now going into what? We had March, April, May. We're 2.5 months into this war. The argument's to be made that the supply chain disruption's gone on long enough to get embedded inflation. Just look at diesel prices here in the United States. They're a few cents off of the all-time highs that were set in 2022. And when did we get that big grocery inflation that bothered everyone, the food inflation? Late 22 into early 23.
But they're taking that out of the inflation calculation. If you take out the stuff
that is a huge problem.
If you take out the stuff that goes out, the inflation number is low. If it goes up, you take it out of the calculation and there's no inflation. Oil,
CPI, food, energy, housing, this, that.
You just put like used cars in there. Like used cars have gone down. TVs have gone down
for the market. It would be terrible for the market.
I just bought a used Porsche. They've gone down.
Yeah. I mean, come on.
Yeah.
Yeah. It's only people like him. You know? Yeah. Exactly. That's what I'm saying. You take out all the stuff that matters. I saw an interesting quote on Twitter the other day of like talking about how we've been lulled to sleep because all the stuff that takes our attention is super cheap. You know, your iPhone is expensive, but you have it for multiple years. Your TVs, your, entertainment, Netflix is, you know, a couple dollars, like no problem. And then you go to the grocery store and it's $250 every time you walk out with, you know, a half a week's worth of food.
Damn you, Netflix, for screwing with my perception on the
There's
cost of
no
living.
volatility in this market. They're not coming for puts.
No.
They're actually selling.
Nobody cares.
They're selling the upside curve is the only premium that I see coming out. I don't see on put premium going higher. I see call premium coming down. That's all I see in this market. If you look at any kind of Jade Lizard that you put on over the last couple of days, which is a bullish strategy with long delta, if you go back and look at those prices, you're probably up money from 2-3 days ago.
Even into a down move.
Even though we're lower.
Yeah.
So call premium is coming in. The upside seems like there's a ceiling to it. Doesn't mean that we're not going to go higher, but it just seems like that exponential move to the upside. But nobody's worried about the downside. Now, that is worrisome at some point, Chris. I will give you that. But December rate hike, that's too far away for today, in my opinion.
Well, I think that's going to have to get pulled forward here. But you know, having all these factors cross the threshold at the same time, you know, we got this great piece of data yesterday from Manny Zhu over at SIBO. While demand for index protection increased last week, higher rates have not dampened the extreme bullish positioning we've seen in single stock options. Among the S&P top 100 stocks, a third is currently trading with an inverted call skew, i.e. out of the money calls trading with higher implied volatilities and at the money calls, which is historically very rare and indicative of extreme bullish sentiment. Over 20% of stocks are currently trading with inverted 3-month skew. As seen in the chart below, that's approaching the 2021 meme stock era high of 25%. So we've had periods that have been above 20% in past years. We had this going into December 24 into January 25. We had this at the end of last year, October and November. And then, of course, the market kind of lost a little bit of oomph, right? Last January, what happened? We churned sideways for a few months, and then the tariff episode came. We bounced back, but we churned sideways for a few months. This past January, we got into new highs and moved sideways for a few months until the war started. And then we sold up in real October, November, December, January, February. We were moving sideways. So we're back at these levels here. I know that Apple and NVIDIA together, those top two names in terms of market cap, they together are now the highest market cap concentration for any two stocks in American history. So I myself am a bull's bull, Nick. I've been riding this thing higher. The most recent trade's probably not going to work out if my fears here are coming to fruition. But one last piece of sentiment here, gentlemen, which I really, the alarming part of all this. Have you guys been following what's been happening with the Kospi, the South Korean?
Of course, I have
in the back of my mind.
I got bailed out
to trade. I mean, you go to June options and they're untradeable. But go ahead.
Yeah,
there have been reports coming out in South Korean press over the past few days highlighting how individuals have been taking out margin loans in order to fund their semiconductor trading. But that's not necessarily problematic. What bothers me is the fact that you're having folks over the age of 60 who are liquidating their retirement accounts, real estate holdings, in order to buy leveraged semiconductor funds. That to me seems like it's a little alarming here. Since the start of 2025, margin debt in Korea is up 140% and up 32% this year alone. The value of leverage bets on Korean stocks during COVID, during that trading frenzy, was $5 billion. It's now up to 24.3 billion. So it seems like we got a little bit of a bubble type of activity going on over there, right? That irrational behavior of someone who has spent 40 years of labor working to save for retirement, to liquidate their holdings in order to buy semiconductor stocks on a leverage bet. It says a lot about the decline of society and how there haven't been enough meaningful, well-paying jobs for people to accumulate wealth over the years, particularly in emerging markets like South Korea. But moreover, it shows that people are desperate, that they're willing to risk 40 years of labor savings to gamble in the market. I mean, this is not something that happens at the bottom of a market, guys, right? These are the stories that you hear closer to the top. So big margin debt up, interest rates are rising. NVIDIA's tomorrow. We're on the other side of expiration now when we get through today. And we're getting to a bad seasonal period here for the next 2 weeks for the stock market. End of May into early June typically isn't great.
Oh, is this sell in May and go away back now? No.
No, that's clown behavior, Nick. Please.
Excuse me. I repent my sins.
May 17th through the 25th, through the close of business on the 25th, is the bear seasonal window for May. And then the 26th of May through June 10th, you get this another much more bullish window where activity ramps up and subsumes any of the losses that you typically see on a seasonal basis in that third week of May or so. So the table's set right now. If NVIDIA disappoints, you get a whiff of disappointment tomorrow. Stocks have a good reason for a correction right now. I think we should be looking to buy that dip, Nick, but let's hope rates don't go too much higher because that's going to be the albatross around the neck.
I mean, SMH. So what do we call correction? Is 10%, right?
I mean, that's what
No, isn't
over 60-year-olds used to say. They can do whatever the hell they want with their money because they worked for a long time. And, go ahead.
Correction was 10%, bear market's 20%, right? Isn't that what they say? That's my understanding.
Yeah.
So SMH has gone 570, or let's call it 590. What was the high?
No, 575. You were there. 580 might be the high.
Yeah. Okay. 580 to
540.
542. So it's got another 50 points to the downside ish. I have a 100-point move for.
Correct.
Yeah.
Yeah. A little over.
For a bear market. It's in correction.
Yeah. And then you can start trading it, and then you can start trading it to the downside.
NVIDIA, NVIDIA is 10% off highs, right? It was at 240.
It is.
It's at 220. So, are we? Do we have to change what a correction and a bear market is?
It seems.
I mean, we just got out of an NVIDIA bear market 2 weeks ago.
It's so interesting that you say that. I had this interview yesterday for Trading Trends on our YouTube channel with Todd Sakowitz. He's the CIO of Sycon Capital. And he was talking about how people's risk tolerance levels have seemingly just gone out the window because you're seeing 20 or 30% corrections in single stocks and these things all the time. And then the market just ripping right back. So if you're operating around any of these, historical moorings of what we consider to be corrections in bear markets, and now it's down 20%, so I can't touch it until it recovers. Yeah. We're seeing those recoveries happen faster than ever. So I don't want to say changing your definition matters, but again, hey, right? The S&P 500 and the NASDAQ are changing their IPO seasoning rules. So you're not going to have to be listed for a year. It's only going to be 6 months. The small changes in things that people do to kind of just squeeze that last little blood out of the stone there, Tony.
Yeah.
At the end of a bull market cycle. Too many coincidences are starting to pile up. And if rates weren't rising, I'd be whistling past the graveyard. But now that we're starting to see portions of the Treasury curve at 5% again, it warrants a little bit more caution.
I mean, I'm looking back at when Japan imploded and how it was going to take down the U.S. market, and it had nothing but positive results for the U.S. market. I don't think you can look at
every dip has gotten bought
Korea
for 10 years
and say that that's the canary in the coal mine. I'll give you a bond play, but I think it's just over. I think it's just overdone.
We're going
here.
through a 2-week window. It's maybe a 2-week window here, to be clear, where things that the stars have aligned, where if we get some softness, it shouldn't surprise anyone. Right. It all would fit. Right. Not a reason to panic. And it could be a dip to buy. So, Nick, I will be there buying that dip. But this is the target zone where bears can strike because everything's the soil's been tilled for them.
Yeah, they get one day and then they get their face ripped off. We're 5% higher every single time. I don't know. I don't know how you play that. Is NVIDIA the one? Is that the final? You get that kind of okay, it's out, it's done, and then the call speculation, the call skew goes out the door. It's through the roof right now. It goes out the door. It's a natural seller. Those calls that you're buying at 100% implied volatility go to 70% implied volatility. They lose 40% of their value. Everybody rushes to close them. It's a natural, move to the downside. Is that is that the move? Is that what's happening? I mean, you're kind of getting some of it. I mentioned it this morning. SMH and some of these stocks like a Micron, AMAT, all these high flying stocks, you've kind of got this early. It almost makes me more bullish into NVIDIA now that you're taking it out because you're not getting the speculation. You're getting a little bit of a fear, into the move here.
AMAT down $10, by the way.
Tony, that's the sauce enough mindset. Ellie and I were talking about that yesterday on Overtime. If you're an NVIDIA bull or you're a stock market bull, do you want NVIDIA up at 240?
No.
Before earnings, you want it closer to 220 or 200?
It's right here. You want it right here or lower, 210.
It just was unchanged a moment ago. It's down $1.25.
You don't want it flying higher.
Yeah.
You know, but we've been looking at the NVIDIA options activity across the tape. We did a signal versus noise episode up on the YouTube channel now about this. And while there's been a lot of activity here, there's actually been a huge amount of activity, several big call sweeps, lots of premium collection going on. But I think that's really the important point. It's that the activity that we've seen in NVIDIA is the majority of it selling calls, selling puts, trying to monetize the high levels of implied volatility while it's here. Because what we've seen from the earnings reports have been inside lower moves for the most part.
Yeah.
When we've actually, over the past year or so, NVIDIA no longer has the capacity to surprise us and produce that 10, 20% move after earnings. Everyone knows something good is coming. People have been positioned for it. It's the most crowded trade in the world at moment's notice. So that to me is where the opportunity lies. If you're going to take a directional bet here, you have to get something that's going to shock us. Otherwise, how much is already priced in the way that institutions are trading this, they are looking just to basically get it pinned right now around earnings. So I think if you're going to do anything around earnings, it's inside and lower. Until that changes, use it inside lower opportunity to buy. I would love to buy NVIDIA back at 200.
Wouldn't that be?
Love it.
I know, but that's the mindset, which you never get the chance, is what it seems like. Like, I'd rather buy at $20 lower than here too, but I don't know if you get that chance.
Wouldn't that be bullish?
Someone's gonna be wrong.
If you had a non-move on NVIDIA earnings.
The expected move over the month is $20. I mean, you're there, Chris.
Yeah.
It's not like it's a bad call. It's just, I don't know if it happens. If it happens, it happens for earnings. Go ahead.
Yeah.
Sorry.
Wouldn't it be a bullish move for earnings if you had a non-move, the skew comes off the table, the excessive speculation comes off the table. It says, it says to markets, you know what, here, this is the spot. This is it's fairly priced. Markets are basically at highs. You have about 90% of the other stocks that are in the dumps. Those kind of have a nice little bid. You're seeing some of those names. We were talking about some of the software names kind of catching a bid today. Those kind of have a little bit of a bounce. Doesn't that mean we're net higher a month from now?
That reminds me of the market at the end of last year then, which is just a lot of, maybe the indexes are chopping around and grinding sideways.
Yeah.
But you're not getting much directional progress either way.
Sure.
So that also wouldn't be unhealthy. As we saw, having a little bit of time where you're moving sideways, you take off the excessive valuations.
Yes.
The PE ratios in the broader market last week were lower than where they were in October, even though the market was higher than where it was in October. And that's because we've had 2 more quarters of earnings to digest with substantial earnings growth. So prices have not kept up with the increase in earnings, and therefore PE ratios have come in. And that is largely a function of the fact that the market moved sideways while it accumulated the strength underneath the surface. And once we can kind of push the Iran war to the background, we were allowed to release and realize that reality. So that reality is not changing. Earnings growth for the next several quarters looks like it's going to be double digits. For the next quarter, it looks like it's going to be near 15 to 20% again, based on early tracking and conversations that are being had. So the rates are going to be the problem. Warsh comes in and tells us that they have to hike. It's going to upset the market. It did this in 2022. So let's not overthink this. If hikes are coming and oil's up, stocks are probably going to have to take a bit of a breather. It's not.
Yeah, 100%.
The orange man is not going to like that.
And it's Taco Tuesday.
The orange one is not going to like it.
Speaking of which, he's coming to my town. My town.
Are you having lunch?
Or on Friday. On Friday. Unfortunately not. I'm busy. I'm working.
Okay.
I told you, Tony, that's what the money's for.
I understand.
Next time he's in town, I'll try to make room for him.
Okay.
Please do. Chris, always a pleasure to see you. Thank you so much for coming on. Bonds 110.02 off of the lows of 109.25. Even the S&P is hanging out near the lows, about 10 handles off of their lows. They made them at 73.70 a moment ago, 73.81 right now. Your big leader to the downside is the Russell, down 45. That's about a little over 1.5%. Everything else is down around 0.5%. Gold and silver still remain weak, although silver caught itself Well, down 3.5%.
I closed the silver. The SIC contract, the SIC.
Oh, very nice. Nice little scalpy for you.
Scoopy.
Scalpy. Good for you. We're going to take a quick 90-second break and come back. We got more. Congratulations on your wealth. We'll take more Tasty Live right after this with a market measure. Thank you, Mr. Vecchio.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. The selling continues in these stocks. AVGO down almost $10. NVIDIA back down $2. Goldman Sachs down almost $13. Google down $5. VRT down $16. Apple up 60 cents. Microsoft up $4.50. Google down. NBIS, I can't say the name, down $10. SanDisk down $14. PWR down 21. These are the stocks you like to look at.
Yeah,
PE down $7.
I know that's it. That is helping me.
Tesla down 13.
Yeah, I've got some good short delta positions in AMD, AVGO, BE, Intel. Those are going in my favor today. Today's a good day. I've scalped out of some NASDAQ. I just got long it again.
SMH on its lows down 13.
I took off some risk in NVIDIA. I closed like the 240 calls. I'm short a ton of at the money premium here. I bought in the risk on EWY. I had that butterfly on the upside. I did the call ratio on the upside. So I have a butterfly now. I did the same thing in Google. So I took off a lot of risk. I took off some diagonal spreads in XOM, ServiceNow, hit those pretty decent. I took off some calls in FCX. I'm taking off stuff that has moved.
As you should. Coming for the pigs, McDonald's up a buck and change.
I know.
Nike
I
up
was
9
actually
cents.
looking at diagonal spreads there. I might close.
Palantir up 40 cents.
I might keep the McDonald's. McDonald's is just so.
Can't trade it. The market's. I mean, I'm long the 280, 290 call diagonal spread. July, June. I did it $5. It's at oil off its highs of almost 105 to 103.30 as even the S&Ps make new lows, down 58. Interesting market. Volatility, anemic.
Yeah. Silver, too. I took off the silver, too.
Mm-hmm.
Okay.
Gotcha.
Cool. All right. You want
I'm ready.
Yeah, let's do it.
Market Measure sponsored by our friends at the SIBO.
Is legging worth it? Do you think it's worth it?
No bueno.
I think it's a harder question when you look at SPY versus like normal equities.
Mm-hmm. Okay.
Because you got to, like if you're short a strangle in AMD right now, you got to be taking off the calls. The calls are going to lose 90% of their value.
Yeah. Totally agree.
Into a move like, into a one-day move like this. I think when you don't, the studies that we do on SPY or the Qs, stuff like that, it's a lot less volatile of a product. So you kind of got to just set it and forget it. You got to be mechanical with it. Kind of like the SPX stuff. You just kind of got to put it on and let it
close your eyes.
So is legging worth it? Let's get into it.
It's a great way to trade. Close your eyes.
Close your eyes. Please.
Stop.
So is legging worth it? When we talk about legging in and out refers to managing multi-leg positions independently. So you sell strangle, you're legging out of the put or legging out of the call. I legged out of some positions today. Those are a little bit different because they're defined risk positions, but we talk about legging in the context of a neutral short premium position, such as a strangle. So in this example, you're exiting the put into an up move. So the stock goes up, that put loses a significant amount of value. You leg out and close that put, you keep the call. It's a dynamic way of adding delta without adding risk. So if you put on a strangle, the stock goes up, your short call goes from a 1 standard deviation, you put on 1 standard deviation strangle, it's a 16 delta on the call. It goes to a 40 delta, it's right close to at the money. The put goes to a 5 delta. You close that put. Buying that put will synthetically get you short 5 more shares of whatever that asset is because you're taking off that long delta. You're buying to close, so you're buying that option, which is long delta. You are selling out of that long delta. But here we're talking about legging out of a SPY strangle, and is that the approach that you should take? So we analyze the performance of selling SPY 45-day 1 standard deviation strangles since 2013 using 2 management approaches. So we're talking about managing the whole position at 50% of the max profit or managing each side independently at 50%. Again, I think one of the things you have to consider here is that generally speaking, I know we've had just a massive V bottom.
Sure.
Generally speaking. Again.
That's the caveat. Like it's again. But go ahead. Like how many times can you do this? Send one more time, obviously.
Generally speaking, SPY, is a lot less volatile and it has a lot less realized volatility than single name equities. So this is a much slower moving trade, generally speaking. You don't usually have the sort of tail risk. It would be, I don't think there's been a situation where you've had a 100% rally in something like you have in AMD. Or Micron is up 500% this year. Those don't really happen in ETFs.
You're right.
Say that would be a hard occurrence to come by. So, these are much slower moving trades. So we're talking about managing the whole position at 50% of the max profit or managing each side independently at 50%.
Okay.
So in SPY, our analysis found that the legging approach didn't help to improve the performance. In fact, managing the whole position slightly outperformed legging out over time. So here you'll see there's not a huge difference. So your average P&L is basically the same when you're legging out at 50% or just managing the entire trade at 50%. The percentage of profitability. So the percentage of those trades that are profitable, pretty close there. I think the largest loss is really where the big numbers come in. And this, gets bigger as the market gets bigger. So, when we were trading SPY when it was like 300 a handful of years ago, the strangles were a lot different and the VIX was a lot different. So now a lot of this research is heavily weighted towards the current recent time, the last handful of years, because
the 300s were only 4 years ago. I know we're 700 and change. It was only 4 years ago.
That's what I'm saying. Right. It's like the prior, you do a 15-year study, and 10 of those years is a fraction of the size of the last two.
Yeah.
So you got to kind of keep that in mind here. But you will see, managing these specifically as a whole makes a lot more sense just from a risk perspective. Everything else is kind of in line, but from a risk perspective, it does make sense to kind of manage the whole trade as one position. So what about positions with other deltas such as 10, 30, or 50? So in this study that we're looking at here, we manage the 10 and 30 delta strangles at 50% of the max profit and the 50 deltas at 25%. We typically manage those straddles. If you're selling a 50 delta strangle, it's really a straddle because you're using basically the at the money strikes. We manage those a lot quicker because they're much meatier positions, much higher extrinsic value. And so we're trying to target, a smaller amount so that we can kind of cycle through those positions. And we close these positions at 21 days. So we're going to look at those metrics here. So the small delta strangles produce almost identical results. So, and identical to what we were looking at in the first section, which was the one standard deviation strangle. So when you go to a when you go further out of the money, the stats are basically the same as a 16 delta. So the percentage profitable, basically the same. Your average P&L per trade, a lot smaller. You have to keep in mind, this is going to be reflective of where the market has been. Again, a lot of this data set, market was a lot lower. Volatility was a lot lower. Mm-hmm. What do you think a one standard deviation strangle would trade for 8 or 9 years ago? Like when 10 years ago when I first started.
Full one standard deviation.
16 delta SPY strangle when SPY was at 250.
Sometimes it would be under $1. And we would talk about how you can't sell it for under $1. $2 would be a huge premium.
That would be like the greatest thing ever. Now it's at $8.
Right.
$10.
Right.
It just tells you that, that's why looking at these average P&L numbers, people think like, oh, that looks like nothing. It's really just to show that your average P&L is positive. That's really the basis here. Yep. Is that over time, these work. The numbers have gotten so significantly bigger that the trades now are gonna be a bigger weighting in all of our data sets. And so here you'll see it's pretty much the same stats as we had with the 16 delta. When we look at the 30 delta strangle here, this is where you get to kind of it's better to manage these as a whole versus scalping out of them. So while increasing the delta began to worsen the performance of lagging positions, while increasing the delta began to worsen the performance of lagging positions, the differences were still relatively small. Again, you're starting to get a little bit better if you're managing the whole trade at 50%, but you're not changing a ton. It's not a huge difference here across the board on any of these.
True.
However, large delta options showed poor results when lagging, with more noticeable differences in the success rate and volatility. And I think a lot of this has to do with just the change in delta. Your 16 delta strangles is going to be, or your 10 delta is going to be out of the money for a lot, and the change in delta is going to be a lot smaller than your at the money straddle, which, as you get closer to expiration is going to be a bigger delta number here. So here you can see managing the whole position at 25%, much better than legging out at 25%, especially when you look at the loss, the largest loss getting decreased by about 10%, which is a big number.
Beautiful.
Flew through this one. Couple takeaways. Legging in and out increases the complexity of a portfolio management. I like doing it.
You like to, yeah. But you're taking a directional risk. That's what you want to do. You're taking the directional risk.
But it's a function of capital.
It is a function of capital. It is a function of delta too. If you are comfortable with the directional risk.
But I would rather leg out of a call to get more long delta than add a put. Like, let's say I'm trying to get 15 deltas.
Sure.
Selling
more contracts is
more contracts, more risk.
Yeah. That's right. If you're wrong.
Or go to a diagonal spread.
Right.
Where you're
But a lot of times after you cover let's say the call side, you're looking to lay it out again as we go higher.
Yeah, if we go higher, you're trading.
Right.
Yeah.
Right. So you're just taking advantage of the flow of the market, being able to watch it all day long. So I get that. And by the way, NASDAQ down, back down almost 400, about 1 1/3%.
Ouchie. Do I add another one?
Just near its lows. Even the S&Ps are just off their lows, down 60 and change. Volatility up 17 cents, much like yesterday, although the market's moving more than yesterday. Bonds are down 17, 109.26. Oil's off of its highs of almost 105, 103 and change. Weird, wild, crazy market right now with not too much.
We're going to get one more. We're going to get one more. Just a little, tiny. I gave up all my nice scalps this morning.
Okay. You're allowed to.
No, I gave it up.
What do you mean?
I had profits.
Oh, you had profits.
No, I gave it back.
And you gave it back. Well, I mean, that's the love of the game that we play.
I know. Oh, those DRAM.
Oh, DRAM. Not to be confused with DRAM.
I did those like big wide butterflies.
Yeah, down 2 and change. You did upside butterflies, right?
Yeah, I just bought back the 55-65, the short spread there. It's had a huge move. I mean, this was when we did this trade.
It's trading closer to 53.
Yeah, it was like 51 and change. So it's down about 10% from there. So now I'm just long an out of the money call spread here.
Okay, here's an example of you doing exactly what you're talking about, but it's a 40-cent spread. It's a small example. So you're buying the spread back for 40 cents.
But that's better than selling a naked put here for me.
Oh,
from a risk perspective, like why add the risk for the same sort of upside? Like if you sell the put for $2 and the stock goes up, back to 50, you're going to make your $2. I'm going to make 4.
Totally agree. 30 days to go. I mean, what's it going to lose? A penny, 2, 3 a day on a move lower in the stock? I mean, so you're taking a small little shot for a little bit of upside zing. Although it doesn't look like the market's going upside right now. Not because volatility is confirming, just because price is there. Down 70 on the E-mini S&Ps. NASDAQ down 430. That is just about a new low. Russell down 49. That's been your weakest of the group. Dow down 177. Volatility up 27 cents. It's about as high as it's been. Bonds down 23. I think that's the culprit right here. Bond volatility expanding across the board. 109.21. Gold and silver. Silver's moved a little bit lower, although it's off of its lows by almost $1. Oil is 103.70. I think this is all about the bond move right now. So.
Yeah. I know volatility's up 1% now.
Yeah,
but it's not
3%. But yeah, it's not.
Vol has had me perplexed for 3 weeks now.
Yep.
Even into the whatever you want to call it, squeeze higher, move higher. The fact that volatility continued to just get smashed when underneath the surface, realized volatility was just through the roof. I mean, we were looking at Micron up $80, every day. Like there were stocks that were just going bananas, and volatility was nowhere.
You are
just bizarre.
You are right. You are right.
Bizarre.
Volatility was going nowhere. All right, let's take a quick 90-second break. We'll come back. We'll talk more about these markets and more about that other thing, Tasty Trade. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son, and you know what that means. Well, let's take a look at the market before we get to that. Even the S&Ps, they're down 58. They just made new lows about 10 handles, 12 handles lower than where they are right now. NASDAQ's down 350 and change. That's been your biggest two-sided action on a percentage basis, down 1.25% right now. It was down around, about another 60, 70 handles lower than that just a moment ago. Russell's down 43. That's been your culprit all day long to the downside. Back to where it was at the end of April. Dow down 113. That's been the strongest of the group. Volatility, my best indicator, has been no friend to me in this market right now. It's been doing absolutely nothing, up 12 cents. Bonds, on the other hand, are signaling close all watertight doors. Bonds 109.19, definitely signaling rates look like they're going to be raising or at least changing their outlook here. 109.19 volatility. IV rank quite high at 64. I think that's where we should be playing even more than the market itself, which I don't usually say. Bitcoin 76.4 hasn't really moved that much today, but as you can see here, about $6,000 lower than where it was just about 6 days ago. Ethereum doing the same thing. Oil down $1.19. A little surprising with the market lower, bonds lower, that oil still on the high end of its range, 103 and change, isn't closer to 104, 105, but right there at 103 and change.
Oil vol it's not going anywhere.
OVX, CGI. You are correct. 72, hanging steady, really hasn't moved anywhere. You would think as oil goes higher, that volatility would go higher too. That's how commodities usually work. That has not come to fruition. Gold down 64. It's been there all day. Silver's been a little bit lower by about $1.20. It's still down 3.5%. Matter of fact, the biggest mover to the downside on a percentage basis is silver. Nat gas is doing the same thing. I guess the opposite of oil today, as nat gas is higher, oil's lower. But oil's on its highs, all-time highs. Nat gas nowhere near its all-time low highs, but near its highs for this most recent move. Across the board here, you've got weakness everywhere. SanDisk down 30, Light down 26, AMD down 24, VRT down 21, MU down 17, Tesla down 14, NBIS down 13, AMAT down 13. A lot of stocks in double digits here, son, on this first page, signaling a lot of weakness in the market. On the upside, Costco, that's what's helping the Dow, up 13 and change.
I should have held that calendar.
Snow up 9. ServiceNow up 3 and change. Microsoft up $1 and change. Apple was up earlier. It's down $1.26. Even the S&P down 64.
Yeah, they have taken a lot out of some of these stocks with a ton of call skew. I'm looking at, I did this, so I have significant short delta in B, which is now turning into like flat delta with this move.
B down $11.
It's down like $50 from
from its highs. It was 300. It's 246. Sure.
But the calls. So I did a crab trade. So it's selling 2 and buying 1 call closer at the money. If you remember, we did this in SMH2, which I just legged out of the short call spread, and AMD, because I'm sitting here with 100 short deltas. I had a 10 long delta kind of dynamic position where it's not adding any more down. It's not capping the value that I'll get back on the downside. These calls that I sold, I just legged out of one of my NASDAQ. These calls, like the 350 calls in June in BE, went from $15. I sold them at $15 a couple days ago on the 15th.
Yeah, you're
4 days ago.
4 days ago.
I mean, that's the weekend. They're at 5.
Yeah.
So you've had and that position, that crab trade that I put on, that I did, and I can even show this because this
is why you're not seeing volatility expand, because call volatility, that upside call volatility has
come out so much.
Yeah, especially in these kind of stocks, these high flyers. But you'll even see it in SPY. I was talking about how the vol differential was around 0.75 of a percentage point between June and July. And you look at June vol now, it's 18.4, and July vol is 19.4. July staying bid, and June getting sold off right now, ever so slightly.
So I did that trade when the stock was trading at 278. So the stock's down, 20 to $30 here, which sounds like a lot, but this stock was it's been moving $20 or $30 a day.
Yeah.
And those options are going 70, are losing 70% of their value in just a 1 day move.
Yep. Going nowhere. Markets are wide and B. You got to be careful.
I know. I'm putting it in, but this is.
Put your NASDAQ scalp through too.
Oh yeah. Okay. I'm gonna let that work, and then I'll just. So I still have some long NASDAQ left. I don't know. Vol is saying the taco's coming.
I know, but it's been saying that for days and it has not confirmed.
The tacos come every single day. Every day we get a taco. What are you talking about? It's Taco Tuesday every day that ends in Y.
Enough out of you. Let me bring in my next guest. Your friend and mine, Q, patiently waiting. Thank you, kind sir.
What's up, Q?
Fellas, how's it going? How are you guys doing?
Doing well, doing well. How's the desk today? Even the S&P's down 60. We've had a couple of days of selling. Bonds selling off big, down 23.
Mm-hmm.
What gives?
Yeah, I mean, well, it beats me, but I feel like it's about time for sure. It's been about time for a little while now to see some red on the screen. But yeah, busy morning, actually. Got a lot of people, putting on positions now that, because it's been weird, like volatility, as you guys were talking about, right? Volatility's been bid, sort of.
Yeah.
And it's because a lot of that call skew in these like high flyers, like MU, AMD, things like that, right? And so, yeah, it's an interesting time to be trading where like market's moving down, as I feel like sort of expected with vol being so high at all-time highs. And so, yeah, this is a very interesting time to trade. We've got a market, two-sided action coming our way for sure.
We do have some two-sided action. That is for sure. In just about any place that you want to go, too, whether it be equity markets, debt market, metals, everything seems to be in play right now.
Yeah, everything's moving in both directions, which is, a benefit to a lot of our customers, right? And then, yeah, it's not just equities. IVR is high across the board on a lot of underlyings.
Yep.
And so, yeah, interesting market that we've got here for premium sellers.
Will you cancel that order? I put the wrong account. Thank you. Let's go to your list. I'm sorry, I won't keep you anymore.
Yes.
I hear you.
No worries. We've got top 20 symbols going through the system and their IVR. I think it's going to be quite the interesting list today because we've got so many different symbols in play that may not typically be on there.
Okay,
right?
Beautiful.
And so let's see what we've got here. Let me get this pulled up. Josh.
New hand.
New hands.
The help is
Josh,
never as
one
good.
thing to do.
My God.
Only one thing to do.
Oh, there it is.
All righty.
Go.
Top 20 symbols going through the system and their IVR. At number 1, Microsoft with a 57, Tesla 21, NVIDIA 59, Micron 80, SLV 42, Now 70, GLD 38, Apple 44, Amazon 20, Netflix 38, Google 47, AMD 80, Palantir 20, TLT 65, AXTI 38, Intel 77, Home Depot 76, SOXL 95, Snow 94, and Meta 33. Only 3 underlyings out of all 20 are below 30 on IVR. I find that quite interesting.
I think that's indicative of where people are looking. I mean, everybody is looking for these, even the, non-traditional premium selling traders, they're just YOLOing calls. They're all going to the semiconductors,
right?
The SMHs, the, AXTI is in there. That's one of the optical, with Lumentum and AOI.
Yeah, that's not one we see super commonly on the desk.
But those things are moving. And that's what people are looking for. That stock's up $3 today.
Yeah.
It was down 20 yesterday.
Yeah.
That's the market we're in.
Yeah.
That is the market we're in. That is for sure. No doubt about that. Hey, thank you so much. I'm going to let you go. Thank you so much for coming in. Back to work for you.
No.
Who's our next guest? You're a friend of mine, Mr. Ryan. I am sorry about your Sabres last night.
Yeah.
They actually looked like they outplayed the Canadians, at least in the second half, and maybe even into the overtime where they lost.
Yes.
I don't know. Listen, that's the way. That's the great. It's such a great sport because you can get outplayed and still win, at least in the way it worked out last night for you. But it was a great, exciting game.
Yeah. It was a fun series too. I think
it shouldn't have gone to 7. You seemed like you were the better team, Buffalo's.
Yeah, but so often Buffalo had to come from behind. And you
that's
saw
you
that
people.
in Game
That's
6
what you
too.
Buffalonians do. You come from behind to get so close.
They're underdogs.
That's it. You're the Cubs of every sport, pretty much. Yeah. Even football.
Absolutely. The Bills more than anybody.
Yeah.
So
Fun to
All the trouble
watch.
I've seen.
After 15 years, and the playoff drought for the Sabres.
It's fair.
Yeah.
It's fair.
I mean, this is good. This has to be like you've had for the last handful of years.
Yeah.
Buffalo sports have been.
It's fun to be a Bills fan again.
Yeah,
Yeah,
For
for
a few
sure.
years,
For sure.
This
For sure.
is good. I mean, we're still in purgatory. We got one.
I'm not throwing any shade
It's
at
getting,
anybody here.
it's getting better though. The Bears are kind of starting that process as well.
Yeah, we don't have. It's not like. Yeah, you can't parlay that into like the next. Like Cubs and Sox are like nah. Bulls.
Eh.
Like,
Mid. Eh.
Blackhawks. Ugh.
Eh.
Like it's we got one. We don't. You want to string them together. You want to string those wins.
But there were some Blackhawks glory days a decade ago or so.
I got a
right?
jersey with a lot of signatures on it from some. Yeah, of course.
Well, they win 3 Stanley Cups in 5 years. or
Yeah, we were
something,
all right.
something like that.
That's right.
we got.
They were. I remember they were fun to watch.
Yeah, we were all right.
Yeah. It'll get better.
Yeah, it'll get better. It'll get better. Well, what do you got for us today? Crypto seems like was once the you actually called it a few times when you were on here that maybe we can get a pullback in this market. I don't think you saw 76 and change so quickly. I mean, as quickly as we went up, as quickly as we came down. It's been about 6 days, and we're about $6,000 off of our highs. Okay, explain to me.
Yeah, it moves fast, and then when the market opened over the weekend, when we're not really paying attention to it, all of a sudden you come back in, and it's like, oh wow.
Big moves on Sunday.
Yeah.
And no dip buying there. They dip buy.
No, I mean,
crypto.
As we've shown, I don't have the updated correlations, but as you guys have seen, those short-term correlations between crypto assets and let's just say Bitcoin and the rest of the market was pretty much at an extreme versus what you see historically, all driven by the same thing. And what you're seeing, of course, now is that momentum unwind. And we talked about what is the risk to this recent move here? Well, it's rates. It's inflation. It's what's the Fed going to do? But ultimately, we're saying, hey, 4.5, just kind of arbitrarily on a 10-year note. If it blasts above that and you start to see bond market volatility come back in through the MOVE index, probably going to see a pullback. Doesn't mean that this is over, but that opportunity maybe to buy the dip that we've been looking for, whether it's in crypto or some of these other high flyers in the AI trade, you've been waiting for that. Maybe you're starting to see the beginning of it. I think personally it might have a little bit more to go, but I think this is a rates-driven move. You're seeing the dollar reverse course here, and you're seeing weakness just about everywhere else. And when you look at that factor momentum, for example, there's a few different ETFs that give you exposure to different factors in the market. MTUM is a momentum ETF. You can see that its holdings are a lot of the big names that we talk about. But the relative underperformance there versus the S&P, as the S&P's gone down in the last week as well, that's about 5% in terms of underperformance. So maybe no surprise after things went up every single day for what it seemed like months.
2 months, yeah.
Yeah.
So that said, let's take a look at just a quick update around some of the signals that I track on the slides here. We have seen that short-term momentum, which is the theme, come out of crypto. And so we've got a little bit of red on the screen, if we could throw that slide up. And then we'll take a look at our expected moves.
How much of you
I
have
think
it up here.
do you have the slides in here, guys? Can we put them up in here? Just so
in the
yeah, we might be frozen in the screen in here.
So the expected move here for all of these have come in significantly. It looks like.
Yeah, that's the other thing that's kind of interesting about this is you've had this pullback everybody's been waiting for, but it's just been leaking lower. A little bit of volatility over the weekend, but you're just not seeing a massive expansion in implied vol. Realized vol has been at yearly lows as well. So you have a bit of a premium that's opened up in there short term, but the IV ranks are still close to zero. Expected moves haven't changed very much. The ranges are basically what they were. When I updated this from last week, I think we had it 83, 84 at the top of the range there, 76 at the bottom of that one standard deviation move. You're kind of there here today. Updated, you get about 72, 73 to 81. ETH is definitely weaker, Solana weaker. So that consistent theme of if you are going to buy the dip or where do you want to be, at least at this stage in the cycle, I think it's still Bitcoin over everything, even though there's some pops here and there at times. Yeah. But that's been a pretty consistent theme. I wish there was more that I could tell you guys. I mean, we've got the Clarity Act, looks like post markup in the Senate Banking Committee positive news coming out of that. The probability on poly market at least moved from kind of 50-50 to closer to 65%.
Yeah.
So we'll see, but that's definitely positive. It's
You
just
got some of the tokenization stuff getting back in the news cycle of like tokenizing stocks and all that stuff. So that's kind of like,
yeah, that's nothing's changed there. It's a slow grind. I still think you anchor to some extent in the Bitcoin halving analysis and the post-cycle kind of analysis there. And typically what you've seen historically, not that there's a huge data set, but those bear markets, they tend to last for about a year or so. And we topped out at 126 back in October. Maybe we still see a new low. I have no idea. You're not seeing that in volatility, but anything is possible.
You mean to tell me I've got 5 more months of crypto winter? Is that what you're telling me now? Is that what you just laid on me in a very passive, kind-hearted, gentle way?
Possibly, but maybe I talk out of both sides of my mouth at times. It doesn't necessarily mean that you're going to go lower, but that environment, which I think we all love, where it's ripping higher, 10 grand a day at times.
oh yeah.
We're just not in that, and we haven't seen any. We haven't seen any real sign or signal that we've exited this market environment that we've been in, which is again, it's been about a $20,000 range or so, 60 to 80. We've taken a look at 80, 81, 83 a couple of times and haven't been able to break above that. But I think we will get there. You just have a environment where again rates have popped, Fed funds are pricing in really no cuts. So we'll see. This could all change by what's today? Tuesday, by Friday.
Sure. It can change. It can change because of price, right? I mean, that's really
that's the driver. Yeah.
That's the driver.
For whatever reason, and maybe this is the same with other areas of the market, but with crypto specifically, the mood just changes a couple $1,000s one way or the other.
Oh,
the best of times, the worst of times, all within the last 5 days.
When you get 82, we're so back.
Yeah.
And then, now this is worth nothing. It's fake. It's so quick.
Yeah. I feel better about putting in some resting bids, mid 70s, low 70s. If I don't get hit, so be it. That means that we're moving higher. Yeah. But those are levels, and at this stage where we are in the cycle, and given the developments in the industry as well with the regulatory update, I feel a little bit better about buying the dip now.
How do you feel about the rest of the market? So you've got oil here is now 103 and change. It's been moving $1, every 30 minutes or so. Volatility has gone nowhere. You have bonds crashing through the floor. I mean, bonds are at the lows.
Yeah, you've got a 5% on the 30-year bond, which you haven't seen in some years. So that's what you got to keep an eye on here. I do think that if you were to really see rates run away because of an inflation impulse, the Fed probably has some program, but we're not there. Yeah. We're nowhere near that yet. But I don't think much has changed in the market aside from Micron was going up 10% every day, and we all knew eventually that was going to correct. Now, is that a 10% correction or is it a 20% correction? That's what I would key in on. If the semiconductor index drops 15, 20%, I don't think that the AI trade has changed, but that's where I would just be a little bit more patient. I don't know if you are going to see this. We haven't seen it just stop on one day. So
it's easy to say that, but then everything V bottoms.
Yeah, right.
Like everybody says, oh yeah, just be patient. Just wait for it to bottom out, and then all of a sudden it's back to all-time highs in 3 sessions.
Mm-hmm. Yeah,
that's a tough.
It moves a lot faster, it seems, than ever before.
Yeah,
in terms of these corrections, it's like very violent. The magnitude of the move is large.
Yeah,
and the speed at which it rebounds,
it's just as fast, if not faster.
Yeah, you're down 15% and then you're back to your flat.
Yeah.
So I don't think anything big picture has changed, right? You look at the economic backdrop, it's still pretty positive. The data that's coming out is pretty positive. You've got to worry a little bit about inflation, but you're seeing economic growth accelerate higher in terms of year-over-year rate of change, seeing the same thing with inflation. Now it's a little scary because everybody remembers what happened last time and what the Fed had to do to maybe arrest that inflation. But unless we get significantly higher oil prices, it seems like we've been able to digest this for now. That said, as I've talked about before, it's just simply a matter of time and math. But as of today, I don't think much has changed. There are a lot of great spots where you can hide out as well. If you miss the AI trade, you get a correction in there. I think the picks and shovels component of that, which is beyond the compute piece, it's not the chips, it's the energy, it's infrastructure that goes into that. We're going to build more data centers. I can guarantee you that. That's worked. But look at commodities. Right on the other side of, you could be short bonds, and we see rates rising here. On the other side of that, pick your miner, pick your commodity ETF, or just pick your asset. It's all going higher. And so that's I think, going to continue to work for now.
We haven't had a rate/commodity super cycle in quite some time.
Well,
do we start calling it a super cycle?
You've definitely had people that have been calling for that commodity super cycle going all the way back to 2020. So I think, again, it's not going to go straight up, but you're very supply constrained. And you have massive demand on the other side of that. So I would want to stay long personally. Things like copper doesn't mean you chase every move higher.
Yeah.
I think it's going to have some support there. I think the energy complex, we have a massive supply of natural gas in this country, as everyone knows. But I think that's going to continue in terms of the infrastructure piece there, the pipelines, the natural gas companies. Those would be places I'd look at.
I was channeling my inner doctor data, and I was looking at XLU yesterday, and I was like, oh God, do I have to go this route?
Do I have to do this?
Like, do I have to buy like energy companies, utilities? Like, is this the move? It is an interesting argument. Like, you look at XLU and you think, if we're building a bazillion data centers and we have to, 10x our energy infrastructure, why are these stocks, basically at lows? I know they're up to 10 cents today, but they've been
10 cents is
they've gone nowhere for 8 months. Like, you're telling me we're about to build a bunch of data centers and need multiples of what power we produce right now, and those stocks are at lows?
Yeah, well, I think the interest rate component probably is a bit of a headwind to those utility companies.
Sure.
They carry a lot of debt.
Yeah.
But that said, I think to your point, right, you're seeing that whole sector and a lot of the bigger companies in there. That's become more of the nuclear energy, AI trade, what's going to power this, the electricity that's needed. And it is really correlated to that AI piece compared to previously, where you'd say, okay, time to get a little bit more defensive. Let's go into utilities, for example. I think it's definitely shifted there.
Look at this market shifting too. Even the S&P is down 70 handles on their lows as volatility is up 12 cents. It's not even near its highs of 2060. It's 2040. Downside, you got Russell down almost 2%. NASDAQ's down 1.25%.
I actually closed out of I tried to close out of one of my NASDAQ. I closed them all and then got back in. Like 20 ticks lower.
Good for you. I didn't.
It was a fat finger that ended up working out for me, which is usually rare. Usually you fat finger something and you lose a handful of ticks.
Good for you. Bonds down 21 ticks, 109.23, although they're off of their lows. What do you think of this whole market right here? Is it
volatility has gone nowhere? I cannot explain it. It seems to be that this is just kind of a take some froth off the table here.
The VRTs of the world at down 17, 20%.
Yeah, pick your flavor. All the semiconductor, SMH, all those components down 10 to 15% in basically 48 hours. Mm-hmm. And volatility's nowhere. You have vol expiration tomorrow, NVIDIA earnings.
Well, maybe we're in wait and see mode until we get the NVIDIA earnings as the bellwether for all of this.
That's what I'm thinking, but it feels good that it's like not that we're not exploding higher into it.
Yeah.
Like you're taking the skew out, you're taking the speculation out, everybody that has been YOLOing calls day after day for months and months and months, when they, put all their profits on the table for the last run, they're getting squeezed out. And now maybe that's it. Maybe that's what you needed.
I sold some putties in bonds. I'm going to talk about that for option trades today, around one standard deviation. And I did a pretty aggressive trade in VRT. Not the greatest markets in there, but down 17% from its highs. I don't know. Flyer? I don't know. We'll see.
Yeah.
1x2 put ratio spread. You'll hear all about that in option trades today coming up immediately following these messages. Thank you so much, Ryan. Appreciate your time. We're going to take a quick 90-second break. Volatility up 7 cents. Even the S&P is $6 off of their lows. Bonds just a couple of ticks off of their lows.
I'm going to participate in your VRT.
Oh, good for you. Good for you.
Oh, ratio spread.
Yeah, that's what I did.
Up back to highs.
Beautiful. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. It's always electric when the ladies are alive. Peace.
Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I've got huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it's a wild day at the SIBO.
I was going to say hot day at the SIBO.
Oh.
Hot.
Man, there's a jacket rule down here. Liz and I were trying to break it and take these jackets off.
I don't know if you know anything about Liz and Jenny, but the rules are...
There are no rules. One of these days you may see us without these jackets on, but today's a hot one in the city.
It's a hot one in the city. You know what, though? But I will tell you, there is, down here, it's definitely different. And we remember this from when we were on the floor. It is almost like no one's sitting, right? So you've got lots of movement. You've got lots of activity. We've got a day when spoos are down. What are they down right now? Spoos are down
60.
57. Yeah, we've seen them down as low as 70. So there's some action. You're seeing some sweat. You're seeing some tears. Not really tears. I'm just kidding.
You're not seeing tears. You're seeing some sweat. It is hot, and it's very humid. And Chicago's an interesting city. It's a beautiful city. It gets humid. Why does it get so humid? Because we're on Lake Michigan?
Jenny, I am not a meteorologist.
I don't know.
That's a great question. Let me look into that, and I'll get back to you.
There was a beautiful bunch of women here today ringing the bell for women in literature, and they looked amazing. Liz and I come walking in off the train, looked like we had just come out of battle.
They thought they let two homeless women in.
Like, why is the SIBO letting these two homeless ladies get past the security?
The security.
I mean, we looked crazy.
Yeah, well, that's a story of our lives. Okay, Jenny, let's, only because it is a Wednesday, we love being at the SIBO.
All right.
We love being in front of the SPX pit. These guys have been going crazy. You're not going to hear it as much, though. I've been told that our microphones mute the sounds, so you can't hear them. They can't
hear the noise.
They've been active.
I just want to say, our comment of we look like homeless people, no disrespect to the homeless community. I actually know two people who are homeless. They choose to look.
No, it's just a look. There's no disrespect.
I just wanted to bring that up. Anyway, 53, down 53. Let's pop in the platform.
Okay, let's do it. SPOO's down 53. Well, okay, so let's take a look at this. I'm going to go to SPOO's. That's what we quote, although we are in the SPX pit. And this is kind of confusing because we will speak in SPOO terms, meaning what I have highlighted right here. These are the SPOO's. So we're saying SPOO's are down 52 right now.
Yeah.
SPX, which is where we are right now, is down 53 as well, but it's a different price. The SPOO's are 73.75. SPOO's are 73.52. I'm sorry, I'm backwards. SPOO's are 73.72. SPX is 73.51.
Got it. So
it's different though.
They are, right. And then SPY, you'll see if you type in SPY, we've got SPY at 733, which is similar to the SPX, which is 73.51.
No, they're not. It's not the same.
None of them are the same.
None of them match.
None of them are the same. So just easy to quote the SPOO's. That's what the future. That's what we're quoting.
Yeah.
Yeah, sorry, I was thrown off with the homeless comment. Because we do have a big homeless community here in Chicago.
I know, but this is a trading show. We'll move keep, in the words of Walt Disney, keep moving forward.
All right, okay, here we go. Let's talk about what's moving today. Most of the market is red, although we have a little bit of green. One thing that's green is coin, which is weird because Bitcoin, the cryptos are all down.
So I'm going to highlight on the side, Bitcoin US dollar, which we have on the side right there, is down 200. I don't look at the price of what it's down, or if it's red, I look at the price. Bitcoin USD is 76. It was as high as 82 last week.
Yeah,
so
maybe,
it's down.
I think even 83.
Yeah, it's down for sure.
I think even 83. So coin's up. Why? None of the other crypto stocks are up. It's odd, right?
Yeah, that is a little interesting. We don't have a lot of the other crypto stocks, but we just do have.
If you take a look at Robinhood, which is it's
we don't have
correlated,
Robinhood, but we don't have
Robinhood. That's down almost 5%. Got a lot of the cryptos down, so I'm not sure if there was news in coin, why it's up $2, but it's just one thing I noticed. Most of the screen is red, coin's up.
And we have a diagonal in coin? No, we have a put spread. We have the 175, 160 put spread in coin. It's really not that much.
I'm taking a look at the like NASDAQ 100 biggest movers that are green versus red. A lot of the green stocks today they're nothing that we really trade.
No, and you're seeing it is kind of cyclical. Hold on, I'm going to move this. Okay, so NASDAQ's down 1%, SPOOs are down 0.75, and then you got your Russell, which is down 1.5%.
Yeah.
So the Russell is the biggest mover to the downside. We were talking about that a little bit today.
Interest rates. We've got yields up, bonds down again. We just put on another ZB trade yesterday, and bonds are down to 109. Where are they? ZB is 109. Oh, we used to 109. It's funny because I see 109.27. I guess I'm still looking at ZBM and you're looking at ZBU.
Yeah, so if you look at which is our positions, we're in ZBU, so it's 109.10. We have the 108, 107 put spread in. It's losing a little bit today, but we're still out of the monies. But that's why we like to sell options. We still have a little bit of room to be wrong.
Talking about quoting different things, you look at the side. If you're looking at the side where we have all the futures, that's still pulling up ZBM, which is almost gone.
It's got 3 days left.
Yeah, almost gone, and then we switched to ZBU.
Yeah. Yeah.
Biggest, when I look at these NASDAQ stocks, biggest one to the downside today, Qualcomm, down 5%.
That's a drop in the bucket for Qualcomm, because take a look at its chart. This looks like what a lot of those tech stocks have looked like. A skyrocket, a rocket ship up.
Look at the movement, look at the move down in the last week.
But that's the same thing with your Intels, your things like that. They've skyrocketed up and then come falling back down to where they were maybe 10 days ago.
Yeah, Intel down $4 today.
Yeah, if you take a look at these charts, they all kind of look a little bit like a skyrocket up, skyrocket up, and come back down.
Down a little bit. I am.
Well, everything has to kind of come back down a little bit,
You know what I think we could take off? I'm gonna do a little research into our history. But you know how we put on, and I don't know how many days ago we put it on.
You got it. More sugar. What are you looking at? So I can share with the class.
In SPX, we put on an iron condor for 580. 580 was our 45-dayer. And now it's trading 470, 475. So it's a $100 winner. It's just a thought if we want to, I know we'd like to trade SPX, and if we want to have more SPX trades on or put on more short-term trades, there's nothing wrong with taking that off for $100.
Okay, so this is a jade lizard. So we've got it's 580. It's $20 wide on the bottom and $5 wide on the top. So if you take a look at that, I'll go to the regular. We have it in the May. No, that one's gone.
Right, it was the 45-day Jade Lizard, and I think we put it on. Let me take a look. Last week, exactly last Tuesday on the show.
Yes, we did. So here,
maybe. Oh, hold please. Maybe we want to do, since we put this on last Tuesday, and that was our YouTube trade, this 45-day Jade
take it off and put it on.
Maybe we want to do some adjustment, make some adjustment. Maybe we want to take it off and do something else in SPX.
Well, we could take it off and put another one on in the 45-day. You're going to move your strikes.
$100 in 7 days isn't bad.
It's not bad in these SPX. We had a GTC in for 25%, I believe, and that's the GTC we have in there. These are Jade Lizards. These have been doing pretty well. They really have been. It hasn't moved too much or hasn't swayed too much from where it is. I have no problem taking this off and shifting. Let's take a look. Let's take a look at what we could put on before we take this one off.
Okay, all right. So let's go to our position page and just take a look at this. We've got, if you open up our Jade Lizard here, we've got a handful of SPX positions.
Here, I was going to the one that's actually in. So we're in the 38-day, and you can see up here we've got this 75, 25, 75, 30.
Which we started that close to the expected move.
Yep.
And we can see how that's changed.
And then we've got the 70, 20, 7,000, and that was at the expected move as well. So the market has come down. Yes.
Well,
no.
So when we put this on, this was at the expected move, but that was a week ago. So the expected move is smaller than it was a week out. Because if you look at the 38-day where we are, we've got an expected move of 298. And if you go to the 45-day, you've got an expected move of 319. So the expected move came in by like 20 points.
Let's close this and let's put another one on in the 45-day cycle. I think these Jade Lizards are good. They've been very good to us.
Was that your son about his SPX trade? So I figured as much. So her son sells put spreads in SPX
and I'm instantly sweating.
at 9 o'clock. And at 9 a.m., SPUs are down 25.
Yep.
So when he sold his put spread in SPX, SPUs are down 25. SPUs are down 51, and he's probably calling to say, Mom.
Yes, he is. It's pretty funny though. I was telling Johnny, he's so mechanical because he doesn't really understand trading yet that it doesn't affect him where the market is.
Yeah.
So he's mechanical, 9 o'clock, doesn't know what he's doing, goes to the bottom of the brown bar, sell, buy, call it a day. And then he calls me, he's like, did I put it in right? Yes, you did.
And put it in right. It's just the market's down and it's losing right now, but
it's not even out of the money yet.
Oh, it's not even in the money yet?
No, it's not even in the money yet. It's right there.
And yesterday, he was sweating it, and it ended up being out of the money by the end of the day.
I mean, that was by the skin of his teeth.
Really by the skin of his teeth.
That was the craziest thing ever. Okay, so this is what we're going to do with our Jade Lizard, Jenny. I kind of agree. I think it was a good catch that you called. So if we sold it, I'm going to pop out the side. So this one here we sold for... You can see it right here. We sold it a week ago, $5.13 for $5.80. I'm closing it right now for $4.50.
So yeah, we made $130 in a week.
$4 and...
Yeah, what are you buying it back for?
It keeps bouncing around.
Oh, okay. Well, I think we can at least take $100 out of it.
So I'm going to go $4.80?
Yeah, I think so.
Okay.
So if we sold it for $5.80, that was an easy fill. So we took $100, but in a week, well, that's not bad.
And now let's move that out to the 44-day because there is no 45-day, and we're going to go through the exact same process. Jenny Andrews, we are now trading the July 2nd cycle.
Options make you live in fast forward. You're always living a month out. So now we're trading July, which that's halfway through summer. It's kind of sad. I don't like to think of being halfway through summer.
It's already over. Summer's over.
So when you're trading options, you have to realize, but this is May. This is May 18th, 19th. This is May 19th. We are not in July yet, but we're trading July.
But we are trading July.
And before you know it, we'll blink and it'll be July 2nd.
So with these Jade Lizards, we've been doing a $5 wide on the top at the expected move and a $20 wide on the bottom at the expected move. So if we're going to do that, I'm going to go to the 76.75 on the top.
Got it.
76.75. Oh, you can't. Nope.
What do you mean?
They're all $25 wide.
Hold on. 77.
We're going to go to a different cycle.
Instead of the 44-day,
52?
Let's go to the 52-day. There we go.
Okay.
Wait. Yes. No. All $25 wide strikes as well.
So we're going to go nearer term. I'm going to go to the 42. Let's see that.
Maybe we want, and I don't hate this. I don't mind just an iron condor. I don't mind just an iron condor instead of a jade lizard.
But I did $5 wides
What cycle?
in the 42-day.
That's fine with me.
In the 42-day, we're going to go to the 76.45, 76.50, okay, for $1.30. Then I'm going to go down to the bottom. I'm in the 42-day
So
cycle.
you're in the 42-day cycle. It took us a while to find a cycle that has $5 wide strikes in SPX because many of them just go by $25 wide. So be careful. And that's one thing to mention.
To JD, because I keep telling him, well, 0 days will always have that.
He's got the 0, if he's trading the 0 day, but he can't just blindly open up a further out cycle, go to the end of the Brown Bauer, the expected move, and sell a spread 1 strike wide and think it's $5 wide. It could be 25. You have to watch that. Sometimes it's 50.
I know, but the 0 days always has $5 wides, which is good. So he doesn't understand it yet. What's great is I am going to be putting together a segment with Annabelle where we're starting from the basics and going through.
Oh, I didn't know we can announce it.
I did. I just did. Can't stop me.
It's going to be a new Where Do I Start? I don't know if it's not going to be called Where Do I Start, but there's going to be a new beginner.
We need names. We're springboarding from Dr. Jim's Where Do I Start? She's going to watch the episode. I'm going to watch the episode. Then we're going to actionably place what he does.
Yeah.
And we'll start with stocks and options. And we're eventually going to get rid of, we're going to start with stocks and ETFs. We'll eventually get rid of that and be zinging 0DT SPXs.
And what I love is that once she's through this session of learning how to trade, she could be our fill-in.
I know. I thought the same thing.
She could be our new fill-in. You're going on vacation?
You're not going to believe this.
Put in Annabelle. Although if you're on vacation, Annabelle's probably with you. But if I'm on vacation, you've got Annabelle.
Who's to say? I don't think I'll be with her because she's going to be in college and I'm going to be traveling like nobody's business.
Yeah.
You might have Annabelle a lot more than you think you do.
So I'm excited for that. She's going to be great. She's a math whiz.
She is a math genius, which is helpful. That's why I did it with her and not him. Hold on. I hope he's not watching. But let's go. Let's finish this trade. So we've got a $5 wide on the top. I'm going to go up again. So we have the 76.45, 76.50 on the top. And then on the bottom,
You can go all the way down to 70.50, 70.30. Oh, and it's just shy of that's 435. Let's bring it up. I guess
I just went to 55.35. It's still 430.
And if I bring it up to the 70, 60, 40,
I'll go 430. I'm fine with that. Here, I have 55.35 for
this
430.
is a 42-day trade.
It's okay.
Yeah, I guess so.
Yeah, we're very wide.
It is.
We're very wide. Now, if I wanted to collect over
And if
5.
you're only getting 430, then move it as far as you can. If you're
That's
getting
what I was gonna
450, then
think.
move it as far as you can.
And if we only want $100 out of it, I'm going to go 25.45. 25.45. Actually, I'm just going to go. I've got it locked. 440.
So this is shifting up quite a bit. I'm looking at our strikes from our previous one. We had the 75.25, 75.30. Now we're going to 76.45, 76.50. And to the downside, we have the 70.27,000, and it's coming up quite a bit. So maybe move it down a little bit.
Move the call spread down a little bit?
The put spread down a little bit. Yeah, maybe we want to shift the whole put spread down.
I'm going to shift all the strikes down. Watch this.
And make sure it's moving by the right amount.
It is.
Because it was nice that we could close the trade for 480 because we took in 580. Let's try to take in a bigger credit.
Here's how you do that. This far out. Okay. I'm still going to the 70.50, 70.30, 70.25.
Okay.
I went $25 on the bottom.
I think that's good.
And I can go $10 on the top if I wanted to.
Just by moving that $25 wide on the bottom, you get
515.
Yeah.
Yeah. It's bouncing around 515, 505.
We want to have enough credit so that we can take it off if we want to.
Okay. Shipped. Done and dusted. So each week we put on an SPX Jade Lizard. We've taken it off. Tomorrow we've got Jacob Study. He's springboarding off last week's. We still have last week's in. We have 2 days left. It's almost near max loss, and we can take a look at that. But this concludes our YouTube.
It's weird. We did a very tight, almost like an iron fly, but we're probably 100 points away, maybe more, 150 points away or so.
I'm literally going to.
Liz, I think you can take off your jacket.
I'm having
it's so hot in here. These lights are hot. This floor is hot.
This is
outside, but it's all right. We have NVIDIA earnings coming, and so that's going to move the market. That's going to move the market. So
I mean, it's expected to move the market one way or another. Let's take a look at that.
The market could end up moving right back to the middle of that strike, the middle of that trade.
It very well could. And we can look at the probabilities of that happening as well. Just like you were talking about yesterday. Now, granted, I know we were talking about my son's account, but when he sold his put spread yesterday, SPOOs were only down about 20. We went down a lot more than that. And by the end of the day, we were right back.
Well, now we're only down 47. And honestly, I've been watching because I had an XSP position today that's expiring. And so when we were on the train, SPOOs were around 50 or 60. Then we bounced back. We were only down, because before 9 o'clock, we were down 50 or 60.
Yeah.
Then we bounced back. We were only down 25. Then we walked on the trading floor. We were down 60 again. Now we're bouncing back. We're only down 40. We're staying kind of in this tighter range of.
Are you surprised? Hold on, I'm just going to show
25 to
this.
60.
And the VIX is down from where it was this morning. We were at 1826 this morning when we were on the train at 8:30.
Now it's in the 17 handle. Because we're not. So I think if you would see SPOOs down 30, SPOOs down 50, SPOOs down 60, SPOOs down 70, SPOOs down 80, we're not getting that. We're getting SPOOs down 60,
Back to 50.
SPOOs down 25, SPOOs down 50, SPOOs down 45, SPOOs down. And so because we're getting that kind of back and forth, VIX is at 1799. It's not a down, down, down.
It's not.
No.
And it was the same way yesterday looking at the VIX. It was kind of like a pushing over a pop machine yesterday too, where we kept pushing it over and it kept rocking back
and the
and
pop
forth.
machine didn't get pushed over.
No, it never got pushed over. It came right back up, right?
So right now, there's not. We're not. I mean, listen, SPOOs down 50 is, that is a 0.7% move. This is nothing.
Oh, 0.7, exactly, 0.73%.
Yeah, this is nothing. So then the vol shows it. The vol isn't scared. The market's not scared.
But let's show. Okay, hold on. I want to see something. So we're going to go because we're in the market. NVIDIA's earnings are tomorrow after the close. By the way, Jenny and I are on last call, so we will be doing today's earnings today.
This is even a trade we can do in last call. I wonder what earnings we have today. Let me take a look.
So we will be on last call, but we're going to take a look at this. Let's look at it now, and then let's look at it again on last call because I think it's pretty good.
I don't think we have that many earnings for today, if my memory serves. Today,
Here, I will.
Target and Lowe's.
I will jump in so the class can see.
And I had to go scroll back to Bob on Fires from yesterday.
I'm trying.
So I see on Tuesday we have Kava, ADI, BFC, Zim,
Target, Lowe's,
TJX, and VF.
I mean, it's not bad.
No, it's not bad.
So that's what we'll be looking at today in last call. So let's do our trade today in NVIDIA. No, this is kind of an NVIDIA earnings trade, but it could be a pre-earnings trade. So what we're looking at here is NVIDIA's got a $12 expected move.
And I will say, okay, before you start this, I will say that this could also be our YouTube trade of the day. And you guys can choose.
Vanetta's got two choices today.
Vanetta cuts these. Vanetta, the world is your oyster. This could also be our YouTube trade of the day.
So this is Liz and Jenny getting creative with something. This is probably not what one you'd see normally on the network.
No, but XSP has been on my brain since we've run into a man here in the cafeteria here at the Board of Trade who only trades XSP.
Okay, now the reason we're jumping around is we were in NVDA. So we're looking at they have earnings tomorrow. It's got a $12 expected move. Now we believe that NVIDIA could move the market, which is why we jumped. SPX is too big for us right now in this account. So we're going to go to XSP, which is a very small nugget. It's one-tenth of SPX.
So NVIDIA earnings are May 20th after the bell. So what we're thinking is getting long some XSP that will be the day after NVIDIA earnings.
Or short. Aren't we doing both sides? Are we going to do double diagonal?
I mean getting long gamma.
Okay, there you go.
I'm going to say getting long gamma.
There we go. That's the word we're missing.
So how do you get long gamma? You buy both sides, right?
Yes.
So we're buying options. We want to have long options.
Yes, correct. We're going to have long and short options through NVIDIA earnings.
Our short options are going to fall off before NVIDIA.
No,
earnings.
I'm sorry. We have bullish and bear. I've used my words correctly. Our bullish and bearish positions should be through NVIDIA earnings.
I'm going to give it away. We're going to buy a call and buy a put that expire the day after NVIDIA earnings, and we're going to sell options that expire right before NVIDIA earnings.
Correct. Okay.
But again, depending on what time NVIDIA earnings come out, XSP what time does it close? It cash settles, but it closes at 3:15.
The 0 day is always at 3 o'clock. The 0 day is always at 3 o'clock. It's the other ones that aren't.
Even though XSP is traded on the SIBO and this bell rings at 3:15?
No idea.
I don't know. I'm not saying, I'm just saying.
Okay, so then let's go. We're going to sell. We could sell the 0 day today if we want to.
Okay, so
let's do that. Let's do the 0 day today, because then NVIDIA earnings will not be a question. We'll sell the 0 days.
We're not going to get any premium.
You can get something for it, but I think it might blow through.
Yeah, it might blow through. We'll just stick with that plan. We'll stick with our plan. You get all cash settled, so no harm, no foul. We're going to sell the 1 day. And when I say no harm, no foul, we actually have to...
Could be harm, could be foul.
Yes, when you're playing with these cash settled products, if the 1 day is if one of your 1 day trades is very much in the money, and you've got along the following day, you're going to end up, getting cash settling that is, say $5, $6, and then the next day the market moves the opposite direction, and your long isn't worth anything. So you have to be careful when you're doing these calendarized.
Hi, my name is Liz, and I have lost a lot of money
with these calendarized cash settled trades.
Correct. But here I am to live to trade another day in it, so let's try it again.
Yeah, we've been trading since 1997. If we could last this long, anyone can.
Correct.
All right. We're going to go to the 1 day and look for $1 and $1 on a call and a put. We're just selling.
The 1 day put, I'm going to 728.
Maybe not even $1 on the call. Maybe we want the 740 call.
I went to the 741. I went to what's it called? The standard deviation, right outside the line.
Okay. So
I'm getting 155, $1.55.
So all this is going to do is reduce the cost of our straddle we're buying in the next cycle.
Now I moved it to the 470 to be a little bit more symmetrical with it. So we're getting 174.
I would say 740. What are you looking at?
740 and 28. So the 40 and the 28.
So we're getting $1.10 on the put, and we're only getting 64 cents on the call. I'd bring it down to the 739.
739. We're getting We're almost getting $2.
Because I think that straddle in the next day is about $9. So this will reduce our cost by $200.
We will have to look at this at the end of the day. We'll be on last call. If this
tomorrow.
We're on last call today, but if this needs to be managed, it can.
It's going to have to be managed tomorrow.
True.
We're selling the 1 day. We're not selling the 0 day. We're selling
to 1 day.
Tomorrow's strength. We're selling tomorrow's at the expect to move strength.
This is a risky trade.
We have to watch it tomorrow afternoon. We have to. If one of these are in the money, if one of those are in the money tomorrow afternoon, we have to close that call and put up that side.
Yeah, but both.
The call, or I mean the put,
the puts or the calls, like the pair together.
If the puts are in the money,
finish the
we
trade.
have to close the puts. If the calls are in the money, we have to close the calls. If nothing's in the money, that's exactly what we want to happen.
Let's finish this trade and then we'll talk about what we're doing. Then we're going to the 2 day and we're buying the straddle. So I'm actually going to split the difference a little bit. I'm buying the 34 put and the 35 call. Sorry, I got to buy those.
And that's May 21st. So you see that May 21st straddle we're buying. NVIDIA earnings come out May 20th after the bell. If our strikes that we just sold are all out of the money, great. Then we have this straddle in XSP the next morning after NVIDIA earnings. If NVIDIA moves the market, we have a chance to make some money.
Correct. Okay, we're paying $6 for this. Now, we know that we got $2 for the shorts that we were doing. If you want to eliminate most of your risk, don't do your shorts and just pay $8 for the longs.
We're just trying to get this at a discount.
We're trying to get it at a discount. I'm a fan of what we're doing. I just want to explain that if somebody wanted to spend an extra $200, then you don't have to worry about what we're worried about here. But this is not bad. So we'll have an.
Hold on. We got celebrity sighting. Celebrity sighting.
What's up, ladies?
Walk this way.
Can you moonwalk?
The viewers love to see you.
Good morning. Good morning. Have a great day, everyone.
Anything big going on in the pit?
Not really.
Okay.
Except the market going down right now.
Yeah. For the first time in a long time.
Nothing exciting going on today. Just a little bit of
froth
and patience. So I guess waiting for NVIDIA earnings. Are all eyes on NVIDIA?
I think so. I mean, suppose we're down 65 again. We are bouncing around. I mean, it is a down market.
I'm surprised JD didn't call again.
He'll be calling soon. He'll be calling shortly. Okay, so let's push this through. So what we have here is and you can see this, we are long a straddle, basically, just out of the money strangle in XSP 2 day, and we are short. So it's a double diagonal, 1 day, 2 day in XSP.
Double diagonal, that's perfect.
It is a double
diagonal.
diagonal.
Got the put diagonal, long the 3 day at the money put, short the 2 day at the expected move put, and then in the call diagonal, long the 3 day at the money call, short the 2 day at the expected move call. again,
They have to be paired that way. I have to pair them as a diagonal because otherwise it's straddle strangle swap. But you need to close the calls together or the puts together if things go wrong.
The options, if the May 21st, no, the one day, what are we in, the 1 day, 2 day?
We're in the 1 day, 2 day.
Okay, we're in the 1 day, 2 day. So if the 1 day options are in the money at the end of the day, we have to close that side. Calls,
Yes, ma'am.
calls, or puts.
Shipped.
This might be a little tricky.
This should not be our YouTube trade of the day, Banana.
Banana, you heard it here. Liz thinks this should not be our YouTube trade of the day.
Okay, so we're attempting to buy that. I'm going to penny it up by. I'll pay $6.12.
And we're filled. I don't mind that trade.
No, I like the trade. It just requires some monitoring, right? So that's all that it requires is monitoring. And I also think trades like this are very excellent for learning purposes, for us, right? So what we're looking at is seeing how things work. We did vet it out where we traded the calendar in SPX, and exactly what we thought was going to happen happened. Where our one expired way
No,
money.
but that's totally different. That's on the AM PM settlement.
Could be the same thing. Depends on if you let it go. Like you can lose more than you think for a calendar unless you take action.
No, but that was an AM PM of the same day.
Yes.
You couldn't take action. You couldn't take action because you had the AM settlement, and you could. She's bringing back. She's got horrible memories.
I'm still sweating.
PTSD. It's making her even hotter. Thinking about the old SPX AM PM settlement.
Yeah, AM PMs never do that.
Never do it. Never again.
Never
okay.
again.
Do you want to get into our option drive?
Sure. I'll do that now. We'll go to options drive. This is the research corner. Kai puts it together for us. This is wonderful. We are taking live tweets too. Put the hashtag LIZJNY.
Okay.
There you go.
What's going on?
Trump and Xi's summit delivered positive trades and AI signals, but no Iran breakthrough kept the risk premiums elevated.
Borch took over the Fed with 2026 rate hike odds jumping from 1 to 45% in a month, which is why you see the bonds down, yields up. We're seeing that we're taking some heat on our put spread we sold in ZB yesterday.
Yeah, we are living bonds down, rates up. The 10-year yield hit a 1-year high as oil climbed back near 100. It's down today, though.
Three of four major indices ended 6-week winning streaks. Only the S&P 500 barely kept its run alive.
Yeah, isn't that crazy?
Yeah.
So even last week, it was up.
Yeah.
Okay.
Now, I wanted to see where, I know we mentioned oil. I just want to take a look. So CL is barely down. It's trading 103.
It was down a little bit more today, I thought.
Yeah, now it's only, it's barely down not even 1%.
Not bad.
But 103, you would think like what you hear sometimes on the news, you would think oil would be a lot higher than 103.
I mean, if you hear these news stories, it's insane.
In Indiana, I only paid $4 a gallon.
It's not bad.
No, not bad at all.
Just cross the border, get some gas. Okay, these are, we'll go through these pretty quickly because they're all on the screen. So these are just some news that are happening. Putin arrives in Beijing, FOMC minutes, NVIDIA earnings, and S&P Global Flash PMIs. I don't even know what that means on Thursday, but I'm excited for it. And here's the...
I don't know. Okay, so the weekly performance, you could see the week of 5/11, which was last week, first time we saw red. Again, everything except S&P.
Yeah, S&P barely eked out a positive week of 5/11.
We need to see a few red weeks. We've had too many.
7 up weeks in a row.
Crazy.
Mm-hmm.
Crazy.
Yeah.
So
7 up.
this makes sense. It's healthy. It's healthy for the market to have a little pullback.
And the Russell's I guess it doesn't surprise me. This is what we should see if interest rates are up. But the Russell's down the most.
Well, yeah, but that's usually what you will see.
Yeah, that's usually what you do see.
Going
Okay,
higher.
then this is what I like to see too. So here you can see the VIX is 18.4 of this week, and so at $123 expected move for this week. SPX.
Yes, and the jump up from 97 the previous week.
But so
because last week we saw pretty much a red week across the board except for SPY.
And the VIX isn't higher. Take a look at that. So, up, we got 17.2. And then we've got one where it's mixed and it's only 18.4.
And the crazy thing is that today it was back in the 17 handle.
SPX. Let's take a look at the expected.
Down day yesterday, down day today, and we've got VIX lower.
Yeah. So they expire on Wednesday. So right now we have a $93 expected move for the end of the week. Which is, so it's not, we're on Tuesday, we're halfway through it, there's a $93 expected
So
move
even
for the rest of
less
the week.
than the whole week's expected move from the
Previous weeks.
previous
Yeah,
weeks.
which is crazy.
So,
Okay.
This just we're looking at IVR, what IVR is increasing or decreasing. Even though S&P ended the week fairly unchanged, the IVR still popped.
It popped. 45 is still a high IVR for S&P 500.
Yeah.
So
Now
it popped a
bonds
little bit.
make sense because we've been seeing the drop in bonds. It makes sense that the IVR is going higher, and there's a little more premium in those options. You might see a lot more players in the option game.
Yeah, you might. Okay, next up, these are the biggest S&P movers this week, meaning last week.
Right. Now, again, what do I take away from this? I like to see what had big moves to the downside. I'll take a look at those and look to sell puts in there. That's usually my go-to.
Also, you're not going to do Campbell Soup. You're already in.
And Campbell Soup has had a little run. Campbell Soup, since this must have come out, take a look at the run Campbell Soup has had.
CPB. It's up again today.
Look at the chart. Take
It's a
look at
bucker.
the chart.
It's bucking the trend. Look at this.
Who says you can't keep a good soup down? Look at that move. Yeah, it's had a little bit of a run.
Yes, it has. Okay, now our next chart shows this too. DXY rose 1.46, 95th percentile weekly move, breaking out of a 3-month range with one of its strongest weekly gains in a year. That's the dollar. The euro fell 0.59, and Great British Pound fell 1.21, and the Japanese yen weakened with US dollar. So we
and you see that you saw the IVR down in the euro. So you see that it's not as attractive to trade, but it's still 52%. It's still high.
I mean, these are all high across the board right now.
Yeah.
Which is crazy. Okay, then here we go. The 10-year yield closed at 460, its highest weekly close in over a year.
I told Liz I'm getting more for those boxes. You know, my in-laws, they took over some money of theirs, and I'm just throwing it mostly in boxes, in SPX boxes where you're making the interest rate, and I'll go 90 days out with the box, and I'm getting more on these 90-day boxes than I've gotten since I started. Took over this account for them in December.
Yeah.
And I continuously have some on and rolling, and I'm getting way more for these boxes now than I used to get. And we can pull that up if you want to.
So here, this is how I kind of look at it. You do 100 minus this, so it's almost like 9%, but very, very short term.
Yeah. If you go just to because we might get some questions on it. If you pull up SPX and go 90 days out. Here, let me.
So I'm not going to go to the. I'm going to go 94, August 21st, but not that morning. Okay.
Okay,
94
so
days.
you're going to go 93 days.
94 days.
Oh, 94
That's what I meant.
days.
It doesn't matter.
Okay. Yeah, it doesn't matter. And then I'll make these like $40 wide. Or $400 wide.
So can I go 7,100?
Yeah, 7,100.
So you it's combo versus combo is what's happening. So down at the bottom, I'm selling a put and buying a call. So I'm buying SPX at 7,100.
So buying the 7,100 call, selling the 7,100 put, and go up 400 points to the 7,500.
And then you do the opposite.
Sell the 7,500 call, buy the 7,500 put.
So you're getting it's $400 wide.
Well over. I've been getting so you see over $400. When I had TP on the show, I don't know how long ago, when we were walking through one of these boxes, I was lucky to get like $330 for it. $330, and now I'm getting like $430 for it.
So you take in order what she's getting. You can take
$100 more.
The max profit here is $425. That's what you're doing. You're taking $400, the width of the box minus what you're paying for it, and that's locked in. It's almost. I say almost because there is some things, but almost risk free.
It's at like max loss 0. These are because you're just getting it's like an interest rate play.
Yes, because it's combo versus combo. You have the combo to buy it at 7,100. You have the combo to sell it at 7,500, and the difference between the two is what you get to keep.
So getting over $400 for it, where I was down in the low to mid threes.
Yeah. Now keep in mind, this is a trader's way to do interest rate plays. You can always just do other things to get the interest rates.
Sure.
But here, you're using $39,560 to get that in 90 days, risk free.
In 90 days.
Yeah.
Yeah.
It's not bad.
No.
Now, what's fun about SPX, because I've been doing boxes for a very long time, like this is one of my go-to trades that I always have in there. What's fun about SPX is the wide markets. So you can push this down, and Tony from Mexico taught me that. You don't have to take mid-market, because sometimes you'll get hit because wild markets.
I will put an order in and sit on it and wait for it. But
so you could take this down and probably get $500 and sit there and then penny it up by 5 cents each time. SPX because the wide markets and because the nature of how wide it is, you can sometimes get a better film.
Sometimes, but you can let it work. It comes out pretty true to like I find it pretty true to what it doesn't sway too much.
When I was trading it before, I could get an extra $1 sometimes.
Really?
Yes, but you have to be patient. Like if you need it that day, it won't work. If you're willing to do it like the next day, then the next day, then you can get it.
I've never gotten it that much for $1, maybe 20 cents, but not.
Well, and that's because these options, when you're looking at this pit, they don't know they're together. It's not like somebody's
this like the call spread and then the put spread. It has to go on together.
No.
Yeah.
It's not workable. Okay, so that was a fun little going over the box. And then here, the SPX kept its 7-week streak alive, gaining 13.86 over that span.
Crazy.
And then the other 3 industries snapped their 6-week winning streaks, with Russell leading the pullback. Yeah.
Can't remember what network I had on today, but they were saying what their prediction for like year end and in the market, and it was like SPX 8,000 for the end of 2026.
I know what network you had on.
And 9,000 for the end of 2027.
I mean, it's a bold call.
I mean, 8,000. I can see it.
So here, we'll put our money where our mouth is. That's why I like going through this. So let's go end of the year. So I'm going to go December 31st.
There's a high probability. December 31st, you got a high probability of 8,000, don't you?
So wait, that's 500 days. No, that's 27. I need to go 26.
It's a 30%. It's a 30 delta.
Here we go.
So you've got a 30 delta. I mean, I think that's pretty high.
See what Jenny is referring to. You go to here, then you go to delta. I went to December 31st, the 8,000. It's 31 delta. So, I mean, from that perspective, you have a 62% chance of it touching before December.
Yeah, then we're going to touch 8,000 at some point this
That's
year.
a high probability.
More than 50% chance we're going to touch 8,000 before the end of the year.
And Vecchio's got his money where his mouth is. I think he's long it. That's probably him. There's 11 contracts.
Right. Yes, doesn't he have like 8,000?
There's 4 contracts. All of them are Vecchio.
All right.
And then here, this is the slide I think you were waiting for.
Oh, earnings review large movers. Well, I thought that didn't he say this already? If you go back into the biggest S&P movers this week.
The other one's just for earnings.
Oh, okay. So it's just earnings. It's I almost thought it was a double up. I always like to see what's down on the week because then I take a look at those for selling puts. And so on this, when I look at what's down, IREN, DT, HIMS, yeah, they're all good put candidates. I sold puts in HIMS today or yesterday. I sold some puts in
we
HIMS.
have puts
What
in
do we
HIMS.
have?
We have something in HIMS. Let me look at it. HIMS, we have the 22 put. We're right there. We're with you.
Okay. And IREN, I feel like we've been in that before.
IREN's down again, 5.3%. That was down a lot on earnings, right? Yeah, they had a big move down in earnings.
You take a look at it's the buying power in there is not great. So that's what I would check. Like I watch things that are down. I look at selling puts in there. In HIMS, the return on capital is crazy. You can sell a put for $1 with $200 in buying power. IREN, you sell a put for $1 and it's $1,600 in buying power. No thanks. But it's a
No
way.
bueno.
I like looking at what's down on the week to get ideas for puts.
And we are in HIMS, which I like, and we'll keep an eye on that. I do love the buying power of HIMS. I thoroughly do enjoy that. Okay, then this one, it's kind of what we've seen, a tale of two cities, right? You've got 48% winner, 52% loser. It's still wrapped around that 50-50.
Right.
Yeah.
The last slide is the earnings for the day, or earnings for the week. And today we have Kava, Toll Brothers, Target, Lowe's, and TJ Maxx.
Yeah, and we're going to take a look at all those. What did Home Depot do? We didn't do a Home Depot earnings trade.
We have Lowe's tomorrow, so let's take a look.
Home Depot didn't really move. I mean,
really?
Yeah, it's up $1. Did it move at all and then come back? Its high was 302. It's right. It's right there. Oh, I guess it opened lower. It opened at 291.
And now where is it? Down to
Now it's 300. Yeah. So it did open lower.
And we've got Spruce down 50, so kind of holding steady.
I know, it's kind of crazy. VIX is still coming down. It's only up 11 cents now. Okay, let's go to Twitter because we are going to put things on in last call. I'm going to go top down.
Just go top down, and then we'll get to everybody. So coming in on top, we've got Scott Somer. I see Scott Somer at the top.
I see a Jeep, which is very bizarre. Let me
Let's see.
Oh,
yeah, maybe I wasn't updating.
Okay, Ajit comes in first. Short strangles, expiration. He's in
Western Digital. that
Ajit's big by big. We know this.
Ajit, this is an idea for viewers. Is not an idea for us because Western Digital is $446. It's too rich for our blood. We can't afford it. But Ajit, he knows what he's doing. We had another post from Ajit, which gave a high IVR, IVP, if you look at this chart, which is really helpful. Thank you, Ajit. So he's posting this chart, sharing it with everyone. He's great. Talking about high IVR, IVP, but with low 5-day, 30-day IVR, IVP can mean the name may still be in the early to middle phase of earnings IV expansion.
Oh, this is good.
Still be room for front week IV skew steepening, premium expansion, or term structure inversion.
So you know what's interesting about that, Ajit, and I really appreciate this? That's kind of what we say about why we don't sell strangles in these, because there's still room for expansion.
Right.
Yeah, so I like it.
I do like it.
So I'm going to go back to Scott right under Ajit. So it says, I pulled the dollar ones and found the credit spread diagonal in XSP. Okay. Outside strikes in 2 days, May 21st. Inside strikes in 1 day, May 20th. It's very similar to what we just did.
Yeah. Very similar. Very similar to what we just did.
Are those our exact strikes?
No, because you could see what he's in the diagonal. Outside strikes in 2 day, 722, 728, and the inside strikes, he's making it cheaper because his inside strikes are $5 apart.
He did make it cheaper,
Yeah, he
and
made
that's
it
not a
cheaper.
bad way to do it.
No, it's not a bad play. Not a bad play.
And then he comes in, or would you want a Jan CBRS, which I do want to look at, Bob on Fire.
Okay, so that's the new product, and I could just see from the strikes, it's trading. I know that a Bob on Fire is buying at the money, so I could tell you CBRS is trading 320. So it's trading 320, and you get in at 180. That's your put strike.
Take a look at this though. If I'm not even going to go to it. We know the Bob on Fire strikes.
Yeah.
So you have from 320 to 450 in profit potential.
$12,000 in profit potential.
Yeah, and you're in at 180. Let's take a look at it.
CBRS. All right, CBRS, Bob on Fire. I'm going to guess he had to go to Jan 2027.
Yep.
Or no, yeah, probably. Sometimes now with the Bobs, we're going out to March. Sometimes they're going out to March.
So look at this. Who's the 320, 450? That's all the strikes that you have. For $32. So you have to find a put. Did I do that right? Buy that, sell that, yeah.
So this, just so you know, the day it opened, 350 was the opening print for its first day.
So you can go. I know he sold, I think, the 180. If I'm getting 320, but I know Scott Sommer likes to take in a collection, so I'm going to put in his exact strikes.
320, 450. Well, we don't even have a call that's half the.
No, I know that's why he went to that. So
yeah.
320, 450. So he's taking in $19 in credit. I'm going to keep going down until I don't take it.
No, because we could sell the 155 put.
I know. But he takes a giant credit, Scott Sommer, when he puts these on.
Okay, look at the buying power on this trade.
To the tune of $30,000.
So it's completely cash secured. Completely, not even margin. It's completely cash secured, right?
And the lowest you can buy is 140.
Or no, I guess it's if you're buying a stock at $150. That's $15,000. So to say because we'd be buying it at 155.
And it's 2.
And so it's completely cash secured. Normally margin would be half. So if this were trading on you own the stock and the stock is trading on margin, it'd be using 15,000. So the fact that it's using 30,000, but I don't mind this trade.
If I try to push this through, we don't have enough buying power. It's not bad though. It's not bad. But let's take a look at this. I know it's cash secured, but let's take a look. Is there anything we want to do
in CBRS?
In your regular.
I'm just going to put this out there for people. Forget the Bob on Fire. I mean, there's a lot more profit potential. But if someone doesn't want to use that much buying power, just even look at going to October. And you've got the 140 strike in October, or you want $1,000, 160 strike in October, and $1,000 using 15,000. Now I know it's a lot of buying power, but you're getting $1,000 using 15,000.
It's not bad.
It's not bad.
I pulled up a diagonal because that's something I was just saying you're doing defined risk. This is definitely something that I would not put in my margin account because I do keep an eye on the buying power. This is one thing where once this gets released, because it will, it's 5.73 million shares have traded. You will have good buying power at some point. I might wait for that.
But if you've got money sitting on the sidelines,
it's very similar to your in-laws box, because you've got money sitting on the sidelines and you want to earn an interest rate on it. This is fine. It's not an interest rate
on the sidelines, but this isn't.
But it's not risk free.
This isn't risk free. I'm just curious, like even if you did, so I'm just gonna look, like 200, 150 put spread. Okay, so just
What
go
cycle
to,
are you in?
I'm in October. I was just trying to go far out in time, and there was no December. This is as far out I could go this year. So I pulled up just the 200, 150 put spread. That's $1,400 credit, and you're using 3,600.
Correct. I mean, these are not bad.
That's a 50% return on capital.
They are not bad. They are not bad at all. The implied volatility and the expected move for this cycle is $166, which means the expected move, you can't be surprised if it goes down to 160. But it is a high probability trade.
Yeah, I think I'm gonna throw something like this on. A spread like this using 3,600 to make 1,400.
Yeah.
In October, because in this short-term cycle, even if I go to July with 59 days, how far can we get?
We can't in this account.
But you could do like here, look at this, 200, 180. 200, 180, $20 wide, you're getting $4.
So that is not bad. That's better. This is more of a high probability trade than the one that you pulled up before, because the other one, your long was at the expected move for the cycle. This is out. This is out of your expected move for the 59-day.
Oh, for the 59 day.
Yeah.
200, 180. You're getting $4 using 1,600. I don't mind it.
Those are not bad trades. There is
already some volume, so people are starting to trade this.
I mean, you know what, Jenny? Let's do for our account, I'm going to do the 200, 190.
How much are you getting?
220.
Sure.
It's not bad. We'll ship this for 240. We'll ship that, see if we can get filled.
So we're in CBRS.
Yeah, then we can say we're in it.
I
like it. Okay, now I'm going to go. He's also got an iron condor. Scott Sommer then comes in with July, 190, 200, 440, 450 iron condor.
In what?
In CBRS.
Oh, in CBRS.
Same thing.
Well, I don't mind our put spread.
I don't mind it. We're already in. I appreciate it, Scott. Thanks for the show. Oh, yes. They're gone. I got to get in the tank in Orland Park.
The kids are gone.
Well, not yet. They're still here this summer, but come September, I'm getting in the tank in OPP.
Okay, next winter when Mikey and Lady H are on their scuba trip and we see them underwater, Liz is going to be there too.
So I'm going to get in the tank in Orland Park. That's about the extent of my until I learn how to get away from sharks. Jenny will take a picture of me from the outside.
Yeah, I will.
I got to get that underwater marker that Mikey has. Where I can
the marker?
write you messages. What if my message said, "Help, Jenny"? Would you jump in and help me?
Blue Wagadoo is coming in under Scott Sommer. Happy Tuesday.
Happy Taco Tuesday.
IVR doesn't even matter anymore. 216 Delta Iron Condors, $25 legs out of one, and both closed for about 50% each. Nice, $430 in the green. Time to go hit some golf balls, then fishing.
Blue Wackadoo's my idol.
He really is.
Blue Wack. I mean, I just turned my phone on to check the time, forgetting that the giant clock with the second hand is right there.
Oh, you know what? I glanced at my phone too. I didn't realize we've got the world clock right in front of us.
Okay, and then
counting down every second.
And then Frank Walsh comes in. Wait, he's got a number 2. So hold on, I want to find number 1, because he pulled it from the YouTube chat. For an iron condor, if my call side is tested, rolling untested put side is a good idea for a down day with 30 DTE. Question mark.
Wait, for an iron condor call size tested.
So your call side's tested. Rolling untested put side is a good idea for a down day. So then you'd be rolling. Sure.
Yeah, sure. You can. You can roll up. You can roll the whole thing out.
Oh, this is okay. Here's number 1. No.
What's number 2?
Because Frank Walsh just said number 2, but I don't see a number 1.
For an iron condor, my call size tested rolling untested put side is a good idea on a down day with 30 DTE. And what was number 1?
I don't see number 1.
I never saw number 1. Maybe the guy's name on YouTube is number 2.
I hope so.
It's possible.
I hope so.
Sure. So there are a handful of things you can do. I have my 45-day SPX trades, and honestly, when the call sites were getting close in the money or tested, I moved them out 45 days, moved them up, and took off the puts. And then a down day today, I added
put the puts back on.
I added downside broken butterflies.
Oh, yeah.
And
Which is
downside
good.
broken butterflies.
For a credit, which I thought was a good idea.
Yeah, for a credit.
And you might, because we're getting this two-way action, you should put an order in to butterfly those off. Just leave it there.
Maybe.
Mm-hmm.
Maybe. But I did a wide. Like, here, I can pull one up just for an example of what I did against my calls and on a down day. Because I was waiting for a down day.
Yeah, give me the cycle.
Okay, so this is in the 30-day. I'm just going to pull up my strikes
30
here.
days, so June 18th.
I believe this one's in the 30-day. Let me check. I've got a few, but I think I did. Okay, so now I added in the 30-day, I bought the 7,100 put.
Okay.
Sold two 70/70 puts.
Okay.
And bought one 70/15 put.
Yeah, because you were collecting about 280 for it. That's great.
Right. So it's a wide. It's a wide. Number 2 is his YouTube name.
That's amazing.
So
it's so funny because we were looking for number 1. That's a great YouTube name, by the way.
So this is pretty wide, 60 points wide. You see, 30 by 30.
Yeah.
If it were a butterfly, but I'm taking it credit, so I made it even. What's the risk on this trade as a standalone?
3,280.
Now I don't have that much risk because I collect so much on the calls. Because when I originally
and you took off your puts, like you made profits, you made money on the puts, you collected so much and rolled out your call side.
Yeah, when I put these on originally, I collect $8.
Yeah.
Then it rolled them out for more credit. Then it took off the puts for like $1, $1.50. Now add this on for another $3.
Yeah, it's not bad.
There's ways to kind of keep, and I'm going to keep moving these out until I'm not even putting in a 50% GTC for all these things. I'm just letting them ride.
Oh, for these, no, because you almost have to let them go. Well, your ultimate goal was to always have a 0 day.
Right. Now I keep pushing them out. I can't keep adding more. I think I've got too many going on now.
You have a lot going on now.
I got a lot.
You got a lot going on. But it's good. I like this adjustment where you took off your puts, then on a down day, you're putting on a downside ratio spread. And what I said is put an order into butterfly it off, meaning that you could.
But I need to keep credit from this. I don't want to give up my $3 credit in case it goes back up. I want that $3 credit. That's why I think I'm just leaving it.
True. Unless you get it on, unless you're paying like 50 cents for it or something.
Yeah, unless we get a massive up move and I can put it on for very little.
Yeah. Okay, let's go back to Twitter to make sure we got to everybody. Thank you, number 2.
I think we did. And we're just about out of time.
Oh, Punish Pixels did close his Ironfly. Thank you. We closed it a couple days ago. We appreciate it. Punish Pixels is 5 for 5, I think.
I know. Well, there was one, but we took it off early for a very small loss. So you're 4 for 5, but one of them was a very small loss.
Yeah.
We'll take it. Thank you, Punish Pixels. Now, like Liz always says, go tuck yourself into bed. It is very late.
It is.
Midnight there. Is it almost 1 in the morning now?
I think so.
Yeah, it's late. Very late. That's
All right,
Boost Down 55, which is pretty much where we started the show.
It's where we started. It's where we ended. We both said unchanged yesterday. We were right.
Yeah.
We were unchanged yesterday.
All right, where do you think it's going to end today, Liz?
So I think we're going to end down 20.
I think we're going to end down 47.
Ooh.
We'll see.
All right. Everybody, we will be on last call, so stay tuned. Tune in if you want to see us two fools do some earnings.
All right, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow. See you today on Last Call.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. This is Options Trading Concepts Live, and it is a solo show today. People are taking some time off, some well-deserved time off, so we will hold down the fort here and host a full Q&A session. If you want to join me on the YouTube channel, we're streaming live there. Just pop over to tastylive. You'll see this video streaming front and center. You can throw in your trade ideas, questions along the right-hand side chat. And I've got the News and Insights tab pinned at the bottom of the chat there. We've got a ton of written content that we always put up on the News and Insights tab. We've got some PDT information for the June 4th bonanza, we'll call it. And definitely be ready for that. It's going to be a wild turn of events. I think the entire landscape of active trading will change after that day. But we do have NVIDIA earnings coming up tomorrow after the close, and it's going to be pretty crazy. 12-point implied move here relative to a 22-point implied move in June. So check out the written content on the News and Insights tab. Again, that is pinned at the bottom of the YouTube chat. So let's see. First things first, we've got E-minis NASDAQ down almost a 0.25% here. E-minis down 50, NASDAQ down 230. Dow and the Russell down as well. The Russell is down 1.25%, leading the way to the downside. Bitcoin and Ethereum kind of flat. Bitcoin has sold off to 76.5. So we're seeing some macro movements here that are affecting the entire index sector. But really, it's kind of wild because everything's down. E-minis, NASDAQ down, crude oil's down. Natty gas is up a little bit, but gold and silver down. So it's kind of everything down. The US dollar is actually making a move to the upside, which is nice for the Tasty FX portfolio. We are making back some of these losses here in the dollar franc. One more day like this, and we might be out of the water. That could be really nice here. So just continuing to trade small in here and just hold until we get the move we need. And big, nice rally today. But another day like this, we'll be right there at that break even. So we'll see. We'll see. I did close some of these positions this week, but just still holding on to mostly long dollar position. And I have some other spicy pairs as well that are just chopping around. But the main move is the dollar, and we'll welcome that with open arms. Any dollar rally, we've been playing that to the long side for quite some time. Before I get to the YouTube chat, so again, if you want to pop in your questions, trade ideas, I will get to that shortly. Just wanted to give a quick update on this entire portfolio. I'll probably do this again on Friday. Maybe things will change, maybe not. But real quick, let's walk through all these positions, and I'll talk through my plan for them. If there is a plan, sometimes some of these positions are just worthless or sitting in the spot where there's nothing to do. But maybe we can find something to do here. So micro natty gas, I bought that contract, and I paired it with a short call spread in the NG contract. So the big NG contract, the micro natty gas is 1/10 the size. I wanted to create kind of a covered call feel. So I bought the contract. It's up $266, which is nice. However, we've got this short call spread in the money. I sold that for $100. It's taking some heat right now, but that $100 of extrinsic value, I'll still be able to extract from this position. And it'll be a net profitable trade if we chop around here and we just sit right around 308. If we get below 305, that will benefit the short call spread. But either way, looking at a decent trade right now, but this now is protection for the next week. If we drop below 3, I'll make all this value back, and it'll hedge my position on the MNG. So we'll see what happens there. MES, this is the year-long trade, working out nicely. We've got the 7,600 straddle out in June, and seeing a little sell-off today. What's interesting about this position is because it's in the money on the put side, and because I made that happen with the rolls to the upside, I never want to have upside risk in here. I just want to have continuous neutral to bullish exposure and just pick up premium along the way. So went from a 7,100 to a 7,400, from a 7,400 to a 7,600, collecting credits at all times. I haven't made an adjustment in here without collecting a credit. which has resulted in 534 points of premium collected. SPX equivalent is $53,000. If you did this in SPX, you could close it for $30K and book that win. But again, this is a year-long trade. I will stay in this for the entire year. And the sell-off today, you might be thinking, well, why don't you roll into a day like this when you get a sell-off and a little vol pop? Well, first of all, the vol's not really moving, which is interesting. Still in contango across the board here. So the market is selling off, but vol's not moving. Really interesting there. It's kind of, if I were to pick one side, I would say I'm buying this dip with vol not picking up the way you would think it would into a sell-off here in the NASDAQ and the E-minis. But I'm kind of positioning myself for that anyways with some of these positions I'm adding. I'm going to trade NVIDIA to the upside tomorrow. So we'll continue to add on some bullish positions. But either way, I'm leaning bullish in MES, and we will keep it that way. But to my point I was trying to make before I went on a tangent, I'm not rolling into this sell-off because this sell-off actually reduces the extrinsic value in this position. The maximum extrinsic value I can roll into, rolling from June into July, is if the market is moving towards my strikes at 7,600, since my put's in the money. So this sell-off actually reduces the extrinsic value roll, and for that reason, I'm not going to make the adjustment. I'm also going to have to roll into the next cycle anyways, so I'm going to hold on to this 29-day probably a little bit longer than the 21-day mark, especially if we continue to rally up to 7,600. But at the end of the day, if I need to roll, which eventually I will roll into this new U contract, you can see the price is about 60 points higher than the current price that I'm in. So what that will do is if I choose the same exact strikes, the 7,600 strike, it'll reduce some of my bullish delta and neutralize it, because rolling these 7,600 straddle into the U contract, I'm naturally moving my spot price up 60 points. So again, I will have less bullish delta, I'll have more neutral delta, and I'm totally fine with that. ETH-A, got into this yesterday, just sold a slightly in the money put here. ETH-A has sold off pretty nicely here, back down to the 15-ish range. And I sold the 18 strike put in July to synthesize a covered call. A short in the money put is the same thing as buying 100 shares and selling the call against it at 18. So this just uses a little bit less buying power. Sometimes you can use a lot less buying power depending on the product you're trading. So I typically will just sell the in the money put unless I have 100 shares already and I'm trying to just capture some more premium against those shares. But just a short-term trade, I'm usually just going to sell the in the money put and use less buying power than buying 100 shares and selling the call. So we'll see what happens there. IBIT, same story here. This is a multi-year trade now, but shares at 65 after collecting $3,000. So my basis is down at 35. And I had a short call that I ended up rolling up and up and up and out from 41 to 43 to 45 to 55. And my whole thing here was similar to MES. I didn't want to have any upside cap against my shares. So regardless of the expiration, I ended up getting to July up at 45, but Bitcoin had such a big rip to the upside that I was forced to stay with my thesis of never having a cap on my call against the shares. Regardless of the expiration I was in, I was already out in July, bought back July at 45 and just moved it out to December up to 55 for a scratch. So 35-cent debit, but either way, from 41, from the initial 41 call I sold for $1, I've doubled my premium to 221, and now I'm at the December 55. And as you can see, yes, this option is out in December, but it's still going to lose a lot of value if IBIT sells off, because delta will always be the biggest driver of an option's price, not time, not Vega, time theta. So yeah, this will still lose a lot of value if we get down to sub 40 levels. I can buy it back and reestablish a more near-term call and repeat the process. So that is the plan there. Iron, we've got a 60, 80, 100 longer-term call crab trade. This was from the YouTube chat last week. Seeing a little bit of a sell-off in Iron, but as you can see, reducing basis in a big way here. The 60, 80, 100 maybe we can make an adjustment here because I bought this thing initially for $865 instead of just buying the call for $1,300. So you have a ton of cost basis reducing premium here with the 8100 crab component, but now that is only worth $100. This was initially worth $560, and now we're trading at $100. So we've made almost all the value we can out of this position. I think it might be time to see what we can do here. I think we can do something here. Okay, so we've got $8.65 from a net debit standpoint. My 60 call out in August is the strike price that I will not go below. I don't want to sell something below my long option. That just creates a sticky scenario where you have an embedded credit spread, but you wanted a rally in the first place. It just doesn't really make sense to me. So I will check out the 60 strike or something above it. I think I can buy these back for about 80 cents. And if I move this down to a 60 calendar, that could work well. I'll pick up some premium. 24 days, even if we get up to 60, the trade will still be a nice trade because my long call out in August will appreciate way more than my 30-day short call would. I could also consider going to a 5-point wide diagonal. That isn't going to yield that much premium. So I think what I will do here is I don't want to use my card of rolling from June to July just yet. You could do that. There's plenty more premium out in July. If you did buy this back in June and you went to July, I would absolutely create a diagonal spread. I would probably go to the 70 strike or even the 75, pick up $1.50. You'd end up with a 10-point wide diagonal spread for a basis of $7. Nothing wrong with that. But I think I would rather stay in June for now just to capture all that value. I know I can always roll to July and pick up a lot more premium. If we get to 2 weeks out or a week out and that premium is gone in the June cycle, I can definitely roll to July and still create a diagonal spread there. So that's what I'm going to do. I'm going to roll this to the 60 strike for $1.20. So basically what I'm doing is I'm getting rid of this crab component that has lost a ton of value and reestablishing a short premium component against my long 60 call in August and still picking up $1.20 here. Let's see if we can get it right. There you go, $1.20. So we now have a 60 strike calendar, long August, short June, reduced our basis a little bit down to 745. And if we get a rally up to 60 here, you can see this option will be worth over $1,000, given the fact that the current at the money options are trading for $1,000 at a $47 stock price. So we'll see what happens. But yeah, I like that adjustment. And then again, if we get value out of this new option, if we get less than $100 that I can buy it back, I'll just buy this back. I'll roll it up and out to July and create a diagonal spread and go from there. Microsoft, selling off a little bit. It was up earlier today, interestingly enough. That would have been the second day in a row that the market was down pretty big, but Microsoft was up. So seeing a little bit of a selling here, but I like the way this is acting, especially this morning. It was up like $5 into the market sell-off. So I like the way it's behaving in that sense, where even on a red day in the NASDAQ, you can still see Microsoft catching a bid. And I think it still has a lot of room to run. If we look at where Microsoft was, 550 up here, we hit it twice and then sold off. This was the software's dead movement. Now we're rallying back to 420, 440. You could see a nice rally through this channel. This is a big liquidation. You could see minimal resistance through this little 420 to 480 range, but we'll see. Either way, this call diagonal spread is what I'll close first. It's a 420, 435 long July, short June that I bought for $1,100. It's trading for 50 cents now, or 50 cent winner now. But I'll get rid of this one into any big rally. This longer term calendar spread, I'm going to keep this on. This one's out in January for the long and September for the short. So if we get up to 500, this will be a really nice trade. But either way, there's so much time associated with this that I'm going to keep this on. And I put this trade on when we were closer to the bottom in Microsoft. So the more Microsoft fell, the more longer term premium I wanted to harvest or inventory, I should say. And it turned out to be a nice trade. Right now it's up $500, but again, so much time left. I think we'll see a rally in Microsoft at some point this year, larger than what we've already seen. So I'm going to hold on to that one. NDX. This is a nice trade right now, but this is one we put on with Kevin yesterday. He was talking about how NDX has ripped to the upside, but volatility is still pretty low. And there's still some skew here in the near term to the downside, but of course, upside skew as you go further out in time with the way that the NASDAQ has moved. But NDX, I threw on this 100-point wide, $1,000 butterfly that's 300 points wide, the 27.7, 27.4, 27.1 out in the June 18th cycle. Bought it for $1,000. I have a working order in to close it for $1,200. These markets are chopping around a little bit just because these options are so expensive by themselves. You can see these options are $30,000, $20,000, $50,000 for the two shorts. So the bid-ask spreads are going to move around a little bit more. So I'm just letting this cook. And eventually, if the market sells off more, this will fill at $1,200. And we'll be able to book that $200 winner as a hedge. So we'll keep that on. Netflix, this is worthless, leftover from a earnings trade. Nike, similar story to Microsoft. The further Nike fell, the more I wanted to get long-term exposure in here. And I just bought the 60 strike leap all the way out in Jan 2028. Looks like they just added another expiration cycle out in June. But yeah, bought it for $500 or around there, and asked myself, would I be surprised if I saw Nike go from 43 or 45 up to 60 over the next year? My answer was no. But either way, if I'm wrong, it's a $500 risk and probably a $1,500 profit, or I should say $1,500 net value, $1,000 net profit if we do get a rally from where we are now to 60, considering the current at the money options are trading for $1,000 here. So we'll see. But that's just a long-term shot trade in a really digestible way. It's up a little bit right now. Silver, sitting at the break-evens here. I've got an 87 straddle after getting into this product when silver was going crazy and implied volatility was through the roof. Started with a $8.60 strangle, rolled from an 87 210 strangle down to an 87 straddle, and picked up $2,000 along the way. So my break even's right where we are right now at 67. Any rally from here will be good. And if not, I can always roll from June to July and pick up another $2-ish. Like, this is the worst case scenario for the credit roll, is rolling when we're 20 points in the money, of course. But if we get a 5-10 point rally in silver over the next 2 weeks, that would be great for the credit roll, and I can always pick up premium with undefined risk. So not worried about this one, and this is one I wanted to be bullish on anyways. So yeah, we'll see what happens. But again, with $2,000 in credit collected at an 87 straddle, any rally is going to benefit this position. SMR, what a trade. What a crazy result. But this is why you got to trade small. Like, I never would have thought SMR would be go from 25 to 50 in the nuclear power heyday of like, hey, nuclear power is going to be the next thing that powers AI, and then SMR tanks down to 9. But again, trading small allows me to just now hold these shares. There's nothing to really sell against this. My basis is up in the 40s. Like, I don't want to sell a 10 strike option for $1 and then watch it go from 10 to 15 or 20 on some kind of deal. So I'm just going to leave this as is. If we get closer to 40 or 35, I'll then look to sell premium against it near my break even. Snapchat, same story. Need this thing up at 10 where my basis is. SPX, seeing a nice value back today, but this is basically just a hedge on the portfolio now. I've got this 100-point wide butterfly that I converted to a 100-point by 25-point credit spread. So if we do get a big wipeout in this market, this butterfly over the next week or so, this butterfly will appreciate a lot more than it is today. But I do have these two iron condors that are taking some heat on the upside. So this one in particular, the 7,400, 7,420, any kind of sell-off will be able to get a lot more value back today. But This iron condor is currently trading for $1,200. This one is currently trading for $350. So if we just chop around this range, if we stay below 7,400 and above 7,000 over the next 30 days, this SPX iron condor cluster will give me back another $1,500, regardless of what happens with this butterfly. So a nice neutral to bearish hedge for the overall portfolio in SPX. Under Armour, 100 shares. I'll have these shares forever, most likely. Need this one back at 19. And then USO, this one is most likely going to be worthless. USO continues to benefit from the crude oil rally, but not only that, more importantly, the crude oil backwardation, which we are still seeing here, even with the softening of the backwardation that we saw. When crude is going crazy to the upside, we had like a 15-point backwardation, and that's why USO ripped to the upside, because USO uses these futures contracts to create the exposure. So when you have backwardation where you're selling out of the near term at 103, buying the next term at 98, et cetera, you have just so much more exposure with the same amount of capital. So as long as crude oil stays in backwardation, USO will likely stay afloat here in this upper echelon. It's not going to come back down to these levels, if it ever does, until crude oil drops back down to $50, $60 a barrel, and you get that backwardation out of the product. So USO continuing to rally here to the upside. But that is that. That's the whole portfolio. Again, TastyFX, seeing some nice value back here. We need the dollar franc up a little bit more, but we've got these other positions that are just chopping around, and we'll see what happens. But yeah, I'm going to pop over to the YouTube chat now, see what y'all have for me. Hopefully I can answer a bunch of questions in the next 30 minutes we've got together. What's the NVIDIA play? Good question. I'm playing to the upside. I don't know. I can't possibly play NVIDIA to the downside after what we've seen with some of these other chip stocks and AI related stocks. We've seen just absolutely insane moves. Micron up just in banana land. Intel in banana land. Same chart as Micron, interestingly enough. What else? Broadcom. Like all these stocks are just at highs. So I would rather play it to the upside than downside. That's as simple as that. So what am I going to do? I'm probably going to do something like this. I'm probably going to buy July and not buy June. I think when you look at the valuation differences between like the 225 in June, 30 days out for $10, and then you look at July, the 225, 60 days out for $14, you're paying $400 more, yes, but you have twice the amount of time for this thing to work out. You also have a 3% benefit if you're buying July relative to June. June's going to crush 3% more than July will, all else equal. All these expirations are probably going to go down to the low 40s after earnings. The 3-day cycle, of course, is going to be where I sell the option because I want to capture all that value immediately. But I would rather put up $400, give myself twice the amount of time, lose less on the IV crush, especially in a product like NVIDIA, where if it does sell off, let's say it sells off from 220 to 200, I would imagine there's going to be buyers at 200. It's NVIDIA. I think the public wants to buy this thing on any sell-off. So giving myself more time, placing a bullish trade for earnings in case it rips through the moon, I think that's the way I'm going to play it. So I'm probably going to buy July 225 if I were to do it right now, or 220. But I'm going to wait till tomorrow because I want to see what this market does. And I want to make sure that NVIDIA doesn't have a big gap up or down pre-earnings. But if it was down a little bit more today into this market sell-off, I would probably enter it today just to try and get a little pre-earnings pump, because I'm definitely going with a diagonal spread here. So I'll probably do something like this, 220, 235, or 220, 230. I think a 225, 235 makes a lot of sense too. You're paying a little bit over the width here. If we look at this on the risk graph, which is like, this is a 10-point wide diagonal spread, paying 1180 for it. Technically, there's upside risk at expiration because this call spread can only be worth $10 and you're paying 1180 for it. But it's not going to come into play unless NVIDIA goes up 100 points overnight, which I doubt would happen. So if we kick this to 521, 522, when this option expires worthless, and then we crush this down to like 40%. Let's bring this down to 40 just to be safe. You do have upside risk if you go beyond 300 overnight, but it's like minimal. But this is really what you're looking for. You're looking for some kind of rally up to 235 or in this range. This is assuming we get all this value out of the 235 call on Friday, and there's a 10% IV crush or a 7% IV crush in the 225 call, bringing it down to 40% IV. That could yield a $600 profit on a $12 debit. And again, even if this thing sells off, I can roll my 235 short call into the June cycle and pick up some premium. I could go to the 235. I could bring it down to a calendar spread at 220 if I need to, or 225. So that's probably where I'm going to end up, is just like a 10-point wide diagonal spread playing to the upside, reducing basis with the short, buying July to get out of this little IV differential here, and just give myself 60 days for it to reverse if it does sell off. Greetings from Poland. Jak se masz? Is that right? Are we in contango or backwardation? You think it's a dip? Yeah, I think it's a dip. The market's down over the last couple of days here. The market's sold off pretty decently, but I mean, this rally's been absolutely nuts. So this is not surprising to me, but I think it is interesting that the market's sold off. The NASDAQ has sold off, what, like 1,000 points, a little bit more, and volatility has not moved. It's just chopping here. So yeah, if this sell-off was paired with a bigger vol pop and a flattening of this vol curve, I would take it more seriously. But until this vol curve flattens out, which would be a result of a continued sell-off, don't get me wrong. But right now, we've seen a couple of red days here, and volatility is still in a steep contango, and it hasn't really moved. So I'm leaning towards buying the dip here, still doing it small. But yeah, I'm placing NVIDIA to the upside. I've got some other trades that I placed recently to the upside, except for this NDX downside hedge. But yeah, generally I am placing new trades to the upside in a bullish way. Can you go over the box trade? The box trade, I don't really do this. I think if you're trying to harvest interest rates, which is what a box trade does, you can invest in interest rate funds more easily, more efficiently, and be able to get in and get out after you get your dividend related to the interest rate. But SPX box trades, it's simply creating a spread. So like, let's say you are buying a call, selling a put at the same strike. That is a synthetic long stock position. And then you are selling a call, buying a put, and that is creating a synthetic short stock position. So if you're doing this, you probably want to choose these like round number strikes to get the smallest bid ask spread available. But basically what this is you're buying this for $49.65 or $49.70 over 30 days, and you get the extrinsic value equivalent of an interest rate over time. So this isn't much, 35 cents. I wouldn't do that trade because you're just eating away at your 35-cent profit with fees and whatnot. But if you were to do it like through the end of the year, and you do the same exercise of just going to a liquid product, a liquid strike, so like 7,000, 125K open interest on each side. And then if we choose a 7,200, something like this. So here you go. You're putting up 19 grand for 200 days to make $500. This is your box spread. You don't have any risk on this trade. It's literally just harvesting the extrinsic value. However, you have to hold this all the way to expiration to get that $500. And if you place this now and they hike interest rates, you'll see an extrinsic value marked loss because now SPX is pricing in the new interest rates and you've already locked in this interest rate box spread. So that also means you're going to see losses until the spread loses its extrinsic value, and you're going to have to wait longer than if you were to just like invest in a interest rate fund or something like that. So that's what it is, though. Synthetic long stock, synthetic short stock, choosing very liquid strikes so that you are not at the mercy of the bid-ask spread, and you're just trying to harvest some premium relative to interest rates. Have a 10-day Amazon put spread, 260, 230. Too late to roll? Nope. I don't think so. We can check it out, though. So yeah, if you have a 260, 230, if you're buying this back, this is an especially wide spread, so I think you're even more in the clear in terms of rolling because you've got way more extrinsic value in your short option that you're buying back relative to your long. So if you bought this back today and you moved it out to June, 260, 230, you're picking up a $2 credit because you're still picking up a lot more extrinsic value in your short option that you're selling versus the one you're buying to define your risk. So yeah, you could roll from May to June, pick up $2. It'll be a similar story rolling to July. You could also move this in a little bit if you wanted to. You could give up some of the credit received to define your risk a little bit more if that means anything to you. But yeah, you can still roll because you're near your 260 strike. If you had like a 260, 255 spread instead, now your long option is closer to at the money and has more extrinsic than your short. So that would be a debit roll. But yours, the 30-point wide, you can roll right now if you wanted to, or really anytime as long as Amazon doesn't go below 250 or 245. That's when you have you give up that credit because now your 230 and your 260 have similar extrinsic values. Is there a function on the Tastytrade platform, Analyze tab? Yes, that would allow me to see the potential on a current position if I took it off on a specific date or price in the past. In the past, not really. If it's like a short option or a long option, then yeah, you could just right click on the option. Like let's say I was long this 250 call. I could right click on this option, view the option in the chart, and see where the price was historically. But the Analyze tab shows you where the price could go to. So like this, if I analyze from the positions tab, this 18 strike put, I can use this analysis tab to evaluate like June 1st premium, June 15th premium, and change implied volatility. What happens if I crush implied volatility? And then you see this P&L Theo. So yeah, unfortunately, it doesn't show you where it was, but it can show you what can happen going forward. Let's see. SPX Iron Condor is working well with the market pullback. Yeah, I think that's a good way to think about it. Like I'm placing these Iron Condors in SPX with the initial hope that the SPX Iron Condor works out. We just chop around and I'm able to capture the value. But if I place an Iron Condor in SPX and then the market rips higher and through my short call strikes, I've realized that I can then just use these as trades I put on. They're taking heat, but now they're just downside hedges, right? If I don't move anything in this trade, the 6,800, 6,780 put spread isn't going to hurt me if we sell off from 7,360 to 7,160 or even 7,000. Like this is still going to be 200 points out of the money. So, and that's especially true as we go through the weeks, and this is a 29-day to a 22-day to a 14-day to a 7-day, like now it becomes a really heavy hedge to the downside, especially if we're just like chopping around here. So that's how I've been doing this, is just like doing iron condors in SPX, 10 points, 20 points wide, and then getting into downside butterflies that are 50 to 100 points wide when the market's ripping higher. And it's been a nice hedge against this portfolio. NDX, I think, is another really interesting one, because NDX, although again, the markets are chopping around a little bit because these are just expensive products, but I have this downside hedge that I bought for $1,000, but the max profit on this thing is like 30 grand, which tells me that if we do end up selling off another 1,000 points in NQ, that'll bring us to like right here, 27.9. And this butterfly that I bought for $1,000 is going to be trading for like 2 or 3 grand. So this is also a really nice hedge to the downside. You just got to be patient with your fill in that scenario. What else we got? From the Liz and Jenny show, short 223 puts in Lunar with a call spread, long the 32.42. Yeah, I think they did this exact same trade. We looked at this exact trade in a different product. I forgot what it was. But let's see. Short 223 puts, and then long the 32.42 call spread. It must be in July. There you go. 23 puts, 32.42 call spread. Yeah, it's just a Super Bowl. A different kind of Super Bowl. But yeah, you're ultimately selling 2 puts to completely finance the cost of this long call spread, and you're shifting your max profit from your $3 put premium that would be just flat here to the upside. You're shifting this to a positive gamma, positive delta trade that grows teeth as the market moves higher. Because this max profit here is $1,000 for this trade, as opposed to just $300 for 2 short puts. However, you give up that premium that would offset your break even from 23 down to 20. But if you're actually bullish on this thing, then yes, this is a trade that has more max profit potential, but still a high probability trade since you're routing this thing for credit. You don't lose anything in the middle here from 32 down to 23. So yeah, I like these kinds of trades. We usually do them where we're buying a call spread and selling a put spread, but this is a small enough product to where if you can afford 200 shares of stock below 23, then I like it. But that's the key. You can't be closing out the short puts on a loss to the downside. Like if you're doing a trade like this, I think you got to be willing to take the shares, because that just opens up the probability of success even more if it recovers. I've noticed that the VIX barely moved despite the market going down the last few days. Is VIX really such a reliable indicator? Could it be manipulated? Not really. I think it's absolutely a reliable indicator, but I think it's also the fact that like vol's not moving really at all, but it's still elevated at 20. So I think given the moves that we're seeing, like yes, this is a red day, but this is like a nothing red day. This is 0.5 percentage point. And I think that's reflective of the current VIX at 20. If we were to see bigger moves to the downside, over 1%, closer to 2%, you will absolutely see volatility react. You'll see this contango kind of start to flatten out. But for me, I look at the vol futures and I look at the movement, the net movement, and I make my decision based on that. So if I'm here saying, you know, this market's going to crash, I can't really say that right now, given the vol futures, how they're in pretty steep contango. But again, if we get a continuous sell-off here and the sell-off gets bigger, you will see the volatility markets react. And if the vol futures flatten out here and the contango goes away, then I think it's anything's possible and you could see a bigger move to the downside. But from my experience, you won't see a market sell-off unless and when I say market sell-off, I'm talking like 10, 20%. You won't see that kind of a sell-off unless the VIX futures are in backwardation, and you will see the market recover and drift higher if volatility is in contango, which it is. So I think given all that, I would be a dip buyer here, and I am, but I'm still doing it in a responsible way where I'm not, going crazy with this stuff. I'm keeping things really small, giving myself a lot of time for it to work out. I think that's how you got to approach it. Will you ever turn the straddle back into a strangle? I assume you're talking about the MES position or maybe silver. But yeah, I mean, I could. I think for me to turn this back into a strangle without going inverted, I would need the micro minis to rally from 7,400 up to 7,600 in the next couple weeks, because then I can buy back this straddle and roll it to June 30th or July and basically go from a 7,600 straddle and go to like a 7,600, 7,800 strangle, something like that. So for me to remove the straddle component and go to a strangle, I would like to see a market closer to 7,600, just so I can pick up a lot more premium on this upside call, or move it further out, like go up here. If we're at 7,600, I could buy this straddle back, go to a 7,600, 8,000 strangle, and probably collect a credit, because this call premium would be worth way more if the MES market was at 7,600. But until that happens, I know I have endless flexibility here, so I'll just keep going with the straddle to maximize my credit received. And even this roll right now, if I were to do it, I'm going to pick up another 77 points, which would bring my net credit received to 600 points beyond the strike, which is a break even at 8,200 and 7,000. So we're getting into like territory where the market can do whatever it wants, and I've collected so much premium that I can hedge wherever I need to. So it's good. It's looking good. And then same thing with silver. Silver would need to be up 20 points if I were to buy back the straddle and turn into a strangle again. But until then, I'm happy to just keep with the straddle, pick up premium on both sides, not have any inversion, and just lean long. Oh, just lost my spot. Okay. For defined risk trades, like an iron condor, if I have 21 days and my call side is breached, do I close it or continue to hold and hope it turns around? So iron condors, I don't really follow the 21-day rule unless it's a super wide iron condor, simply because the only point in time when you have an iron condor where you can roll that for a credit is if the iron condor is not in the money. So going to SPY, if I have a 735, 745 short call spread, and I'm trying to buy this back and move it to July, I can do it for a small credit. Likely because there's a call skew being infused into SPY the further on time you go, because of interest rates. If this were on a downside, you'd probably collect a little bit more credit. But either way, you can see the premium here is way more than the put side because of that interest rate and dividend, most likely. Where's the dividend? Yeah, so the dividend's probably coming out in June. So there's another $1.80 that's being priced into here. But yeah, rolling out in time for a credit spread, for a credit, has to be done before it goes in the money. If you have this type of trade, like 725, 735, totally in the money, and you're trying to roll this out, you're going to pay let's swap these. You're going to pay a debit to do it. And you still need SPY to drop 10 points for you to make back your value here. So credit spreads, if it's at the money, I think you roll out in time. If that's what you're trying to do, roll it out before it goes in the money. But if it's in the money already and your call side's breach, if you want to close it and reduce your loss from max loss or just lock in the loss you have, that's totally fine. But if you're like near max loss already, I don't see a reason to close it because you would just be booking that loss and anything can happen. I had a long call in SPX that was part of a calendar spread that was worthless, and then the market rallied 20% in 2 weeks, and it was a net profit. So any debit trade or any defined risk trade that is near max loss already, I'm just going to hold on to it. If you get assigned, you can close the position the next day. I'm not worried about assignment risk in that regard, but yeah, if you give me the ticker, I can take a deeper look at it. For IBIT, would you consider replacing the covered call with an in-the-money short put or a synthetic covered call? You could. You certainly could. So let's just see. Let's see. So if I bought 100 shares and I sold this call, what is the buying power effect? $2,000. Or if you just sold this put, $1,700. So if I sold the put and got rid of the shares and got rid of the call and just turned this into a short put in the money in December, I would save a little bit of buying power, but because I already have the shares and it's just a cleaner trade, just keeping it like this, I'm just going to leave it as is. But what I will do again is if IBIT sells off below 40 and I look at this call option and it goes to $100, I'll just buy it back because I already have $2.21 collected from all these rolls. If we look at my order chains, I could buy it back, capture half that value, and then get out of the December cycle, bring it back to June or July, and get closer to 43, 44 where I was before. Because I know I can always just roll out and up back to December if I need to. Dexter. Thinking of a strategy of selling puts in an underlying where I normally sell puts. Then if the market goes down, sell the long option for a profit and roll the short put. Any thoughts? Yeah, I think that's totally fine and viable. So like, let's say in SPY, if you normally would sell the 730 put, but you're worried about a continued sell-off or a market crash, you could sell the 730 put like you normally would and buy, the 700. This is probably a bad example because these puts are so juiced up with this put skew here that you're giving up 40% of your premium with your on the short put you're collecting by buying this. But to your point, yes, if you're comfortable converting this to 100 shares of stock, that's the key. If you're doing something like this where you're starting with a put spread and then the market sells off and you sell out of this long put and convert it back to an in-the-money short put by itself, which would be a covered call feel, you have to be willing to take the shares. Or you could just close the position or hold on to it and see what happens. But yeah, it's certainly a viable strategy. I like the strategy more if you're doing it in a product that doesn't have as much premium that you're giving up on the downside. So like this might be a better example. Like if I want to sell an IBIT put at 42 for $1.20 and I go and buy like the 30 strike or something like this for 10 cents, this protects you from a max loss standpoint. But if you're giving up 10 cents or 12 cents to buy this option and IBIT sells off dramatically, and then you can sell out of this put for $2 or $3, then that's going to be a nice cost basis reduction against your now short in the money put. So the less you pay for it, the more I like it. In SPY, I think it's tougher just because there's so much put skew here where like I'm still scrolling and these are all still $3 options 30 days out, which is kind of wild. But yeah, I like that strategy. But again, you have to be willing to accept the risk of 100 shares and sell out of that long put at a certain point for it to make sense. Micron is now 60 points up from its low today. Yeah, classic. This thing is flying around and will continue to fly around. 100% implied volatility. It's nuts. Can you compare the idea of buying a call or put spreads versus the butterflies? I've been doing the vertical spreads, but see you and Nick are doing butterflies, but I haven't messed with them yet. Yeah, so I mean, the vertical spreads, so we're doing these butterflies in SPX, but it's really just to reduce basis. Like if I do a 7350, 7300 long put spread, I have no downside risk, and it's very static in terms of what I'm expecting. I just want the market to go down. There's nothing fancy about this. However, if I turn this into a butterfly where I'm buying this put spread, but I'm financing a lot of it by selling a 50-point wide put spread as well. So we go to the 7250, and then we double this. So we're basically layering on the put spread on top of the long put spread. Now my max loss is way down at $2.40. My max profit is still the max profit of the long put spread, but I do have downside risk here. But if we look at my theoretical P&L, you can see this is based on June 15th, but looking at today, like nothing, this isn't going to really move too much if we get a sell-off, but if we hold this to the end of May into June 1st, now if we get a sell-off to 7,300, like this will be a $100 winner. So I like the butterflies because they give you, especially in SPX, because they give you a lot of flexibility with very low cost relative to max profit. And if the market keeps ripping higher or reverses this whole move, I can move this 7250 put in and do something like this. Turn it from a 50-point wide put spread to a 25-point wide put spread. And now if the market reverses from there, I have a lot more max profit than I did before. So I like to start with the butterfly and then hold on to it, see what happens. But yeah, that's basically it. It's just creating more dynamic, lower risk, higher reward, smaller window of being successful. But these are just like hedges anyways against the portfolio. So I like to keep them smaller in terms of monetary risk, which is why I prefer the butterfly in that specific use case over a vertical spread. I don't really do vertical spreads anyways because I would rather do a diagonal spread. Diagonal or calendar spreads allow you to capture the implied volatility in the near-term cycle. So in NVIDIA, if you bought a call spread, 225, 235, your max loss is $300 and change, max profit 617. But if you buy 225, and instead of selling the 235 in the 30-day for $7, if you give up some of that value and you go to the 3-day, you're still, this 3 days trading for $300. So, and you get all of this extrinsic value on Friday. So your max profit here on your diagonal spread versus the vertical spread is actually more, because on the 22nd, this option is going to zero extrinsic value. So if you get a rally from 225 to 235, your theoretical P&L, we have to crush this IV a little bit. Let's bring this back down to 40%. Your theoretical P&L is $600 on a 225, 235 diagonal spread, because you're getting all this short premium and you're still getting the same effect on the long. But if I do the same trade in June, where I'm buying the 225, selling the 235, yes, my max loss is lower and my debit is lower, but my max profit's going to be way lower than what we just looked at. Because if we go to 522 like we just did, and we crush implied volatility down to 40%, both of these options lose the value and you don't get all of this value. If NVIDIA rallies to 235, this option doesn't go to zero extrinsic value. It gains extrinsic value, which is why your P&L Theo is only $1.70. So great example of, lower max loss, much lower max profit on a vertical spread compared to a diagonal spread where you're really capturing the implied volatility in the short option that goes to zero extrinsic versus your long that you're inventorying delta on. So that's why I almost always do diagonal or calendar spreads these days, because it doesn't matter what product you look at. Even if it doesn't have earnings, you still will see, like an IBIT, you still see a higher implied volatility and expected move relative to the next cycle. Like if this IV was linear, you would see 30 days at $3.50, 60 days at $7, but you don't see that. You see $5, which tells you that the premium is priced into the near-term cycle, and that's what I want to capture. But that's it. Almost got to the bottom of the YouTube chat. Thanks for tuning in. If you want to reach me, you certainly can on Twitter. I'm at Trader Mikey B there. Stay tuned. We got plenty more content coming your way, though, on the YouTube channel as well as tastylive.com. And we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We're getting a little bit of a midday rally back towards some of the levels that we were trading at yesterday. A lot of volatility in the market. We got some NVIDIA earnings tomorrow as well. We got some FOMC minutes as well tomorrow and some other things to catch up on. But before we get into everything, how are you guys doing? Let us know what you're looking at. Brother Gus, how are we doing today?
Doing good. We have
Good.
our exactly matching outfits on today.
Like to a T. He's not joking.
To the toe.
Yeah.
We both even to toe. Even green pants, which is sharp. You don't usually align on the green pants, and then we come to find that Mike Butler
I was going to say, we have more
the
people.
exact same outfit. So there is a brigade of black shirts and green pants in the Tasty office today. I'm doing pretty well. Going to be keeping a close eye on Google throughout this show. Yeah. They're having what's basically their equivalent to Apple's WWDC right now, like their big conference, but they roll out new products and talk about the future and all that.
Yeah.
So going to be monitoring that news and monitoring Google stock as well to see if anything happens. Sometimes they announce cool stuff. Sometimes it's just an Android nothing burger. But we will see what happens there. But gonna be monitoring that closely.
Yeah.
I'm doing well.
Yeah.
Always good.
I'm curious to see if they're going to beat the dead horse on any of the AI names, or if NVIDIA is going to throw out AI, if Google's going to throw out AI. I feel like the story's getting a little bit old, but it seems that it's still a pretty sufficient strategy so far.
Yeah, I mean, we're getting to a point where like these companies that just are the big players in the AI space can't necessarily like just say AI anymore. You got to have something at least sort of revolutionary.
You say the full name.
Yeah, you got to be investing in somebody else. Yeah, you got to call it artificial intelligence, like when your mom's mad at you.
Yeah.
But yeah, they definitely will discuss AI, their progress there. Gemini, and they have their other one too. Name is escaping me right now, but any progress that comes there, maybe some integration into new phones that they're rolling out. We'll see what comes up.
Yeah. We'll jump on this end. We'll jump to the Tasty platform over here. We'll just do a quick tour to market. I don't have too much going on, then we'll jump over to you, brother. But right now, just really looking at. Oh, there we go. We're on you. What you got going on over there?
What?
What you got going on over there?
Oh, is this? Oh, this is.
Yeah.
Oh, it's. Oh,
yeah. No, it was
I'm on. I'm getting ready to take a sip of my tea. Not a whole lot going on. I'm gonna let loose on these meta positions or the metas that are out of the money if I could find them. Oh, they've jumped back up here now. I moved $2 up since I decided I was going to do that. I'm not too sure. Okay, we'll let this eat just a little longer, but I am probably going to be looking to rotate out of these meta longs by the end of the day. My 710, 715 BuzzFeed finally taking a hit today, down 8 cents. This is sort of what I was describing yesterday, where I don't think there's going to be like this one big day where suddenly this collapses 20%. And in fact, this is even a bigger day than I was really planning on, but just hoping to string together a few days like this, down 8 cents on the day, which constitutes 6%. I mean, it is a small product. Looking for some continued slide there. But as you might recall, I did let myself get slipped a cent on these when I got filled. So we are actually up a cent from my entry, even though we are completely unched on the position as a whole. But liking my stance there. McDonald's continues to be an inverse of the market, logging another green day against red in the broader market today, moving up nicely for me. Rotated my Shake Shack profits into McDonald's there. I actually haven't even that's just on paper. I haven't actually been able to get out of Shake Shack because there's no liquidity with how low that we've fallen, but I feel fine about that situation. If 1 cent of liquidity gets injected in here, I'd be willing to get out, but otherwise we're just cruising to max profit. Both of those situations are fine by me. And then UNH took a big hit. That's Shake Shack. What are we doing? UNH took a big hit yesterday, is recovering slightly today after the I was going to say Warren Buffett, but I suppose Berkshire Hathaway, Buffett's proteges, announced that they had gotten out of their UNH position. So did see a little bit of a drawdown yesterday, but I am continuing to hold. I beat Buffett into Berkshire Hathaway. I beat Buffett into UNH, and I shall beat him coming out of it as well. That is my plan at this time. What's going on, everybody in chat? Jared, big deal. Clean fingers. Oh, Clean Tigers. Sorry, I was going to say that's quite a name.
That's
you got
a name.
there.
That's a name.
Ranch. Ace Ventura. Good to see all of you. Grumpy Mike. Matching black shirts today on purpose? No, it's never on purpose.
No,
but it happens a fair amount.
And it's so funny because I actually haven't worn these pants in like maybe a month. Like it's been 4 or 5 weeks, and today I'd seen it on the left side. I was like, it's been some time since I put those on, and of course we're all four of us wearing the same exact fit on the same day.
Yeah, it's like there's a question I like to throw around where it's like how many owls would you have to see in a day before you're like, that's a strange number of owls that I've seen. You don't often see an owl, but if you see 2, you're like, oh, okay, this is weird. I've seen 2 owls, but I think once you see the 3rd owl, you're like, what's going on with the owls? Why are there so many owls out here? I think the matching outfits are like that as well, where if just you and I were matching, I would be like, oh, well, this is just a funny coincidence.
It happens, right?
Then when there's a 3rd person who's also exactly matching shirt, pants, everything, it's like, what happened in the cosmos here to make us all land on the black shirt, green pants on Tuesday.
Not only that, we saw
any such cases.
We saw four owls today,
true.
right? You know
yes,
what I mean? So
yes. Cassie on our graphics team is also wearing the exact same outfit. So it's
not even tasty colors.
Yeah, it's not. It's not.
It's funny.
It's just the way the cookie is crumbled today.
Yeah.
But yeah, not really a whole lot of excitement for me. Just management, and yeah, still just diligently tracking meta. Every time I'm like, okay, I'm gonna finally get out. It just rallies back in what feels like seconds. If we zoom in a little bit here, you can see that phenomenon pin out today as well. Yeah, off the bottom, we're testing 600. I'm like, okay, we're definitely getting out of this, and then it just rockets back $5, and it just gives you that little bit of hope. This meta position, it's like an abusive spouse. It's like it just keeps me around, and just does nice things for me just often enough that I never leave. But it mainly hurts. It mainly hurts all the time.
It's tough. That's tough.
Yeah, it's a difficult situation, but we will continue to monitor this, and we actually are looking much better off here than we were yesterday. Down like $200 and some odd yesterday notional. Today it's 125. So that gap is closing a little bit. Willing to continue holding on there. Android has been doing for 10 years what iPhone says is new. So yeah, I knew that I would get some kind of
still never get an Android
on my Android commentary. But yeah, Apple's just
still won't do it.
Got me locked in. I know that I'm just a dumb little mindless consumer that just wants my same product over and over. I'm fully self-aware of that.
The thing is, I feel like simplicity is very attractive sometimes, and I think the iPhone just comes off a little bit more simplistic. Like in middle school, I love the Androids. I love the customization, but I don't know. That simplicity got me in a chokehold. I gotta admit.
Yeah, and they get you in suite too. Once you're in suite, it becomes harder and harder to leave.
Yeah, cooked.
Worthy goal, Gus. Trail and beat the Buffett. Thank you. I appreciate it. We'll see if I can make that. But to be clear, Buffett tailed me. I was in UNH first, and I can't take full credit because Mike was the one chirping in my ear about how I needed to get long UNH. So really, it starts with him. He is tasty Warren Buffett, which makes me whoever's running Berkshire right now. Both of those guys' names escape my mind, but they those you guys know the two I'm talking about. Owls disappeared 3-4 weeks ago after the city trimmed trees. I've been hearing them again the last couple of nights. Good, Grumpy. Yeah, the owls need homes. How rude of the city.
Who?
What?
Who?
Oh.
Yeah.
Good one. If you get an owl to look up, if you get an owl, look up how to get your property a sanctuary. Oh, if you have an owl on your property. I see.
Jared's comment.
You can just make your property a sanctuary?
So that's how you know Apple has their marketing on lock. People will pay more for an inferior product just to continue to justify it.
I don't even really attempt to justify it.
Yeah.
I know that is what I'm doing.
Yeah. I think, again, it's that ecosystem too. Right? I know with the iPhone, airdropping things to your MacBook, airdropping things from your MacBook to your iPhone, such a simple detail, but massive.
It's all so nicely connected. Yeah. I'm on the hook now.
And I was one of the proponents of I will never get an iPhone. I was saying that from I will never get an iPhone. But once they made bigger phones, I don't know, I guess that was a little bit more attractive. But once you get in, you might not get out.
Matching outfits plus manifesto, and it's a cult, LOL. Yeah, we're drafting the manifesto. It hasn't been released yet.
Hey, lower your voice, JS. Lower your voice.
Hopefully we'll get there soon. Yeah, no kidding. But yeah, I mean that's pretty much all the excitement for me. Nothing super new. Still just kind of at that decision point I was talking about and waiting for NVIDIA earnings tomorrow to really be the catalyst and help the market pick a direction. May take a few swings tomorrow during the day, just as we ramp up towards that earnings call.
Yeah.
NVIDIA obviously going to be the star of the show tomorrow. Let's zoom out a little bit here for a bigger picture. It's pretty much, this is almost indiscernible from just a S&P chart as of late. But yeah, mirroring the broader market here as well. Obviously up a little more today than the broader market, although we are trying to reverse here, it seems. Yeah, pulling back just a little bit, but interesting spot for NVIDIA. Like I said, late last week, if this just continued to run straight up into earnings, I would feel like I had a pretty good thesis for getting short into earnings, which obviously is contrarian. But since we've had this little bit of pullback, I just really don't know what to think now, and I will probably just blindly get long. I'm just going to do the square bear play and just get long into earnings tomorrow, and see what comes of that. But it feels like we now have pulled back at least to a reasonable level where I feel like higher highs could come through. 250 was sort of the number I'd thrown around of if we got to 250 before earnings, I would feel really compelled that I have to get short. But coming down and now, testing the 220 level this morning, working back up, feels like a good spot for some longs.
I like it. I think NVIDIA is going to be most on top of mine. I can't wait for it. But I don't know what it's going to take for this market to move. So be patient.
Yeah, no kidding.
Be patient.
What's the new bit/altcoin clarity ruling? I do not know, big deal. I wish I had a better answer for you. But I couldn't tell you. Is Bitcoin responding to said ruling? Not really. In fact, not at all. Exactly unched on the day, despite opening slightly higher, which opening I use loosely with Bitcoin, obviously, because it never closes. Shorting ES tomorrow if NVIDIA pumps on earnings report. Yeah, I think that might be a fair line of logic and like try a pump and dump sort of trade. And I think I'll probably be pretty aligned with that. I'm going to be looking to get long NVIDIA and maybe some adjacent products headed into tomorrow's earnings. I'll do that on the short term. And then should those come to fruition and we get the move higher, at that point, I would look to rotate into some shorts and, play perhaps a little bit of over enthusiasm as NVIDIA has been prone to in the past. iPhones take a licking and keep on ticking like Timex. Yeah, no kidding. Yeah, as we've talked about before at length, I mean, Apple really has kind of stagnated in the innovation department. There hasn't really been anything revolutionary happen. It is, it truly is just the new camera meme. It's just a new camera every phone, and that's sort of the only major upgrade that you'll notice. Obviously, iOS, they always manage to keep things fresh, but as far as like something, groundbreaking, Apple has kind of fallen behind the 8 ball.
Yeah, kind of feels like the 2K games, the Madden games, the FIFA is like every year.
Actually,
just like
a good analogy.
It's a small little update, same thing.
Yeah, they add more sweat. That's what they always say.
Yeah, 100%. What it is, all the graphics, so much better. Same department there.
I could go on and on about video games. The sports game ecosystem is just we've fallen from glory. It's all about packs and getting you to make as many microtransactions as you can now. They've stopped caring about the actual quality of the gameplay some time ago, and the market just continues to validate that. The streamers continue to rip packs. Everybody continues to watch them, and then when people go and get the game, they want to rip packs too. It's what it's become. Sad.
I guess they're just following the human behavior, but it really has taken down the quality.
Yeah, I mean, they care about the bottom line and nothing else.
Yeah, that's capitalism.
If the free market rejected this and said we don't want to buy packs anymore, we want sports games that are good, and we're going to stop buying them until you make one, then they would. But that's not what's happening.
And I think it's always whenever those incentives shift. It's like whenever the incentive shifts, that's typically where the profit's going to be, and then that product, the quality of the product just goes way down. It's just so unfortunate. I don't even know if you guys have noticed. Even YouTube content, I feel like just in general, I feel like YouTube content, the quality of it has gone so far down. Like sometimes I'll scroll on YouTube and I'm just like, I have to scroll a little bit further than expected to find certain quality videos. They're starting to feel a little bit more cookie cutter. But the space that we're in right now incentivizes that because it's cheaper, and then you produce what you want to produce, and I don't know, the quality goes down. And I think that's just how the cookie crumbles, really, for the most part.
Well, yeah, and it's become so much about the algorithm and making sure that everything is perfectly tailored to getting these videos pushed to as many people as possible. And I do think that can hurt quality sometimes. Yeah, for sure. PGA 2K25 was a pretty good upgrade from 2K23. I actually haven't played the new PGA game yet. Yeah, golf. I played the heck out of 2K23 and enjoyed it. I'd be open to playing 25. I was actually just talking with my friends I used to play with about how we should get the new PGA game. So
I haven't played PGA since like maybe 2005, 2006. But when I did play it back in the day, like 10, 15 years ago, it was pretty fun. It was pretty fun.
Agree on the YouTube videos. The worst part about video games is that we were playing in the absolute prime of gaming in the early 2000s and we never knew it. Yes, that's true too. And licensing hurts that as well. There used to be so many different NFL games, but then EA gets, the big contract to just make only Madden forever and ever, and then the competition goes away too.
Do you think there's validity to us saying, like how Jared kind of just mentioned, like, oh, that was the prime gaming era? I feel like each generation kind of says, oh, our era was a prime for this, but I feel like there is some validity to those statements. And I feel like with a lot of the technological advances, I feel like it kind of proves that a little bit. But I feel like every generation does say something along the lines of that. But I have to agree with Jared there.
I think nostalgia certainly comes into play
for sure
to an extent.
Yeah,
I think you always just love what you grew up with and had the most fun playing.
I'm curious, is there an objective view on it though? You know what I mean? Because at the same time, I get there's a nostalgia, we have that bias, but I'm like, I don't know, with the way technology is changing, I feel like that might be biased, but a little bit objective at the same time. But anyways.
Yeah. I mean, I think these kids will, it's Fortnite, it's Roblox. Those things are going to be thought about the same way that we think about, Minecraft or the early Call of Duty games, which are, if you want to go sports games, a lot of good sports games too.
Yeah.
But anyway, fun little video game sidebar there. I dig VR puzzle games. I like puzzle games in general.
I haven't done a VR puzzle game, but that sounds really fun.
Yeah.
That sounds pretty dope.
Yeah. Like
different experience, an
is there a good-
immersion.
Does anybody know a good VR like escape room game? That could be fun.
Ooh, that would be a good one. You're onto something with that one.
2012 Minecraft Xbox 360 version. That is so sharp, Clean Tigers. I could not agree more. That's exactly what I came up on right there.
I think that was around the year I jailbroke my iPod, and I think I was playing Minecraft on it.
Anyway, broader market. We got. Let's see. I haven't had a look at the metals at all today. Sliding just a little bit on the metals. Just a regular SI.
Pong was the best. Are you talking Pong, like VR Pong? Are you talking table tennis? Or are you talking about like actual Pong?
Pong's like the first video game with like where it's just like the two bars.
Boing.
Yeah,
Oh.
yeah.
I didn't realize that was called Pong.
Yeah. Pong.
Great game.
That's the OG. Just finished one called Ghostland. Great experience. All right, good shout.
You know what's interesting? Whenever we bring up video games, we get a lot of engagement in chat, and I wonder if there's the similarities from somebody that's used to using technology, video games, and then the investor, the trader, or just being more attracted to technology as a whole. Because again, I have realized we get a little bit more input when we speak about video games. Is that just rhyming with the personality there? Ghost Town rather. Ghost Town
rather than
Okay.
Ghostland. Yeah.
There we go.
Issue an
I
original.
saw a dude putting trading view charts in Minecraft. That's hilarious.
You can do so much in Minecraft now with the command blocks and everything else. Yeah, people build working phones and stuff.
Oh, that's sick.
Yeah.
That's sick. The only thing I've used VR for, I have pulled up the Tasty platform in the VR headset before. I think it's called Immersive is the application, but I pulled up TradingView, Tasty. It's pretty cool. It's just not very practical. I think that's what it is. It's like you can zoom in very far, or you can, pull the screen in pretty close to be able to view what you're looking at, but you recognize it's probably a little bit more practical for just, for me to just look at my regular screen. So
Yeah.
it's cool to look at. It's interesting, but
It is nice being able to have all the screens. My only qualm with the VR and especially like with my Meta Quest is that I wish it was just a little bit better real world viewing because it is kind of grainy. It still almost feels like it like gamifies your real world.
Yeah.
But looking at screens through the Meta Quest really sucks. Like you can't watch TV or like be on your computer.
No,
So I have
no.
a Meta Quest on. It's terrible. Hurts my eyes and it's not clear. And if that were clearer and I could like sit there with like a sporting, like some kind of sports game on my real world TV and then also have the headset on and be like web browsing on the side, that would be really cool.
like when you can kind of see through the lens of the VR a little bit.
Yes,
right?
yes,
That's
but
what
the
you're
practicality just
mentioning.
isn't quite there for that yet.
Right now, I think they have that used just for like peripheral vision, right?
What? Sorry.
No, you're good. No, you're good. I was saying, like how you can kind of block out, or you can kind of have the screen on there. They use that for the peripheral vision, right? Just so you have like an idea of where you're at, like in the room.
Yeah. Well, if you're playing a game, it like fully envelops you, but it's like a little bubble. If you take like one step to the left, you like move into your room.
Oh, right.
And then you can like still see that bubble to go re-enter it. Like,
It's the bubble you draw, right?
Yeah. You can
Okay, cool. I've only used the MetaQuest 2. I know you have the newer one, so I wasn't sure if there was any updates I wasn't familiar with.
Clicking buttons, same thing in a game or trading, or we're all just nerds. Perhaps that's.
Yeah, we might all just be all peas in a pod. We're all just nerds out here.
Everyone has a silver algo to smack them down and then try to save stonks the rest of the day. You might be onto something with that one.
Yeah, I mean, I've been keeping an eye on silver. I know we traded silver last week. It was nice that we got that pull to the downside. I know we both had some short delta on in there. But in terms of silver, it's kind of in a weird position for me. I would love to see silver rally back to 80, 85 to then get short again. But at this point, I don't think the risk reward is too attractive to pull. But, you can maybe sell an out of the money call spread, not be too close to the money. But I think I'm going to be patient. If we get another rally, I'm down to put on some risk. Maybe risk half the profits that we made on silver. I think that'd be worth it.
Yeah, it feels like it's really
The range is there.
Yeah, it feels like it's a decision point right now, similar to kind of my sentiment towards the rest of the market. Directionality is hard to discern here. Oil quietly has been moving higher. We are at the highs more or less on oil here. USO is the vehicle that I've chosen myself, but not getting as much attention as it did when we were on the initial run up. But all of a sudden, quietly, oil back at the highs. I mean, just has made new highs and is chilling
Quietly,
at those levels.
kind of quietly, yeah.
Yeah,
It really crept up there.
Yeah, everything else kind of getting attention. It's been this, sort of slow-ish grind relative to what we've seen with oil over the past few months. But oil not getting a lot of love with how high up it is. No Trump insider trading. I don't know about today specifically, but we are about to record a video just after we get off air about that specific situation with all the details. What was oil at in 2008? Can I go back that far? I suppose I can. Wish I could zoom out quicker. Where are we at?
We got 20 years up there.
Yeah, 20. What? Scroll. I can tell you though. Here we go. That was 2015, 12. We're getting there, guys. 09. Okay, here we go. 2008. Up we go.
Here we go.
At the peak, this is USO 950. And we are currently at what, like 150?
Something like that.
So, yeah, not unprecedented levels. Yeah, we're at 152 right now. Not unprecedented levels by any stretch of the imagination. But local highs is how we look at oil. VIX has barely moved too with all this. Yes, that's a great point, Jared. VIX, we talked about this yesterday, but VIX actually has compressed today. Well, a little bit from 24 hours ago when we were last talking about VIX is down a little bit. We're sub 18 level now. And yeah, this is interesting to me. Yesterday I was saying, well, the broader market, it had ran up so much that it's like, oh, this little pullback, it's not really unexpected. I could see why VIX wasn't jumping, but as we get a third lower day today, I am surprised to see VIX not move like an inch higher at all. I mean, we are just perfectly hanging right at the sub 18 level. That is strange to me. I would expect to see it at least be 1850, 19, something, but we have gotten none of that at all. Just sub 18 and chilling on VIX.
Big chilling.
But anyway, we can kick it over to you if you got any action going on your side of the equation today.
Yeah, we can jump over here to this Tasty platform. We're gonna need Meta to save the day over here. That's the only one we got in the portfolio right now. A little bit of long delta, down about $30 on the position. So we really haven't moved anywhere. I mean, as Meta's pulling back today, we sold the 590s, we bought the 585, so we collected about $1.65, just a penny under the third of the width. We're going to wait this one out a little bit longer. I think this is one that, we'll cut the trade a little bit early because I think Meta could turn into some downside action, but we're just looking for a shorter term pop in the market. So, if we continue to make lower lows, I'm not against taking this one off. We got to manage it around or in about 9 days anyways. So we'll be patient. And the markets are a little bit wide. Like, as you can see, we were just down about $30. Now we're down $20. And we're kind of, we kind of just been going back and forth all day on that position. So, I mean, that's really just been taking my eye for the most part. But we can go ahead and head into the options, the high options volume watch list. See what else is looking pretty attractive out there. I was pretty tentative on putting anything on prior to NVIDIA earnings, FOMC minutes tomorrow, those kind of things. But I think we got to get on a little bit short delta. And look, there I am just showing my bias already. But we'll see what's been moving on the day. We got Fermi down, Roblox. Speaking of Roblox, speak of the devil, we got Roblox getting hammered today. And I don't know what's been going on here. I'm on the weekly chart. Let's go to the daily.
Yeah, Roblox, I believe, and somebody can correct me if I'm wrong.
Yeah, what happened there?
As I recall, there was some issue with there being a lot of predatory behavior happening in Roblox. And that caused them, when they were on the giant run-up for months and months, that was kind of what put the top in.
Yeah.
But I don't know what has happened since then to bring us, way back down to sub Liberation Day lows for Roblox now.
At first, when Roblox started to get more popular, I was a little bit more confused as to why something like Roblox was getting popular. But as time has gone on, I start to recognize how much more popular Roblox is than I would have anticipated. So I know they had a lot of issues with the predatory stuff. I think they were changing some of their settings to where you can't communicate with users under the age of 18. So at first, what they had was you could communicate with anybody under the age of 18. They just had like a free world kind of game, just like how you would on Xbox, whatever it is. But I believe they ran into some of those issues. I'm curious to see how they probably had to find some real cases. They probably found out some real cases of people getting in trouble.
Bad. There's lots of
for them to actually make that decision. Yeah, real world issues. But now they're kind of separating the two. I don't know how they're doing that. I don't know if you give them your ID, you send in a photo of your ID to know, or if you just check the box, yes, I'm above 18, right? When I was in high school, when I was in middle school, and I was downloading applications, I was like, yeah, I'm 18 or older, whatever the case might be. So I don't know if with Roblox, it's just a consent form like that pops up on your screen. But
I actually just downloaded Roblox for the first time fairly recently in the last couple of months, just because it's free, and my friends and I were looking for something to mess around on one night. And all it had me do was just put in my date of birth and then took it at face value.
Oh, just took it? Okay. So maybe they got to just do that for legal purposes.
Yeah.
But clearly,
yeah, just to
Yeah,
I'm not sure, but yes, as Big Deal said, maybe they blocked the kitty talkers. Perhaps does that hurt their player base this substantially? I don't know. It's possible. It's possible.
No, yeah, and I mean,
it reminds me of the episode of The Office where they have Dunder Mifflin Infinity and they decide to put social networking on there for no reason, and then Ryan's like, yes, the social portion of the Dunder Mifflin Infinity website was infiltrated by child predators. It feels like that with Roblox. It's like it's supposed to just be this fun game for kids, and then suddenly they have this gigantic issue, and it's a very serious one. I understand the decrease in share price on account of it, but I don't believe that this entire slide is due to
no, definitely not.
It's there are underlying reasons in play as well.
Yeah, so Roblox came out in 2006, which is crazy. And once again, I didn't even know Roblox had a lot of these plans for the future, but they're starting to integrate things like, they're going to have their own token, they're going to have their own kind of marketplace, which I think is fascinating because with AI, the blockchain, I can definitely see how you can combine things like even VR with something like Roblox.
Sure.
Roblox seems to be a little bit further along to integrate with things like that.
Yeah, and it definitely feels primed for like buying real estate.
100%.
Like, weird stuff like that.
One thing that I find really fascinating, lastly, about Roblox is there's some video games on there where it's like Minecraft on crack. Like you can get a little bit more specific with the designs that you're building. And like some of the games that I see, it'd be perfect for any students in architecture class, or if you wanted to map out what you wanted to build, let's say you were building a house or whatever the case might be. I feel like you could communicate the vision very well by being able to use some of the technology on Roblox.
Yeah, and the Roblox like UGC infrastructure is perhaps the best in the entire gaming space right now. Fortnite and Minecraft are really the only two other games that could compare, but Roblox is certainly dominating in that regard. And I know that Grow a Garden game, that got sold to venture capital for like millions and millions.
I know of that game.
Yeah. Grow a Garden, like a VC came in and bought that game because it was generating so much revenue for the people that manufactured it. It's incredible.
How are they generating their revenue? Buying in-game purchases?
I think you can. Yeah, I think you can do in-game purchases because they have Robux, which are like the virtual currency.
Right, and you buy the Robux.
Yeah, you buy the Robux, similar to Fortnite with
the V-Bucks.
Yeah, exactly. And then I believe you can sell things in-game to like in your UGC world to players for Robux.
Right.
They, like translate into real world currency for you on the back end.
And I'm curious, so I know you can buy the Robux, but you can't do it the other way around. You can't change the Robux into real world money.
Not you, the user cannot, but if you spend them in somebody else's world, then they do become like a cash out. Like you can convert them after
to USD.
Yeah, like after you spend them back, and that's how people generate money. And to my understanding, I have a good friend who is still a full-time Minecraft server owner. That's like what he does. But he has always said that it's really frustrating because Microsoft really puts the clamps on people in his position on Minecraft, where you have to have like third-party websites and all these weird integrations, and he's got a server in Virginia and all this because you have to have somewhere to like be a payment processor, and then that also ties into your server so that you can get people things, and you really have to work around Microsoft.
Yeah.
Whereas with Roblox, it's the opposite. Like they encourage it, and it's really easy for people to spend their Robux on stuff in your like video game world, and then after they have spent them and they transfer into your account, they are real money.
Yeah.
And you can cash them out from Roblox. But Roblox obviously takes a cut there. It's not like a one-to-one conversion from what people pay for Robux to what you can cash.
They might become the blueprint for the next, transactions I might see with digital
Roblox
assets.
is like dangerous with how easy it is to buy stuff in there.
Yeah.
Like the microtransactions are so quick and fluid. you can really do it quick.
It's a little too easy to buy and sell in there.
Yes. Gus, thank you for your ime Monday on Walmart as we discuss retail. You were the greatest. Oh, thank you, TL Brian. I appreciate the kind words. Continuing to work higher here.
Walmart all-time highs. I don't know when the last time I've been to a Walmart. I don't even know where the nearest Walmart is over here in the city.
They're all outside the city.
Are they all outside?
I think the closest one would be like Cicero. I had to go to a Walmart when I first moved in and discovered that my apartment had no lights whatsoever.
Oh yeah.
I had to go to Walmart and buy a bunch of big.
Again, they're doing that. My light is in the closet. It's literally in the closet and it's dark in the bedroom. I got to put up lamps. I'm like, what?
Yeah, I have one light in the closet and one light over the kitchen, and that's it.
I started to notice that.
Yes, but my living room and my bedroom just have no lights.
Still don't understand the logic for that, but we'll move on.
It doesn't make any sense. Yeah. But I had to pick up some flood lamps, but that was like 18 months ago now. So it's been a while since I've been to Walmart as well. There's just not.
I just don't know why you would plan the electrical that way.
I was a Walmart regular when I was in Texas though, and there was Walmarts just close by.
Yeah. Even when I was down in Florida, Walmart's right around the corner, but I feel like being out here in Chicago, I'm not seeing the regular stores that I'm really used to. I feel like it's a lot of different chains, but getting familiar with everything. I know Tracy goes to Mariano's, so do I. You know what I'm saying? So,
V-Bucks as an altcoin? That's an interesting thesis. Are the Viet Cong buying game apps? Satire. I like that.
Walmart delivery is great. I might have to try that out. Ordered groceries again.
Sure.
I didn't do the DoorDash. You mentioned that last week, but I was already kind of through the checkout process. So I went with Instant Cart again. Those groceries should come in today around noon, but I'm hoping that it's a little bit better, or I might try, like Base just mentioned, Walmart delivery is pretty great. Maybe we try that out. I'm just really sad that Kroger delivery still doesn't operate anymore with Mariano's and other grocery stores. And I mean, the customer service and just the service in general was amazing,
Yeah, I'm not sure if Walmart would be willing to come this far in. I mean, that would probably be like a
Man, that's tough.
40-minute one-way commute.
Is that about 40 minutes away from the?
I would think so. I mean,
Dang,
it's
that's
on
tough.
traffic, obviously, but
Yeah.
the highway infrastructure here leaves much to be desired, to say the very least.
No doubt. No, just looking down this watch list, just looking at some of the biggest losers on the day. I know the market's sitting at all-time highs, so it's kind of cool to see, what's kind of weak inside of this market rally that we're still getting over here. And I mean, we got silver on the board, down about 3.5% today. And I think one that stands out to me is Rivian. Shout out to the boy Rivian. I know EVs has been a little bit quiet, but they have decent IV ranks, decent implied volatility. But I mean, good Lord, this thing's been getting hammered. Curious to see what this options chain is looking at. I don't mind getting on a little bit of long delta, while we sit at these lows. We are on the daily chart over here, so Rivian's been getting hammered as of recent. Rivian making a comeback.
Hilarious.
Why is that?
Just genuinely, anytime Rivian gets below 14, you should just get long, and then you should wait until it goes above 1650 or 17.
That's fair.
And then sell, and then get short, and just do that over and over. The way that this thing channels the aggressiveness with which it moves when it does move is hilarious. It is never a slow day. You'd be hard pressed to find the last time that Rivian was unched. It just flies, but it never goes anywhere. It moves so quick to go nowhere all the time. It is an excellent trading vehicle in that regard. But yeah, I mean, if you just blindly did that strategy that I said just now over the past 2 years, you would probably be up. It's incredible. It just constantly channels between 12 and 18. Sometimes it'll touch 20. It's preposterous. 60 DTE. If you were just to do that at 60 DTE over and over, I'm confident that you would be up. We could back test that.
Oh, yeah, we should. And I think we're going to throw in some long delta here. It says Chicago is a union town. Union towns do not let Walmarts in their borders. That's actually really interesting. Another thing I'm going to do a little bit more research on. I was doing that with INTC before the run-up last year, Gus. Was such an easy channel to trade.
Yes. Yeah, Intel definitely had similar price action last year before we've come all sorts of out of whack this year. It actually makes it look very compressed on that run up that you're talking about. But yeah, Intel late last year, September, we're at 28, and then we're at 40, and then we're at 32, and then we're at 45, and then we're at 35, and then we're at 50. It's it's just if you can catch those channels and catch on to that predictability early in the cycle, you can really do that, just letting it run up and down. Friends, you no longer need to go to Walmart. Walmart is on target to hit a home run. Amazon is watching. Are leaps on Walmart in your view? Leaps on Walmart. Interesting. Perhaps. I mean, I don't think Walmart is going to stop growing. I think that they're a $1 trillion company now, and I think that they'll only continue to climb. I think leaps could work. If I wouldn't really want to enter leaps off the highest like this. I would maybe wait for just some semblance of a pullback. But the question is more or less 18 months from now, do I think that Walmart is higher? And yes, absolutely, I do. Be my answer. Speaking of ours, Resolute is killing me today. Yeah, me too, Grumpy, hurting me. Where is that? Yeah, right here in the middle. I guess that's not hurting me that bad. Down $1 on the calls, $4 on the shares. But yeah, we are down another 10 cents today on Resolute. But this one, it does continue to work. We just need a pop and a confirmed break above this $4 level, and then I feel like we're really in business. It's just been a tight ceiling at $4 on Resolute thus far.
Yeah, we're gonna look to get a little bit of long delta on in Rivian over here. Good Lord, if Rivian wants to come out and take out this low from November 4th, so be it. But what we're going to do here is, because it's a cheaper underlying, we're going to go with the zebra. It's been some time since we threw on a zebra. So what we're going to do is we're going to sell the at the money strike, and then we're going to buy two 70 deltas. But I went to the 70 delta, and it's only given us about 86 deltas. So I'm going to move it to the 77, which now gives us about 101. So for every dollar move in this underlying, we should reap about $101 for each dollar move. So that's what we're going to do here. I'm a little bit more comfortable getting on the zebra just because, again, it's a cheaper underlying. I mean, theoretically, if we were to drop all the way down to, let's say, $10, I mean, we'd be out, what, $290? That's not too bad for a pretty big drop. And then, I mean, the long would look even more attractive. So, I mean, if we go back down to $10, and I put on the zebra now, just know this is going to be a great spot to get long once I have to stop out of my position. If that were to happen.
Yeah, we haven't seen $10 since Liberation Day. The lowest non-Liberation Day lows are $11.67, which is just a little more than $1 below where we're at right now. But yeah, I mean, dating back to last August, this $12 level has just been so strong. And even when we got that $11.67, that was a 1 week dip.
Yeah,
we're right back above 12 again. So it's 12 is the spot for Rivian. I feel like if you want to get long, do so in the $12 ballpark, and that's what you're doing here.
Oh yeah, we'll see what we get. I know Jared said it's cheap arrow. Why not just sell naked puts? Let's look at that too. So let's clear this out. We'll look in the 30-day cycle still. I mean, yeah, you're right. I mean, we could sell the at the money for 64 cents. It's going to be about $477 worth of buying power. I like that too. The buying power is not too much. We could sell the 12 for about 45 cents. It's not a lot. I mean, we could even go further out. Let's see what the contracts are going for in the July cycle. Maybe we can get a little bit more meat on the bone. But let me know what you might be looking at too over there on Rivian, Jared, as we go through this. I know the at the money here is 77 cents.
The market seems to also acknowledge the $12 level here.
Yeah,
it's strange to double your time to expiration like that and actually not see a very pronounced increase in the price of these at the 12 strike.
Yeah, not much at all. The expected move is, a very inside move. So, I mean, for us to even get to $10, we'd have to exceed the expected move to the downside as well. So, I don't know about the premiums too much, Jared. I think for now we're gonna go with the zebra. I do like the puts too, though, and I like that with the puts that we could count on time a little bit more, but with the zebras, at least we don't have to worry about that theta decay. We kind of get that 1-to-1. So we kind of, get to cancel that out. Yeah, and it's a little bit more aggressive for my liking for the short term, at least.
Yeah, the naked puts are a little scary too, just because of the velocity with which this thing can move down. I'm confident in my thesis about the $12 level that I've harped on here, but in a world where we get a break below that level, Rivian moves quick. I mean, it's a 2, 3, 4% day is like run of the mill normalcy for Rivian, whether that be up or down. But if you all of a sudden, string together a 5% red days back to back, you could be staring down the barrel of a much bigger loss than if you attack it with the zebra.
And no, I hear
as the put side volatility increases and expands those premiums. Sorry, go ahead.
No, all good. But no, I hear you completely, Jared. I always want to take a look at the puts. Sometimes I'll kind of have my mindset on a specific strategy without at least taking a look at the field first. But just kind of looking at those puts as well. One thing I think is attractive about this is we're only going to use up about $268 worth of buying power. So I mean, over here in Rivian, if we were to get a pop to like maybe 14, 15, 16, we might even be able to cover the entire buying power of this position. So we'll try to manage the risk very similar to a stock position, since it is a synthetic stock position. But the fact that we don't have to worry about that theta decay is really attractive. And using the zebras is usually nice on larger products, but the fact that this is cheaper too, I think it makes it even a little bit more attractive. So anyways, no theta decay on this one. We'll try to see if we can send this one through and get a decent fill. There you go. Immediate fill, and then we get an immediate dump in Rivian.
Problem with Rivian is there's no open interest on the 1150 strike, and then E-Media pops it and says, "Hi guys, I'll add one interest. Sold." Good deal. Damn good deal. I'm all over that. No, that is a fair observation there as well, Nathan. But hey, I mean, if we're able to get in with the instafill, it's enough. It's enough liquidity.
Like it. Marvel creeping back towards the highs over here.
Just buying the $11 call over the 12-13 zebra is about the same thing. Yeah, I suppose that's true. You just don't get as perfect of correlation with your gains to the share price.
Yeah.
Zebra does mitigate the Greeks. Very true. Yes, and that's the other critical difference between just buying the 11 call is that there's no. Well, I suppose the 11 call is deep enough in the money that theta really wouldn't be a consideration either way. Rivian or Oklo or both. I sold Oklo puts today, waiting for green in a few days. 30. Your thoughts, please. Oklo. Oh yeah. This feels like, man, I actually might follow you into some long Oklo here. This feels like a good level to me. I'm doing it. That's 2 seconds of TA. Done. Sold. Give me in.
Sold to the man in the stash.
Let's see here. It's the best way to attack this. The short puts are kind of attractive, but I don't know if I want to post up that kind of buying power into the volatility event tomorrow. I don't know, though. I mean, what kind of premium do we have on like the 30s? Or sorry, the 50s is what I mean. It's good premium. Do I have to post up becomes the question. Yeah, $2,000. I ain't doing that. It's too crazy for me. Yeah. Okay. I mean, the premium still skewed.
Said Liz and Jenny did a trade on Oklo today. Speak of the devil, Liz and Jenny, I believe, are the ones that pioneered the Zebra trade over here at Tasty, at least. So 0 extrinsic back ratio. There we go. That's what it stands for. 0 extrinsic value. Extrinsic value. Mike Butler and Dr. Jim. Boy, extrinsic value. Extrinsic value.
Yeah, I'm just going to attack this with a vertical. I want to be a little longer than 30 DTE and give this some room to run. I'm going to target like this 60 DTE range, and that allows me to get further out of the money as well. Yeah, July 17th is 59 days. Expected move out to between 75 and 80.
Big Dale said, volume looks low on this NASDAQ run-up. Not sure, though. I'm on mobile. And that's a testament to perspective is everything. But no, we'll take a look at the volume on NASDAQ in a moment, Big Deal. Pay attention to the road.
I'm going to go 60-65 on the 59-day expiration cycle here.
There we go.
For Oklo, looking for that 65 level. It's a bit aggressive. Obviously, that's like a 15%, 18% move in the next 60 days, but one look at the Oklo chart will tell you that is not by any means out of the equation. 60 days is a long time. Obviously, gives us into mid-July. And if you step back and look at that, practically will be. I don't think that would be an insane move for Oklo at all. And I do like it off these levels here. Down below, down below some historical support here on Oklo, and it just takes one headline to send this thing to the moon. So feel good about that. Playing, July 17th expiration. July 17th is the calendar emoji on iPhone. There's one for you.
Is it really?
Yeah, that's what it says on the
calendar.
That's
a really good trivia question. Big Deal seems like I have someone drive me kind of guy. Ain't no time for that. You guys don't know the Big Deal. I know. Oklo absolutely beaten down. That'll be an attractive one to see. And to your point, I mean, we traded at highs of 190 on Oklo. I mean, that wasn't too long ago either.
Jared, I'm happy you got my damn good deal reference. Thank you. This is what I was looking for. Glorious bastards. Yes, all that's to say, TL Bryant, I like the Oklo short puts. Good. I'm a proponent, and obviously Errol endorses the Rivian longs as well. So we're there. If I did that, then I wouldn't get the personal big deal license plate. You still could. You can have the big deal license plate on your car that's driven by your driver. You can do whatever you want.
World is your oyster, Big Deal. Marvel up on the day. Marvel trading around the all-time highs right now. You a Marvel guy?
This is Marvel, right? This is
Marvel.
Yeah.
Are you a Marvel guy though?
Just like the movies?
Just like a Marvel, DC, you know.
Yeah.
You a fan?
I rock with them. I'm not like, I don't super keep up with the MCU and all the happenings, but I mean, I saw
I dabble.
Saw the Avengers movies in the studio. I was big Spider-Man kid.
Oh yeah?
Yeah. The originals for the Tobey Maguire Spider-Man.
It's the OG.
Yeah.
That's valid.
They're all pretty good though. Everybody wants to pick and choose. They all did some things well. All the different Spider-Mans.
We do have Marvel here, sitting at an IV rank of 103 right now, up about 11 points on the day, and 15.3 million shares traded on the day as well. So
yeah, Marvel, I like the long-term prospects for this company. I wouldn't be looking to get long at these levels. Obviously, it's been an insane run up over the past few months. But that said, though, I'm not surprised if we find ourselves in a Micron situation here where this thing just keeps going and possibly higher, because Marvel, they are just so well positioned. They make all of the things for data centers that nobody thinks about, like the silicon and the connectors. It's like all the plumbing that goes into data centers. Marvell is there. So as long as AI keeps growing, Marvell is the premier provider in that space for everything that they do. And I think that there's very good growth prospects for Marvell moving forward as well. I've been kicking myself for this entire run up for not being long through it, because I've had this thesis for a while. Space data centers, Elon Musk is going after them. We already know that. He's got to build a 100 terawatt data center on Mars somehow for that SpaceX pay package. So might not be far away. Is Marvel a Disney? Oh, I see. Just meant to be confusing. Is Marvel a Disney just bought from Netflix? I mean, Warner Bros. Does Disney? I don't think Disney owns Marvel now.
What does Disney own?
I mean, Disney owns Star Wars.
I'd have to double check on that, big deal.
Marvel. Well, no, because Stan Lee, there's like that clip of Stan Lee signing the thing to sell Marvel and he looks all sad, right? Or am I just confusing that with George Lucas selling the Star Wars properties to Disney? I don't know. Somebody tell me.
Baba has been pretty slow lately, not as much volatility in some of those stocks.
Yeah, the China names, I was expecting to see a little bit more.
What was the other one?
Stuff.
Baidu,
yeah. I was expecting to see a little more stuff happen with the China names while Trump was over there, but we got some little intraday pops, but nothing actually substantiated. We've pretty much just returned to the pre-levels. Disney owns Marvel. Thank you, Ryan.
There we go.
Appreciate it.
There we go. Let's check out Disney. What's been up with Disney lately?
Disney owns everything. Yeah.
Disney owns everything for real. Excuse me. Trading at $102 right now. Down a little bit on the day. Decent IV rank. Let's see. We got dividends June 30th, but I mean, no earnings in the way. Not something that's too attractive right now, for me at least. No, it's Marvel. Mystery oil, right?
Marvel mystery oil.
Mystery oil. Let's quickly check out what's going on over here on the watch list, and we'll do a quick tour to market before we start to wrap for the day. We got one position on so far. We put on a little bit of long delta on Rivian. We'll see where we go for that. You can see we're down $1 on the day. Not helpful so far, but we got 30 days left till expiration. But no, one thing I'm pretty shocked about, I know we were speaking about VIX earlier today. Volatility concerning me a little bit here. We've seen volatility in the market from a price standpoint, but volatility in itself hasn't been moving like at all over the last 7 to 14 days. And volatility kind of died whenever we collapsed around April 8th, April 9th, whenever the market put in another leg to the all-time highs. So I don't know if the market's just waiting on for those binary events to pass, like NVIDIA and FOMC minutes tomorrow, but still curious to see what's going to be the straw to break the camel's back. And I think another thing to pay attention to is those Iran and Trump headlines. I think they're getting weaker as each headline comes out. I think the market's not believing Trump as much with the level of conviction that we were initially were reacting or responding off of the things that he was saying. But I don't know what it's going to be. It feels like we're kind of been in the same market for about a month now, whenever we're taking a look at VIX over here.
Yeah, I agree with with the idea that the market is just kind of believing Trump less and less, or buying into these things less and less. I think that was well exemplified yesterday afternoon. There was a Truth Social post about how the UAE, Trump posted on Truth Social about how the UAE had asked him to stop bombing Iran, and so he was going to hold off for a little bit longer or something like that. And we had a run for like 5 minutes and then immediately returned to the previous levels. It was like the market, like there's just a few scattered people that are like, oh, maybe this means something. And SPX went from down 0.3 to down 0.2 in like 5 minutes. And then it was down 0.3 again, like 5 minutes later. It's just, we've stretched and stretched and stretched. It was like initially these things, we would buy them for like a week, and then it's 2 or 3 days, and then it's 1 day. And we've gotten all the way down to where now it's like 5 minutes.
Yeah,
How long we're willing to buy into these things for.
And I know Big Deal mentioned over here, I'm hearing rate price higher. I honestly think Donald Trump has his hands absolutely tied behind his back. I don't know how he's gonna get out of this one, but I think he's gonna have to shift the blame to the new Fed chair, because I think the new Fed chair is gonna be put in a position where he's gonna try and do the best that he can, but he might have to hike rates depending on what happens, especially with Iran. But I think Trump has his hands tied behind his back. We still got metals at higher prices. We got oil at all-time highs. We have the U.S. stock market at all-time highs. So if we have to increase rates, maybe that'll be the thing to actually break the camel's back and get more volatility pumping into this market.
Yeah, and bonds at multi-year lows.
Good Lord. Oh, Lord.
Yeah, TLT, ZB, pick your product. But bonds, trading at multi-year lows.
Gotta get some long delta on TLT.
I'm probably gonna do the
long
same
delta
on
here.
TLT. This is a product you don't, it makes these moves from time to time. But Yeah, I feel like coming off these levels, somebody just yesterday was talking about getting long bonds, and I think that just becomes even more attractive to me down here where we're at now.
Yeah.
They over inundated us with these superhero movies. I can't watch them anymore. I think that's fair.
That's fair.
Spider-Man 2 was great. Good, Ranch. Happy we're aligned on Spider-Man. What's the average VIX compression before expansion move? Before expansion move. Back tests, if any? I don't know of any back tests off the top of my head that we have done them. They have been done by the research team. Don't doubt it. But I don't know of any off the top of my head. I wish I had a better answer for you. Big deal. Big deal. I saw you ask earlier how VIX is calculated, and it's a very complicated question that would take a few minutes, but it's basically, the SIBO has great resources about exactly how it's calculated on their website, but it's basically like options pricing, there's variance in the equation, there's like weighting in the equation, there's annualization, there's a whole, it's a whole laundry list of factors that constitute VIX, but the SIBO has a really good rundown of all that posted on their website. Our good friends at the SIBO.
We're going to go ahead and get a little bit of long delta on here in the bonds. I guess some long delta Rivian, a little bit of long delta, some of the bonds. I mean, that gap in the bonds a few days ago was pretty vicious. I think that was from Thursday to Friday. Bonds trying to rally back a little bit today. We're going to put on a zebra. I've never put on a zebra in the bonds before.
So
but again, what's
for it, for
yeah,
sure.
definitely. I mean, what's so attractive about it is, number one, the buying power is only $346 to synthetically get long roughly 95, 96 shares of these bonds, of TLT. So it's like getting stocks discounted, right? We don't get to own them, so that's one of the downsides. But if we really wanted to, maybe we could turn this into a poor man's covered call to reduce that cost basis a little bit, maybe sell some out-of-the-money calls against this position. And we could also think about that with Rivian as well, since we entered long into that one today. So we're going to try and get filled here. Only $346 worth of buying power. I mean, if bonds continue to sell off, if they continue to sell off, I feel the long would be even more attractive, but we will manage our position if we need to. But maybe we risk about $100, $200 on this position. So if we get down to about $81 on the bonds, then we might have to do some risk management and then maybe flip the position, sell some out of the money puts, because that long would be an early entry, hypothetically, if that were to happen. So let's go ahead and send this through, get some long delta in the bonds. I feel officially old now. I'm over here trading bonds. So I think I've graduated to I don't know. I don't want to say the boomer status, boomer level, but I will say the Gen Z generation, we don't hear too much about bonds.
It's true. I am going to tell you into this one as well. I'm taking just a slightly different angle. I'm attacking this with the same expiration cycle as Oklo, the July 17th.
Nice.
I played the 84-85 short put vertical. 85, like when bonds were at the 85 level, it was like, okay, we're basically at multi-year lows there. I mean, like $1 from it. So now that we've slid that far below that, I feel like a recovery over 85 feels pretty imminent. Bonds can be a slow-moving product, which is why I'm going to attack a slightly longer expiration cycle than you, and that partially reflects the fact that mine is a lot more binary. I really need it to get over 85, whereas with the Zebra, obviously you're just looking for a move to the upside in general.
Yeah.
But yeah, this is bonds. This feels too low. As I said yesterday, and we'll reiterate today. Tom always said, whenever bonds drop, they're a buy, and boy, have they dropped. So this feels like a good spot to go ahead and get involved.
Yeah. I know bonds were trading at a low of 83.27 before this, and today we surpassed that. So I think it'll be a fun one. It'll be exciting. Anything else top of mind before we have to wrap? I know we're over just a couple minutes now.
Big deal said some bondage. You dirty dog. Big deal. What's going on, Rhett? Good to see you. Appreciate you letting us know you're here. We worry about you guys when you go missing for a few days. For real, we talk about people we haven't seen in a while at our desks fairly often. You have a great day too. I might get long here in silver a little bit. Yeah, I'm waiting for just a little lower on silver, but I like the thesis. I don't think this is necessarily a bad level for it at all either. I'm trying to catch the bottom just perfectly, but. Yeah, no, nothing else top of mind for me.
Yeah. Who has the most experience trading bonds here? I just put my first bond trade on. So, I'm coming up.
Maybe my third. Tony.
I would say, yeah. Oh, Tony, easy. Yeah. Tony doesn't count either. You can't use Tom or Tony.
Yeah, if Tony doesn't count either, then
I got to go. I'm thinking macro. Oh, maybe Nick. I would say the apple doesn't fall too far from the tree.
Yeah,
they know everything about the market.
Yeah, I would. That's where I would put my money.
Yeah,
but I mean, I don't know. Does Dr. Jim play bonds? Does Tim Knight play bonds?
Nah, I don't know. That'll be
Chris or liable.
I'm thinking macro, right?
Yeah,
maybe macro.
Yeah.
So, anyways, with that being said, guys, big deal. Jared, Grumpy Mike. Yeah, maybe so. Catter, Rets Media, everybody else, thanks for taking the time to hang out with us today. We'll see what we get over the next couple hours. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
So welcome to our Options Crash Course Strategy Series. I'm Jim Schultz. I'm going to be your tour guide for this series. First up on the docket, we are going to cover the short vertical spread. And what we want to do is we want to hit three things. We're going to hit these three things across each and every strategy within this series. We're going to talk about managing winners, we're going to talk about managing losers, and then we're going to talk about managing the dance floor. But before we get to all that, let's remind ourselves what a short vertical spread is. Okay, so a short vertical spread. This is a defined risk directional trade, and this is a great option for a beginner trader who's looking to, understand the mechanics, kind of get their feet wet in the world of options trading, because it's a very, very strong thing with a ton of peace of mind to know what your worst case scenario is on order entry. But how do we set these guys up? Well, they all set up basically the same. You sell one out of the money option, and then you buy a second further out of the money option. By buying that second option, that is the thing that puts the safety net in place. As a reference point, we typically like to collect around 1/3 the width of the strikes. So if it's a $2 wide vertical spread, we'd collect about 67 or 70 cents. If it's a $3 wide vertical spread, we'd collect around $1. We feel that this is a great risk-return balance and a risk-return trade-off that sets us up in a nice high probability situation. Okay, easy enough. But once you put this thing on, how do you manage it? Well, first up, managing those winners, right? The easy stuff, the fun stuff. You put on a short put spread and the stock goes higher, that thing's going to manage itself. That thing is not going to be difficult to handle because it's going to be an easy winner. It's going to be a fun time. You put on a short call spread and the stock goes lower, that is also going to be a fun time. That is also going to be an easy trade. You set your profit targets at 50% of max profit for either this short put spread or this short call spread. And if the stock accommodates you, man, you just take it off, you move on, you find another opportunity. Don't overthink it. Okay, so now for the not so fun stuff. How do you manage your losers? What do you do when the position is a loser and the stock isn't accommodating you? Thankfully though, this situation is actually pretty simple too. If you get to 21 days to go, then look to roll this thing out to the next monthly cycle. Don't change the strikes and don't add units. Just pick this guy up, move it out to the next cycle, and drop it down. At 21 days to go, however, what you want to make sure that you can do is roll forward for a credit. You don't want to pay a debit to roll your position because this would add risk to the trade. So if you can roll forward for a credit at 21 days to go, then by all means, do so. But if you have to pay a debit, which will be the case if the position is too far gone, then you have to sit and wait, right? We control our size on order entry. So in the event that this does happen, it's something we are ready and willing to absorb. And to be perfectly honest, this is going to happen to you a time or two or 10 or 20 over your trading career. It's a probabilistic certainty. But remember, as high probability traders, this is not going to be the most likely outcome. We are most likely going to be managing our winners. All right, so now we know how to manage winners with short vertical spreads. We know how to manage losers with short vertical spreads. But what do we do with everything in between? Right? What do we do with all those dance floor situations where we're at 21 days to go? Maybe we have a scratch, maybe we have a small winner, maybe we have a small loser, right? How do I know how to handle that situation? Well, I'm not even going to pretend that this is going to be an exhaustive list for how to handle those situations. But here is something that's a really good, sound, strategic way to approach these situations. Look at the IVR on the trade. Look at the implied volatility rank. If the IVR is still elevated, right? If the IVR is still high like it was when you put the trade on, then consider keeping it on because, the implied volatility is a mean reverting entity, and if it does indeed mean revert and come back down, then that's going to help you reach your profit target. If, on the other hand, IVR has collapsed, then it might be time to take that trade off. Whether it's a small winner, a small loser, or a scratch, it might be the best move to just close the trade, move on, and find something else. So there you have it, man. That is how to manage a short vertical spread. Be sure to save this video for reference, and when you are ready, check out the next video inside of this crash course strategy series, long vertical spreads. We'll see you there. So welcome back to the Options Crash Course Strategy Series. My name is Jim Schultz. I am still your tour guide. In this video, we are going to cover the long vertical spread, and we're going to follow the same framework that we followed for the short vertical spread. We're going to talk about managing winners, we're going to talk about managing losers, and we're also going to talk about managing that dance floor, all that stuff kind of in between. So first, let's begin with how a long vertical spread sets up. Alright, so a long vertical spread, it's going to set up pretty similarly to a short vertical spread, where you're going to have a long option and you're going to have a short option, but their exact placement, that's going to be a little bit different. Right? Remember, with a short vertical spread, we focus primarily on out of the money options. Well, with a long vertical spread, we're actually going to be closer to at the money with our strikes. We're going to go a little bit in the money with our long strike and a little bit out of the money with our short strike, basically straddling the current stock price with this strategy. We like to be around the at the money strike for the following reasons. We don't want to move too far out of the money because that's going to be a low probability trade, right? And even though we're buying premium, we still want to be aware of the probability on this trade. We also don't want to move too far in the money because that will not be a great risk-return trade-off for this type of strategy. Alright, so that's how a long vertical spread sets up. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity. All right, easy enough, man. Those winners, they're going to pretty much take care of themselves. But what about the not so fun stuff? The losers, right? What do you do when this trade moves against you? What do you do when the stock doesn't cooperate? Well, to put it very simply, nothing. You sit and you wait. Sure, if you can roll out at 21 days to go and you can do so for a credit, then you should do that. But if you can't, if the strategy is too far gone and the stock has just not come back to you, you have to sit and wait. Remember, we control our position sizing on order entry. And so if it takes the whole cycle for this thing to come back, then it takes the whole cycle for this thing to come back. If it never comes back, then it never comes back. With our defined risk positions, especially something like a long vertical spread, if the stock doesn't cooperate, then you just have to do nothing. All right, so that is it. That is how you manage a long vertical spread. Again, be sure to save this video for future reference, and then when you are ready, I will see you in the next video where we are going to talk about iron condors. We'll see you guys there. Welcome back to the Options Crash Course Strategy Series. My name is Jim Schultz. In this video, we are going to cover the Iron Condor, and we are going to follow the same framework, the same protocol as we've already done. We're going to talk about managing winners, we're going to talk about managing losers, and then we are going to talk about managing everything in between. So let's begin with how to set up an Iron Condor. Alright, so an Iron Condor is a neutral strategy that benefits most from a stock that doesn't move too much. It is built from two out-of-the-money short vertical spreads. You have a short put spread below the current stock price, and you have a short call spread above the current stock price. Your best case scenario is both of those spreads stay out of the money. Both of those spreads are moving towards expiration where they won't be worth anything. Now, on entry, we like to collect about 1/3 the width of the strikes. The short put spread and the short call spread have the same width, so it doesn't matter which one you choose. But similar to a short put spread or a short call spread, we're looking to collect about 1/3 that width of the strikes. Now with an iron condor, it's unique because you have two spreads, so you don't need to collect 1/3 the width of the strikes from one spread, you need to collect 1/3 the width of the strikes from both spreads. Alright, so that's how an iron condor sets up, but now the fun part. How do you manage those winners? Well, it's actually going to be very similar to what we saw with our short vertical spreads, whether it be a short put spread or a short call spread. We're going to target 50% of max profit. So what that means is if you sell an iron condor for $1, you're looking to buy it back for 50 cents. If you sell an iron condor for $1.80, you're looking to buy it back for 90 cents. It really is that simple. Take these guys off once they reach 50% of max profit and don't look back. Alright, easy enough. But what about the not so fun part? What about these losers? When the stock moves up significantly or the stock moves down significantly? Well, what you're going to want to do is largely going to be driven by the width of the iron condor. So let's start with the more narrow guys. You know, your $3 wide iron condors, your $5 wide iron condors. You can treat these very much like you treat every other defined risk strategy. You can pretty much just sit and wait. You control your risk on order entry, and then at 21 days to go, if you can roll for a credit, then you do so. If you have to pay a debit, then you sit tight and you do nothing. This is absolutely a viable alternative with these narrow iron condors. Now, to be fair, you could also roll the untested side. So if the stock moves up a lot, you could roll the put spread up. If the stock moves down a lot, you could roll the call spread down. That is going to bring in a credit and it will reduce your risk. But you have to be aware, it's also going to shrink that region of profitability. It's going to make it more difficult to be profitable on this trade because there's simply less distance between the two short strikes now, and there's already a tremendous amount of friction between the short options and the long options. Alright, so that's how you handle the narrow iron condors. But what if you have a wider iron condor? What if you have an iron condor that's, I don't know, $10 or $15 or $20 wide? Well, this is actually going to behave a lot more like a short strangle, which we're going to see in a future video inside of this series. Even though the risk is very much defined, because you have so much distance between the short option and the long option, these guys are going to behave a lot more like a strangle. So it's probably prudent to roll that untested side when one of your sides gets tested. Because you have so much additional distance between the shorts and the longs, there isn't going to be as much friction as you would have with a more narrow iron condor. So what this means is you will be able to reduce your risk, you will be able to bring in more credit, and you won't shrink your chances of being profitable on the position like you might with a $3 wide or a $5 wide iron condor. Okay, so that's how to handle the winning iron condors. That's how to handle the losing iron condors. But what about all the iron condors that are kind of like, not really a winner, not really a loser? You get to 21 days to go and they're pretty much a scratch. Well, this is going to be largely up to your discretion as a trader, but here is a good reference point to use, the same one that we used with our short vertical spreads. Look at IVR. Look at the implied volatility rank. If it's still elevated like it was when you put the trade on, then consider keeping it on. But if it has collapsed, if it has come in a little bit, then you might want to consider taking it off. Following IVR and using it as your reference point here really allows you to take advantage of any volatility mean reversion that might indeed take hold. Alright guys, that is it for the Iron Condor. Save this video for future reference, and hey, share it with a friend. Right, share it with one of your trader friends that's trying to learn about iron condors. And when you are ready, I will see you guys in the next video inside of this series, the diagonal spread. We'll see you there. Boom. So welcome back to the Options Crash Course Strategy Series. It is nice to see you again today. My name is Jim Schultz. In this video, we are going to cover the diagonal spread. Now guys, this is probably my favorite low IV environment strategy. The flexibility, the adaptability is second to none. So let's follow the same structure as what we've done so far. Let's talk about winners, let's talk about losers, and let's talk about everything in between. But before we do, let's remind ourselves how a diagonal spread sets up. All right, so how does a diagonal spread set up? Well, first, let's remember that a diagonal spread, it's kind of a hybrid strategy. It is part vertical spread and it is part calendar spread. So you have both a directional component and a time component. What that means is if you get the stock move that you want, then you can get paid very quickly. It also means that you can benefit from the simple passage of time. Now, our diagonals are always debit strategies. So what that means is this. If you are bullish, you want to use call options. If you are bearish, you want to use put options. And the way it sets up is as follows. You want to go into the back month and you want to buy an option that has a couple strikes in the money. Then you want to step into the front month and you want to sell an option that has a couple strikes out of the money. Now that's probably about as clear as mud. So let's work through a couple of examples. Let's suppose that you are bullish on Apple and Apple is currently selling for $130. The front month is February and the back month is March. What you might want to do is go into March and buy the 128 strike call. That's a couple strikes in the money. Then you go back into February and you sell maybe the 132 strike call that is a couple strikes out of the money. This would give you a $4 wide diagonal spread. Or let's say you're bearish on the overall market. Let's say you're bearish on the SPY. SPY is at $350. The front month is still February and the back month is still March. The way you could set this guy up would be going into March and buying maybe a 353 put. That is a few strikes in the money. Then you step into February and maybe you sell the 348 put. That is a couple strikes out of the money. Here, you would have on your hands a $5 wide put diagonal spread. Either way, guys, call diagonals, put diagonals, upside, downside, bullish, bearish, I don't even care about any of that. Here is the most important part of the whole puzzle. You don't want to overpay for your diagonal spread. You don't want to pay more than 75% the width of the spread. So on our $4 wide diagonal in Apple, that would be about $3. On our $5 wide diagonal in SPY, that would be about $3.75. Why is it so important that you not overpay for your diagonal spread? Well, you need to remember that the width of the spread, less the debit that you've paid, that's your profit potential. So on that $4 wide diagonal in Apple, you pay $3. The maximum profit on that strategy is $1. If you overpay, if you pay too much for your diagonal spread, you might find yourself having gotten the move that you wanted and you didn't even make any money. You're not even profitable and you're just left scratching your head. So by all means, tinker with the strikes. Play around with it a little bit until you get the risk-return trade-off that you want. But if it doesn't set up, then it doesn't set up. Just walk away and find something else. All right, so that's how a diagonal spread sets up. Now, the fun part, the winning trades. How do we manage these guys? Well, it's actually pretty simple. And it's very similar to everything we've done to this point. We set our profit target right at about 50% of max profit. So again, on that $4 wide diagonal spread, you pay $3, your maximum profit is $1. You're only looking to come away with 50% of that. So about 50 cents. That will be a winning trade. You book it, you close it, you move on, you find another opportunity. All right, so now, unfortunately, the not so fun stuff, those losing trades, right? You put on a call diagonal and the stock goes down. You put on a put diagonal and the stock goes up. What do you do? Well, this is the true beauty of the diagonal spread. Because remember, you have distance between your short option and your long option. You have options, pun intended. All right, so you've basically got three options here. Number one, you could roll that short option forward into like a weekly cycle and create for yourself sort of a mini diagonal spread. You'll be able to do this for a credit. This is probably the most standard adjustment to a diagonal spread. Number two, you could roll forward into a mini diagonal spread, but simultaneously you roll your short strike in, thus shrinking the width of the diagonal spread. If you choose to do this, you will aggressively collect more credits, but you need to be mindful that you don't shrink the width so far that the net debit that you've paid exceeds the width of the diagonal spread, because if you do that, you will be locking in a loss. Number three, you could also roll the short option all the way into the back month with the long option, and this would create for yourself a vertical spread in that back month cycle. Okay, so when do you make these adjustments if you don't get the move that you wanted? Well, this is largely going to be up to your discretion, but usually no sooner than 21 days to go, and possibly even later in the cycle, because this is a defined risk strategy where your maximum loss is approximately the cost that you've paid for the diagonal spread. All right, so those are winners, those are losers. What about everything in between? What about when you get to 21 days to go and you're kind of even? What about when you get close to expiration on that short option and you're kind of at a scratch? What do you do? Well, this is very, very simple. Roll that short option forward into a weekly cycle and go for that mini diagonal. Man, unless your directional bias has changed, take full advantage of the flexibility that you have with this strategy. All right, guys, that's it. We made it to the end. That is the diagonal spread in 8 minutes or less. Be sure to save this video for future reference, and when you are ready, I will see you in the next video, which is going to be our first undefined risk strategy, the short strangle. We'll see you guys there. Welcome back to the Option Crash Course Strategy Series. My name is Jim Schultz. We are going to continue with our undefined risk category today, and we are going to specifically cover the short straddle. Now, as you're going to see, this is going to be a little different from what we've covered thus far inside of the undefined risk category, so pay close attention. We're going to do this the same way that we've done it to this point. Winners, losers, and then dance floor. So let's begin with how a short straddle sets up. Okay, so a short straddle actually sets up very similarly to a short strangle. You have two options. You have a short put and you have a short call. The key difference here, though, is that with a short strangle, we saw that there was some distance between the short put and the short call. But with a short straddle, they're actually going to share the same short strike. And that short strike is usually going to be situated right around where the stock price is to create that neutral directional bias. So for example, if the stock price was 100, you would do a short put at 100 and a short call at 100. If the stock price was 45, you would do a short put at 45 and a short call at 45. Now, to be fair, naturally, if I heard that, if I was on your end of the information today, my question would be, Jim, why in the world would I do that? Why in the world would anybody not have any distance between their short strikes? Well, the answer, or at least part of the answer, is this. Remember that the at-the-money strikes always carry the greatest amount of extrinsic value. So by choosing to sell your strikes there, you are maximizing the short premium that you collect. Okay, so that's how a straddle sets up. Now, on to the fun part, those winners. How do you handle those straddles that are profitable? Well, this is actually going to be different from what we've seen in the previous 6 videos. We're going to target a smaller percentage of max profit. We're only going to target 25% of max profit. And the reason why is this. Yes, it's true that the at-the-money strikes command the greatest extrinsic value, but they also cling on to that extrinsic value the longest. So we combat this by more aggressively managing our winners at a smaller percentage of max profit, 25% relative to 50%, like we've seen with the other strategies. So for example, if you sell a straddle for $5, we will be looking to take off about $1.25 or 25% of that. If you sell a straddle for $3, we will be looking to manage that winner at about 75 cents. All right, so now on to the not so fun stuff. How do we handle those losers? Well, similar to a strangle, this is going to be kind of a step-by-step process. As long as the stock is between your break-even points, you sit and you do nothing. Since we have that shared strike, one of our strikes is always going to be in the money, so we can't use the distance between the short strikes as our reference point. Instead, we use the break-even points. As long as the stock is between those two markers, the strategy is working, and your best bet is most likely to do nothing. So for example, if you sell the 50 straddle for $5, let's say, your upside break-even is 55, your downside break-even is 45. Those become your two markers for knowing when it's time to adjust your strategy. Okay, but now, let's say one of your break-evens does get hit, whether it be on the top side or the bottom side. What do? Well, first, quick little disclaimer. This is, of course, not the only way that you can handle a short straddle and its adjustments, but I do think it's a pretty good foundation. Similar to what we saw with a strangle, this is going to be a step-by-step process. The key difference here, though, is we don't have as many adjustments available to us that we had with the strangle because we're already starting in the straddle position. Since we're already in a straddle position, we basically only have two adjustments available to us. We either roll out or we go inverted. So how do you know which of the two to choose? Well, take a look at how much time is left in your cycle. Again, if you are close to around 45 days to go, the move might be to go ahead and go inverted. Follow the same protocols that we've laid out in the previous two videos with short puts and short strangles. Start with that at the money strike. Start with that at the money strike because it has the greatest amount of extrinsic value, and then make adjustments from there. The one thing that you want to be aware of course, is the credits you've collected relative to that width of inversion. Now, if you happen to be closer to 21 days to go, then roll out in time first. Go to that next cycle, add duration, and pick up that extrinsic. And of course, don't forget, if at any point in time you want to more aggressively reduce your risk and more aggressively improve your basis, then you can do both. You can go inverted and roll out in time at the same time. Okay, now as far as when to call it quits, when to wave that white flag, well, as we've seen in the last couple of videos, if you want to manage your losers, somewhere around 2x to 3x of total credits received is a great starting point. So for example, if you've collected $7 in total on your straddle and all of its adjustments, then buying it back for $21 would be a 2x loser. Buying it back for $28 would be a 3x loser. If, however, you collected, let's say, $9 on your straddle and all of its adjustments, then buying it back for $27 would be a 2x loser, and buying it back for $36 would be a 3x loser. Alright, so those are the winners and those are the losers. But what about everything in between? What about that dance floor? Well, this one's pretty simple because it's the exact same as what we've seen so far. Look at IVR. If IVR is still elevated, then consider keeping it on. If IVR has collapsed, then consider taking it off. Alright, so that's it. The short straddle is now in the books. Be sure to save this video for future reference, and then when you are ready, I will see you in the next and final video, the ratio spread. We'll see you there.
Boom.
So welcome back to the Option Crash Course Strategy Series. My name is Jim Schultz. In this video, the final video of the series, we are going to cover the ratio spread. And we're going to follow the same protocols that we followed to this point. We're going to cover winners, we're going to cover losers, we're going to cover that dance floor. But first, let's talk about how a ratio spread sets up. So the ratio spread, this is arguably the most versatile, most flexible strategy that is available to us. And it consists of two parts. You have one long option and you have two short options. The long option is usually situated at the money or slightly out of the money. The two short options are then placed further out of the money. And because you have two short options relative to every one long option, this is going to be a net credit strategy. So for example, let's say that the stock was at $50. You might set up a put ratio spread using the 49 strike and the 48 strike. You would buy a put at the 49 strike and then sell two puts at the 48 strike. But let's say the stock was $75. You might set up a put ratio spread using the 75 and 72.5 strikes. You would buy a put at the 75 strike, the at the money strike, and then you would sell two puts at the 72.5 strike, the out of the money strikes. Now, there are a few things that you want to be aware of, that you want to be cognizant of when it comes to putting on a ratio spread. First, the wider you go with your ratio spread, the greater your maximum potential profit. This is because the vertical spread that's kind of baked into the center of the ratio spread could potentially be worth more money. The trade-off here is the wider you go with that ratio spread, the lower your credits collected. Second, you want to make sure that on entry, you collect a credit that is economically significant. You'll see why in a couple of minutes. Third, we typically prefer put ratio spreads over call ratio spreads. And this is for the same reason that we typically prefer short puts over short calls. The market wants to go higher over time. So battling a short call over cycle after cycle after cycle in a market that wants to grind higher can really be a stick in the mud. Alright, so managing winners, everybody's favorite. This is actually going to be a little bit more involved than what we've seen to this point. And that's because with a put ratio spread, you can actually make money in both directions. If the stock rallies, then you're going to keep the credit collected because those options are going to move further out of the money. But if the stock falls, then you could potentially make more money. This would happen at expiration. If you pin that short strike, you'll keep that credit collected, but you'll also pick up the width of the ratio spread. Since we don't hold our undefined risk trades inside of 21 days to go, we're actually not super interested in that stock falling scenario since that's never really going to come into play. So we want to focus our energies on the stock rallying scenario. How do we manage those winners? Because ratio spreads are so versatile and they are so flexible, you're going to have to use a lot of discretion in handling these situations. But if the stock does rally and the options move further and further out of the money, you're going to want to look to capture most of the credit that you have collected. So for example, let's say you put a ratio spread on entry for 60 cents. If you can buy that thing back for 20 cents a week later, then you might want to consider doing that. Let's say you put a ratio spread on for 90 cents. If at some point in the future you can buy that thing back for 30 cents or 33 cents, you might want to consider that one too. Again, there's no hard cutoff point here, so you're going to have to use your experience as your guide. But do you remember when we said it needs to be economically significant? This is why. You want to put yourself in a position to where if the stock does rally and your P&L approaches that credit collected, that it is meaningful. Alright, so now what about those losers? Well, our reference point for adjusting is going to be that short strike. As long as the stock is above your short strike, then you do nothing. Alright, easy enough. But now what do you do if the stock does fall down through your short put strike? How do you handle that situation? Well, the first thing you're going to want to do is check the value of the vertical spread that is baked into the center of the strategy. If you can take that off for nearly max value, then go ahead and take that off. So for example, if you have a $1 wide ratio spread, then the vertical spread that's in the center is $1 wide. If you can take that off for 85 cents, that's almost max value. If you have a $2.50 wide ratio and you can take off the vertical spread for $2, that's also almost max value. Now, where is the cutoff point for determining if it's enough on the vertical spread to take it off? Well, that's largely going to be up to you, but I can tell you what I do. If I can't get at least 80% of the vertical spread's value, then I do not take it off. If you are able to close out of that long put vertical for near max value, now all you have left is a short put. So manage it in the same way that we did in the short put video. Just keep in mind that now your total credits collected are the credits on order entry and the credits from selling out that vertical spread. Okay, but what do you do if you can't close out of that vertical spread for near max value? Well, you basically have two options. First option, you sit and you wait. You do nothing. You can do this here because either one of two things is going to happen. A, the stock goes down. If the stock goes down, then that vertical spread is going to increase in value and you're going to be able to close it down. You close it down, you manage that extra short put accordingly, and you move on. Or B, the stock actually rallies. If the stock rallies, then those options could be out of the money again. This is an even better scenario. Or the second option, of course, is you can roll the whole thing out in time. You can pick the whole thing up, the short put, the vertical spread, all the pieces, and roll it out in time. If you do this, you will reduce your risk and add duration to the trade. All right, easy enough, but what do you do if the stock just keeps falling? What do you do if no matter what you do, the stock will not come back? Well, again, remember, if you choose to manage your losers, somewhere around 2x to 3x of total credits received is a really good marker. So for example, if your total credits from order entry, from rolling out, from closing out that vertical spread, if all of these credits were $4, for example, then buying it back for $12 would be a 2x loser, and buying it back for $16 would be a 3x loser. All right, so those are the winners and those are the losers. But what about everything in between? What about that dance floor? Well, since you have that extra short put and this strategy is so flexible, rolling out in time as your default option is not a bad move. But remember, you can always use IVR as your guide. If IVR is still elevated, then keep it on. If IVR has fallen, then take it off. Wow, you guys made it. The Option Crash Course Strategy Series has now come to a close. I sincerely hope that you guys got some value from these videos. So that is it, and I will see you guys next time.
Boom.
So welcome back to the Rolling Crash Course. My name is Jim Schultz, and you made it, man. We are in episode number 5. So I would argue that this is the most valuable episode of the entire Crash Course, because for the next 10 or 15 or 20 minutes, however long it ends up being, we're going to talk about some rolling FAQ. Now, I'd be willing to bet that in the previous 4 episodes, episode 1, 2, 3, and 4, you've had some questions along the way. Well, my goal and my intention with these FAQs is I want to fill in some, maybe even all of the gaps that you've had along the way here in episode number 5, rolling FAQ. So without further ado, let's do it, man. Let's dive right in to episode number 5 of the Rolling Crash Course. All right, so let's dive right in because we have a lot to get to. FAQ number 1. Now, these are in no particular order, but our first FAQ. What do you do when you have a position that's been tested very early in the cycle? You still have like 35 days to go or 40 days to go or 43 days to go. Like, do you still roll that position? Like, do you still move that position out? Do you still move, one of your strikes if it's tested? This one is a little bit trickier. The safe, diplomatic answer is yes. Roll the defined risk strategy if you can for a credit, and roll the undefined risk strategy for sure, because you can always do it for a credit. But I gotta be honest, this is a unique situation. It's kind of a gray area. So if you wanted to wait just a wee bit longer to see if the market might come back to you, to see if things don't normalize, I gotta be honest, man. I don't hate it. I don't hate it at all. Just don't tell Tom that you did it. All right, so FAQ number 2. What do you do when your strikes are not available, the strikes that you currently have in your position, are not available in the next cycle? How do you handle that? Well, there's actually a few things that you want to consider here, so let's have a look. So first, if the strikes aren't available in the next monthly cycle, they will be eventually. So you could wait until more strikes begin to show up in that cycle, which usually happens with at least a few weeks to go in the cycle. But second, you could also consider rolling into a nearer term weekly cycle. These cycles typically have more strikes available. Just be mindful of the bid-ask spread differential and make sure that it isn't super, super wide, making a fill in that option a much more challenging task. But third, you could always roll your strikes up or down too, even if you don't want to, just to get into that next monthly cycle. When you do this, just be aware that you are potentially altering the intrinsic value of the position. More specifically, assuming the strike or strikes are in the money, whenever you move the strike further away from the stock price, it will boost your credit collected, but it will always move the position deeper in the money. Similarly, when you move the strike closer to the stock price, it will lessen your credit collected and possibly even require a net debit, but you are reducing the in-the-moneyness or intrinsic value of the position. Now, which should you choose? There is no right or wrong answer. It's all about gimmies and gotchas, but those are the things to consider. So FAQ number 3, 21 days to go. Defined risk and undefined risk. Handle these guys differently or handle them the same? Well, here is how you want to think about this. Undefined risk. Always roll at 21 days to go. Don't think about it. Don't debate it. Don't hesitate. Just go ahead and do it. There's no reason not to do that because you can always do it for a credit. But defined risk. If you can roll at 21 days to go for a credit, then go ahead and do it. But if you can't and it's a debit, then just sit on it. Sit on it and hold it all the way to expiration if you need to. Remember, you have that long leg in place, so you're not exposed to the gamma risk that you would be with a naked position. So when it comes to 21 days to go, defined risk and undefined risk strategies need to be handled differently, and this is how I would think about them. All right, so moving right along, FAQ number 4. Are there any exceptions to the never roll for a debit rule? Yes. Let's look at a couple of them. There are 2 main exceptions to the never pay a debit to roll rule. The first is with an undefined risk strategy like a strangle, inverted strangle, or even just a short put. Paying a debit to roll when you recenter your strikes is definitely something to consider. Now, if you don't want to mess with this and just keep rolling for credits, like that's always an option. But if you want to reposition your strikes into a more favorable spot and you're willing to use some of your collected credits to pay for that debit roll, then by all means, it's something to think through. Second, with a defined risk strategy, one situation where you might want to consider paying to roll is, say, a vertical spread where the cycle that you're rolling to has earnings. Earnings are binary events that always have the potential for explosive moves, so it might be worth it to you to pay 20 cents or 35 cents to roll a $5 wide vertical into that cycle and see if the earnings can bail you out. Yes, you are adding risk to the trade and you must be aware of that, but the potential payday from an earnings move in your favor might make it worthwhile to consider. All right, so FAQ number 5, and this one is kind of a twofer, and it is dealing with our old pal, the Iron Condor. So number 1, should you roll the untested side of an Iron Condor when the other side is tested? And number 2, should you consider legging out of the strategy when one side is tested? Let's dig in. As for rolling the untested side of an Iron Condor when one side is tested, yes, you can certainly do that. And if risk reduction is your primary goal, then you should absolutely consider this adjustment. Just be aware that the closer you bring those short strikes together, the more and more difficult you're making it to make money. This is largely because the region of profitability is shrinking smaller and smaller, and with the long options on each side, your margin for error to make money is already on the small side due to the friction between the longs and the shorts in the strategy. So yes, you can roll the untested side in on an Iron Condor, but don't forget, you can also choose to do nothing. And I would also add that if risk reduction in a defined risk strategy is your primary goal, I have to point out, you might be trading too large. Your total risk in a defined risk trade should be controlled on entry. It shouldn't be something that you feel pressured to reduce during the life of the trade. Like, you want to have full freedom and flexibility to do what you want to do in a given moment, not feel like you have to do something. Okay, fair enough. But what about potentially legging out of an Iron Condor? So rather than roll the untested side in, why not just take it off? Well, this is definitely an option to consider, and you can certainly do that. Our research has shown that this doesn't really help you over time, but that doesn't mean you can't do it. It might not help you per se, but it doesn't appear to hurt you either. So if you want to close the untested side and just handle the tested side, by all means, give it a go. Just be aware that keeping the untested side on can really be helpful when it comes to rolling the strategy forward, though. This is because you'll always be able to roll the untested side for a credit, whereas the tested side will usually require a debit. So by keeping the untested side on, it does give you more options to keep rolling your Iron Condor forward for credits. So moving right along, FAQ number 6. Why is this so important when it comes to rolling a vertical spread that you keep your strikes the same? Why not widen those strikes out to improve that credit? Well, there are a couple of parts to this, and let's have a look. With a vertical spread, as we talked about back in episode number 2, if you roll for a credit and you keep your strikes the same, you're always improving that risk-return dynamic. You're decreasing potential risk and increasing potential return. That's good. But if you widen your strikes, that might not be the case. Suppose you had a $5 wide vertical that you collected $2 on at order entry. Now you want to roll the position, but to keep the same strikes, you would have to pay a 40-cent debit. So that's a no-go. But let's say if you widen to a $7 wide vertical, you flip that into a 90-cent credit. Why not do that? Well, that credit does go to improving your profit potential, as you now have $2.90 collected, not just $2, so that's good. But you also now have a $7 wide vertical, and your total risk has also increased from $3 in the original trade to now $4.10, or the $7 width, less the $2.90 collected. The last thing we want to do is add risk to a rolled vertical spread. So that's why this is a no-go. All right, so FAQ number 7. Are there any situations where normally you would roll and the mechanics suggest that you should roll, but you actually don't want to roll? Are there any special situations where this is the case? Yes. Here's at least one example. There's probably more than this example, but I think this is the one that is going to be the most common one that we come across as tasty traders. You have a binary event in the next cycle. The next cycle that you were thinking about rolling too. So this could be like a Federal Reserve announcement. This could be like an earnings date. Those would be two classic examples. And maybe you just don't want to deal with it. Like maybe you don't want to roll into that cycle because you don't want to have your position on during that event. That makes perfect sense. So what do? Well, here, maybe you roll into a weekly cycle before that event. That's an option. Maybe you close the position altogether. That's an option. And maybe, just maybe, you hold that position just a wee bit longer to see if the market comes back to you. Just don't tell Tom. All right, so FAQ number 8. This video is never going to end. How do you track your P&L on a rolled position? Well, let's have a look. This one is really simple because all you need to do is pull up the order chains. Doing this will show you every roll that you made, every piece to the trade package compared to the new mark price, which will always give you an accurate real-time P&L for that position. And lastly, believe it or not, we are very close to the end now. FAQ number 9. This might be the number one question that I am asked as it relates to rolling on a regular basis. Jim, I have a strangle on. I've made my first roll because one side was tested. How do I know when it's time to roll again? Let's take a look. This situation is very much a gray area, and there is no hard and fast rule, so keep that in mind. But once you make that first strangle roll and you reduce your directional bias by 30 to 50%, how do you know when to roll again? Well, here, I would normally look at my new break-even points. If one of those gets hit, it might be time to move into a straddle. Okay, so now you're in a straddle. How do you know when to roll into an inverted strangle? Well, again, I would use the break-even points. Once those are hit, it might be time to consider moving into an inverted strangle. You could sit, do nothing, and wait a wee bit longer, but this is the time when moving into the inverted strangle is absolutely on the table. All right, so now I'm into an inverted strangle. Now what do I do? Well, generally speaking, you've reached the final stop on the train tracks, as I like to say. You could make the inversion even wider. That's a possibility. You could consider paying a debit to uninvert, also a possibility. But by and large, the default setting here will be to do nothing, let the extrinsic value fall off the options, and hope the stock stays within your short strikes. All right, so that was all that I had planned for the rolling FAQ. But you know, man, we are having so much fun. Let's toss in a couple bonus FAQs. So these are a couple of FAQs that came through my Twitter feed just recently that I wanted to include here in the crash course. So the first one came from Larry over there at LT Baxter over there on Twitter. So definitely give him a look, give him a follow, and connect with him. He had a great question. He said, Jim, why don't I just forget about rolling? Why don't I just close the positions and find a higher probability setup and just kind of start fresh? Because rolling is just technically starting a new position anyway. That's a really, really great question. Let's dive in. So to be clear, that itself is a solid strategy. Like, don't roll, just take what comes by 21 days to go and then move on from the trade either way. We have found, however, that by following our adjustment mechanics, adding duration to our losing positions, and doing so in ways that always look to reduce risk, it's worthwhile to stick with a losing trade for at least a little bit to give it a chance to come back. But not even rolling at all, as Larry suggests, is certainly an option. And it's a good one at that. And second, and lastly, the final FAQ of the whole crash course, I promise. Mark over there at MarkNoCollins11 on Twitter. So definitely give him a look. He wanted to know, hey, Jim, wait a minute. If I have a deep in the money short put, can I just keep rolling this thing out forever? Like, can I just keep rolling this thing out forever, keep picking up extrinsic value until the position recovers? Can I do that? And the answer is, the short answer is, the long answer is, yes, you certainly can do that. At this point, a deep in the money short put's basically just stock. It's basically just stock. You hold on to it for as long as you can. You get a little extrinsic value along the way as a bit of a kicker, and you just hold it until the position recovers. You can absolutely, unequivocally do that. Wow, man. And like that, we are finished. I promise. We are done. The rolling crash course is done. The FAQs are over. It is finished. And so, guys, I am so humbled. I am so appreciative of your attention and your time and your investment in this crash course and maybe any of the other crash courses that you have checked out. We now have about a handful of them on the YouTube channel, so definitely give those a look if you haven't done so already. So welcome back to the Rolling Crash Course. My name is Jim Schultz, and you made it, man. We are now in episode number 4 of this Rolling Crash Course. We've already laid down some rolling basics. We've gone over rolling defined risk strategies. We've gone over rolling undefined risk strategies. Well, here in episode number 4, we're going to begin to put all of that together. We're going to talk about how do you adjust your profit targets once you've rolled your position. So without further ado, let's do it, man. Let's dive right into episode number 4 of the Rolling Crash Course. All right, so your position has been tested, and you've rolled accordingly, whether it's up, down, out, or some little combo deal across the board. Like, you've made the appropriate move. So now the question becomes, what should you do with your profit targets? Now, this is going to be a little overlap from what we've already covered in the previous episodes, but still, the thing you want to recognize first and foremost is how have your risk-return dynamics changed? Let's take a look. Remember that whether you roll a defined risk strategy or an undefined risk strategy, the objective is to reduce overall risk in the trade. This is easy to see with defined risk strategies where when you roll and you don't widen the strikes, any credit you collect goes towards decreasing your max loss and increasing your max profit. Thus, you're able to improve that risk-return dynamic in your favor. Similarly, with undefined risk strategies, if you roll the whole strategy out at the same strikes, you roll the untested side in closer to the action, or some combination of the two, again, you're improving the risk-return dynamic by taking risk off the table, decreasing your max loss and increasing your max profit. Okay, so now you can probably see that rolling and adjusting and managing your positions, like this is going to have a significant impact on that risk-return relationship. And the goal, of course, is to always improve that relationship. All right, so how should you adjust your profit targets once you've adjusted the position? Well, the answer to that question is largely going to depend on whether or not you view this role as an offensive role or a defensive role. Let's dive in deeper to what I mean by that, and let's start with what a defensive role looks like. So most roles, almost by definition, are going to be defensive in nature. The only reason that you would roll a position in the first place is if it's not going according to plan. So you won't usually find yourself feeling like you have all the leverage when you're rolling a position. Instead, with a roll, you're often just looking to plug a leak or stop the bleeding a bit before you consider your next move. Hence, the default setting you should apply to all of your rolls is that of a defensive stance. And this is probably why this whole process is often referred to as defending your position. All right, so given the fact that most rolls are defensive in nature, it kind of logically follows that we might want to consider paring down our profit targets a bit once we've rolled a position. That makes a lot of sense. Well, there are different ways that you could do this, and ultimately which one you choose is of course going to be completely up to you. But here are a few things that you can think about. So there are effectively 4 different ways that you could adjust your profit target now that you have rolled your position. First, you could keep your original profit target. Even though the target itself hasn't changed, this is very much a defensive move because your total credits collected on the position have increased, meaning you have more credits to work with, so your original target is a smaller percentage now than it was. Second, you could reduce your profit target to a smaller profit than you originally targeted. This lowers the hurdle that you need to jump over, i.e. the type of move you need the stock to make to bring the position back, making it more likely that you can hit this lower, more attainable target. Third, you could target a scratch, like just break even. There will be times when you just want the trade off your board and you'd be over the moon with a wash. Remember, you're playing defense, so turning a loser into a scratch isn't really that much different from booking an outright winner from the beginning. And fourth, you could target a small loser. These are going to be your dire situations where you're sitting on a big loss and you'd be perfectly fine with just turning the big loser into a smaller, more manageable loser. This is going to be used for extreme situations only, but sometimes you just have to wave the white flag and be realistic about your expectations. Lastly, just as a side note, even though the same basic principles apply, due to the undefined nature of naked, undefined risk strategies, how you adjust your profit targets on undefined risk strategies is a lot more important than how you adjust your profit targets on defined risk strategies. All right, so that's pretty much everything you need to know when it comes to rolling defensively. But what about rolling offensively? Well, this situation is really only going to apply in one specific circumstance. You had 21 days to go, you have a slightly profitable position, and you want to roll it out. You want to roll it out because IV is still elevated or IVR is still elevated or whatever reason you might have for keeping that position on. Well, here, you're in a really, really great spot because you're going to collect a credit when you roll that position, but this position is already working. So you have a lot of leverage that you can use when it comes to adjusting your profit targets. And you could even warrant kind of ratcheting up that profit target just a little bit if you wanted to. I would just be very careful and very cautious with how you approach this because it could start to build bad habits. It might be a better, more prudent decision to maintain the original profit target that you had and just use that leverage to kind of increase the probability that you're going to get there. All right, guys, and just like that, man, we made it. Episode number 4 of the Rolling Crash Course is in the books. How to adjust your profit targets on a rolled position.
Boom.
So welcome back to the Rolling Crash Course. My name is Jim Schultz. I am still your tour guide, and we are now into episode number 3. Now, we just got through with episode number 2, where we talked about rolling defined risk strategies. So naturally, we're going to hop onto the other side of the fence with this episode and talk about rolling undefined risk strategies. Now, a quick little disclaimer. We've already covered a lot of things as they relate to strategy management in the strategy management crash course that's already on the YouTube channel. Now, my goal is not to just repeat all the things we've already covered in that course. So use the information in this course alongside the information in that course to give you a more complete, holistic view of position management. My hope is still inside of this very episode, you will discover a couple of brand new nuggets along the way that you can use when it comes to adjusting your position. So without further ado, let's hop right in, man. Episode number 3, rolling undefined risk strategies of the Rolling Crash Course. All right, now before we get into any specific strategies, a couple of important things to note. Number 1, one of the great things about undefined risk strategies is the simple fact that whenever you roll out in time, you're going to be able to do so for a credit. Now, does this mean that you should never roll an undefined risk strategy for a debit? Not necessarily, and I'll have more to say on that when we get into the FAQs in episode number 5. But the beautiful thing about rolling for a credit with an undefined risk strategy is whenever you do that, 2 things happen simultaneously. Number 1, you reduce your risk. Number 2, you widen your break-even points. These are 2 very, very powerful implications of rolling an undefined risk strategy for a credit, because with undefined risk strategies, here is priority number 1. This is mission critical. You need to control your risk. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. So, okay, now that we've got those couple of things in our back pocket, let's move into two of the most popular undefined risk strategies that we utilize. All right, so we're going to start with the short strangle, but a quick little disclaimer that actually applies to any undefined risk strategy. If you're at 21 days to go and you're not profitable on the position or as profitable as you would like to be, then it's time to roll it out to the next cycle. You can keep the same strikes. You can even move the strikes up and down. Like, there's a couple different ways that you could handle this. But either way, it's time to go ahead and move this guy out. Doing so allows you to avoid the increased gamma in the position that comes near expiration. This is important to avoid because more gamma means more directional bias. That's not something that we want to voluntarily sign up for. So, all right, the short strangle. With a short strangle, you have a short put below the stock price and a short call above the stock price. And the simplest way to begin thinking about adjustments is this. If the stock is between those two strikes, don't do anything. The trade is working, so you don't have to start adjusting. Of course, if you want to be a little bit more preemptive with your adjustments, a little bit more aggressive, and start rolling your call down when the stock drops or rolling your put up when the stock rises, you could do that to help neutralize your delta. But for our purposes here, we're going to work through the simpler approach, which I'm not sure is any less effective than the more aggressive approach. So let's suppose that your put strike eventually gets tested. This is when you'll want to roll your call strike down to bring in more credit and improve your break-even points. When you roll that call strike down, look to reduce your position deltas by about 30 to 50%. Reduce them by more if you want to be less directional, and reduce them by less if you want to be more directional. Similarly, if the call strike is tested, roll the put strike up and do so such that your position deltas are again reduced by 30 to 50%. Now, keep in mind, as you make these rolls, this delta reduction is the magnitude of the delta, not necessarily a mathematical reduction in delta. Cutting position deltas from positive 50 to positive 25 is a 50% reduction. But in this context, cutting position deltas from minus 60 to minus 30 is also a 50% reduction, even though the number technically, mathematically, got larger. All right, so that's how you roll up and down. That's how you start thinking about rolling up and down when your strangle strikes are tested. But what about the time component? What about rolling out? How do we throw that into the mix? Well, this is a lot more of a gray area, and there's going to be a lot of subjectivity that comes into play. But here are a couple of things to think about. So if it's very early in the life of the trade, like still 40 plus days to expiration, it might be a bit too early to roll it out just yet. Of course, roll it up and down to reduce those deltas, but staying in the current cycle, that might be the move here. Now, what if you're already close to 21 days to go? So anything, let's say 29 or below, and you're tested. Probably go ahead and roll it out too, because you're getting close to that 21-day marker where you're going to want to roll it anyway. Now, if you're in the middle, like somewhere 30 to 40 days to go, this is a judgment call for sure. Roll it out if you want to lessen your exposure to the Greeks, and keep it where it is if you want to benefit more from the stock reversing back in your favor, but this is very much up to you. All right, so that's how you begin to think about rolling a strangle. Again, more on that specifically in the FAQ section. But what I want to do now, let's move into the other strategy that I wanted to cover here today, the short straddle. So let's have a look. So similar to a short strangle, the short straddle has a short put and a short call, but here they have a shared strike. So when it comes time to roll, one strike is always tested. So how do you adjust your rolling strategy? Well, your first move, should you need an adjustment, will not be to roll one side up or down. That would bring you into an inverted strangle, which is definitely necessary at times. And it's a tool that we use often, but it's not usually our first go-to move. Instead, you'll look to roll out in time first. So not exactly the same process as a short strangle. All right, great. But how do you know when to roll out? Well, here you'll want to use your break-even points rather than the strikes themselves. If either break-even point gets hit, that's when I would look to roll out, especially if there's 20, 25, 30, 35 days to go in the trade. Now, if you're really early in the life of the trade, like 40 plus days to expiration, and one of your break-even points gets hit, you could maybe hold it a bit longer to see if it comes back before you want to roll, but I would give that a short leash, man. Again, this is very, very subjective, but it's something to think about, and you don't want to build bad habits. But holding on to the trade a little bit could be warranted here. All right, so rolling a short straddle is in the books. Rolling a short strangle is in the books. Again, guys, don't forget, use this crash course in conjunction with the other crash course that we already have on strategy management. And don't miss episode number 5 of this crash course, where we're going to go through the FAQs related to all of these different things. But that's it, man. Episode number 3, rolling undefined risk strategies, is in the books.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out tastytrade today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration, or maybe even the strike. Pretty simple.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for...
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Hello
everybody. Well, looks like you enjoyed yesterday's show. It's very popular. So that was fun. It was twice the normal length. And as I said yesterday, was getting very aggressive on the short side. That's still true, although I did take some profits today. If you read Slope, I did a notice about that because a lot of the trades were sort of opportunistic in the respect that I shorted the craziest of the high flyers like Micron and SMH and CIEN and things of that nature. So like I've kind of gone from 220% down to like less than half that, like 105. Still short, but not wild-eyed about it. So it's a good day, a very red day. As usual, the bull's been fighting back. We bottomed about 90 minutes into the trading day, and it's been like pushing its way up ever since. Yesterday, I was confused because, the market spiked suddenly. I was wondering, what's that all about? And of course, as you probably know, it's because the president announced that I'm not going to bomb Iran tomorrow. So the declaration of not doing something apparently is enough to goose the markets. I'm not sure what they're not doing now to lift things, but that's been somewhat effective. But we are still red on the whole, and bonds I'm particularly pleased with how those are breaking down. So let's jump in and get through these before the time's out. Here's the spider, and we have slipped a little, as you can see, nothing dramatic, but certainly enough to work with. And as we back away here, we sort of remind ourselves of the past top and this top, its failure to hold prices back. And at this point, we're kind of in this strange new land where we're just slipping away from those lifetime highs. Very different creature. Keep that chart in mind as we go to the next one, which is the diamonds. Very different animal here. In this case, yes, we also had a top like so. And we had a trend line failure here, but importantly, we have not come near, we're kind of near, but we're not at lifetime highs. It's a very different creature. The diamonds have underperformed recently and got a nice clean gap right there. I covered some of my bigger ETFs this morning, IWM, SMH, QQQ. This one I'm keeping. It's just so clean, the diamonds, with the stop obviously right above that gap. The cubes, speaking of, are down about 1/3%. That's something. I'll take it. The little slippage you've seen here has been able to produce some outsized moves in the zaniest multi-100 PE type stocks we see out there. You take what you can get. And in a market that's overvalued, it's not too hard to find stocks that can move down 10 or 15% in a couple of sessions. CoreWeave is slipping down over 5%. I've got kind of a get the hyperscalers theme in my mindset, whether it's semiconductors or server makers or financing companies or infrastructure like CoreWeave. Kind of a sloppy chart, but you can see some decent reversal patterns going on here. And I think I read that Google and somebody else is teaming up to basically go into the same business as these guys, which is not great news for them. So I guess that's the ostensible reason why they're slipping today. I'm not in it. From a kind of a narrative perspective, I suspect this will be way lower in a year. But I try to use the charts instead of just a guess, although the guesses work too sometimes. Here's Dell, which was at a lifetime high, I guess last week or so. And we've slowly slipped lower on this. We're down not even 1% on this, but this whole rally has been based on those two letters, A and I, across the board. Because Dell, it wasn't that long ago that Dell was just that old boring maker of beige boxes from the 80s, but now they're in the vanguard with AI infrastructure. But there's other companies in that realm that are also seeing a little slippage. RGTI, Rigetti, is down about 2.75%. Sinking below, this is a pretty clean little right triangle top there. I've lazily drawn a rectangle, but this is a right triangle top. And we fell, rallied, found resistance, fell, rallied, found resistance, falling again. Nothing too dramatic and not clean enough of a pattern for me to pursue. But it looks like the pretty serious overhead supply holding back those rallies there. This one bugged me, QUBT. I've been short this. I guess they had earnings after this night, and they just went exploding higher after hours. And I covered at a loss. And then, when you know it, zzz, down it goes. And I did a post about this today. It's not that big a deal, but it's sort of annoying. The one fault I lay at my feet is the fact that there's no real pattern there. It was just based on the notion of, gee, quantum is ridiculous. This is really overpriced. That's not a good reason. So sort of deserved that one. But it is kind of annoying that this post-earnings rally was rendered just moot. And we've seen that in a lot of places, that with the shining example being Oracle last September. As I said, SMH, I'd come into the day short. I shorted it here. Don't exactly remember where. We got a nice drop yesterday, and we continued. We opened weak, and I noticed we're getting very close to this price gap. So I went ahead and covered when we were in that vicinity. Was that as low as it's going to go? I definitely don't think so. And maybe we'll get a little bounce for a day or something like that. I'm sure this gap will fail. But when you're coming in 220% committed, it's nice to take a profit here and there and not be too cavalier about it. So that worked out. Of course, the big news, this weekend is NVIDIA. In about 25 hours from right now, we'll get the news about how things are going with NVIDIA. The chart broke out of this very long range last week. I assume they're going to produce fantastic revenue numbers, fantastic profit numbers, because they're at the center of it all in this completely circular AI hyperscaling economy. They are at the center of that. So it's not like, oh, just you wait, they're going to disappoint with I don't think that at all. They'll probably blow everybody's socks off. It's the reaction that matters. Will they say something about projections, or will they say something about the investments they're making or something like that that'll rub people the wrong way? Who knows? There's no doubt that the reaction we see on Wednesday night, Thursday morning, will have an outsized effect on everything. And they're kind of interesting because they have such an off-cycle time to do their earnings. So they get an extra lot of attention. So that'll be fun to watch. I mean, obviously there's part of me that hopes some shocking surprise will come along, but I do not think it'll be in the form of just fundamental revenue and profit data. STX, these are just some I covered. STX, nice little dip there. It seems like nothing, but these are good moves for short-term trades. So got out of that. I think I got out of Micron, yeah. Got out of Micron. And a nice little tumble there. Opened quite weak. Tesla I'm not in, but it was just interesting because we have nice little hammer pattern forming there. If we are in an uptrend here, broadly speaking, this looks like it's setting up a nice little bottom short term for Tesla, because as you can see, it hit this Fibonacci some months ago, and since then it's been engaged in a brief series of higher highs and higher lows, and today could well be another higher low on this one. Speaking of Tesla, speaking of Elon, speaking of SpaceX, which should be public in about 3 weeks, these space stocks continue to be proxies for that sector, since there is no SpaceX just yet. Rocket Lab is actually down about 3.5%, but on the whole had a very good month. AST Space Mobile is up about 2.5%, and Planet Labs PL is off about 1.25%. I dare say that the interest in these will probably diminish real fast once SpaceX is out there as a trading vehicle. One item that I've been talking about a lot that I did not participate in, but it's been doing really well, is my bearish disposition on precious metals miners. This just keeps falling. Here's GDX, down again, pretty hard too, almost 4%. Look at this, down it goes. So that's gold's down a little, but the miners have really been getting zapped. And so dust, which I mentioned a few days ago, is a great looking long position. Just keeps popping. We're up 7.57% on the day. So this is having a nice little rally. I see no reason for this to have any meaningful reversal. And speaking of metals, one other interesting tidbit is TMC, the metals company. It looks like it's hammering out a pretty giant topping pattern itself. Over in Energy Land, XOP, we have sealed up a gap nice and neat on this. I'm not going to mess around with energy. It's just kind of fraught with risk right now for obvious reasons. But I did at least want to point out that we have sealed that gap, and it's probably just about all she wrote in terms of the upside on that one. But as I said at the top of the show, it's bonds that I've been so pleased with. ZB having another nice day. It doesn't take a lot of percentage, just a nice steady bleeding out day to day would do nicely. ZB's down about 0.5%. We are pushing to interest rates that are pretty surprising to folks. My position here is long September TLT puts. TLT itself, like so, is down about 0.2%. I lightened up on those puts a little today because the position was getting a little overly large. But I will happily get back into them if we get some kind of bounce. And of course, as I've mentioned, that these rising interest rates are not any friend to the home builders. Here's XHB down about 1 2/3 again. Slip, 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 down it goes. And this again could be a short-term bottom because this has gotten really zapped. I'm out of time, but one last chart. Bitcoin hardly changed at all. Maintaining my short on this one. It's a good position, but what we really need to do is slip below this low right here to get people a little more sweating about what's going on. But long-term target on this again, 35 to 40,000 on the cash BTC. Okay, we'll want to see tomorrow. Of course, the Bitcoin news will not be out. Bitcoin news, the NVIDIA news will not be out, but we'll be very close. And that'll be fun to watch. So thanks for coming by, and I'll see you on Wednesday. Bye-bye.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup. Nikki Bat,
University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Hello, everybody, and welcome to the Liz and Jenny Last Call Edition. How you doing, Jenny?
I'm great, Liz. Great. Nothing's changed since I saw you 30 minutes ago.
Well, market's down a lot more.
little.
Really. I mean, when we left the show, like during our show, it was down 50, 55.
And then we were on the train and we were only down 20. And now we're
down.
Back down. That's okay.
Yeah, let's. Before we pull up the platform, let's talk about this. Tomorrow is What's Your Assumption? Send in your assumptions. Tony and Nikki will be taking assumptions tomorrow to see if you can. I know, Liz, you always say, see if you can stump the boys.
I say, give them your best. Make sure it's liquid products. Give them your best assumption that you've got. I love to see what they come up with. It's fun to see them.
tastylive.com/assumption. Also, I want to give a shout out because we didn't earlier. Shout out to Beth. It's Beth's birthday today, and Dr. Jim. It's Dr. Jim's birthday today. We've got birthdays all over the place.
Isn't there a third in our office? I thought there was Beth, Dr. Jim, and somebody else. It is.
Is it Adrian?
Yes, and Adrian.
And Adrian.
And Adrian. Yes. Don't you remember this? Because on the road we played that birthday game, like the odds of somebody's birthday in the same day. And it's Beth, Dr. Jim, and Adrian.
And I can't remember exactly how that game went, but like you had to guess what are the probabilities that there would be, how many people you had to pick from a group before you would have two of the same birthdays. And everyone always overshot.
Yeah.
Yeah.
And don't you remember that was when we were like game show hosts? We'd be like, and what's your birthday?
Yes, we had to count off people. And contestant number 12, what's your birthday? Any match here?
I'm sorry, here's $5. We give them $5.
And we would usually get to, it typically was, as far as I remember, under like 20, 25 people.
Yeah, it was under 20. Well, nonetheless, happy birthday to Dr. Jim, Beth, and Adrian. We're very, very excited for you guys. Okay, now, do you want to pop? Can we pop in the platform? Take a look around?
Yeah, let's pop in the platform.
We never got filled on that CBRS from Scott Somer. I wanted to come down here and take a look at our SPX because that's the one we were attempting to close one of them.
And we did because it's gone. So our 32-day is gone, and we were trying to get filled on this new 42-day, and we haven't gotten filled, and it's not far from there. But I do think we put this on, spoons were probably down 50, 55, and there's still, it really never got lower than that, and it might have taken a few ticks lower to get filled on this. Maybe cancel this, and we'll try something else.
That's what I was going to say. We might as well look at something else on this. I want to make sure we look at our XSP trade, which we said we were going to look at in the last call. We have to look at it actually tomorrow. So that's the one thing we're going to do. So let's go to SPX.
But I would say if there's anything that's like worth a nickel, I'd buy it back. I don't know what our shorts are. We're kind of in the same place we were. So that one day.
Nothing is really. I mean, you could look at the 28 put. You've made $55 on it, but I don't know that I would buy it back.
It's possible when the spoons were only down 20 that the 28 put might have been 20 cents or something. I'm not sure if that ever got cheap enough to buy back.
I doubt it. I don't know, but that's okay.
But let's talk about that. So the one day that one day, spoons were down 50 when we put this trade on roundabout, and that one day they decayed $53, and the one day call didn't change at all. So maybe we're up a little bit, but that's not a bad trade. Like in the morning, putting on tomorrow's trade and taking it off before the end of the day.
It's not, because if you take a look, we did get it at a discount. If we close both of our shorts that are short for tomorrow, we will have gotten the NVIDIA long for a whopping $49 discount.
Well, and I'm just like in general thinking selling that the next day or like at 9, 10 o'clock, which is our show was on at 10, and then at the end of the day closing it, not even buying another long, but just saying, look at the premium that came out of that. If this market doesn't move, that decays quite a bit just in the day before. You're
just talking about the one days.
Just the one days. Like you never have to carry it overnight.
You don't have, I mean, like I said, if we would keep these longs with a $49 discount, because 55 minus $6 is $49. We have made $49 on that short. We can close it if you want.
No, I think we need that $1.40, but I might start trying that trade the one day SPX, XSP, and then, or SPX, and then buy it back that same day.
It's not a bad plan.
Speaking of buying back SPX trades in the same day.
Are we going to SPX?
Well, let's pull. I know Ryan has a slide to pull up.
Oh, the pattern day trading rule. You got to give him more sugar. Hold on.
Wait, I know Ryan has a slide to pull up about.
It's the
pattern day
PDT. So
trading.
Ryan, it's the pattern day trading rule slide. If we could pull that up, that'd be great because June 4th, it's gone. And I got to tell you, I could have used it to be June 4th today. I had to make a phone call into the Tasty support because I put a very expensive trade in SPX into my son's account.
Right, Liz thought so Liz has multiple accounts that she can see or she's linked to, and thought it was going in her account, went into JD's account, and it was just too big for his account. And this happens to you sometimes. This happens.
It has happened in the past, but not to this extent.
Not like is this big? This was big. This could have really wiped out. This could have wiped out half his account.
He's still in it, so
he is.
Yes. Remember we said we're not going to close it until tomorrow just because?
I thought they were going to transfer it from his account to your account.
No, they couldn't do that. So he's still in it, and it's not looking good. Not going to lie to you, not looking good right now for him, but that's okay.
Well, you're going to just have to deposit some money back into his account.
I know. It's no big deal. It's no harm, no foul. And actually, the kid could use some pain, but that's okay. So let's take a look at our earnings trades for today because this is
okay. So I know Ryan was pulling up the art card, and we were going to talk about coming up June 4th. You won't have to deal with this. Like June 4th, this is over.
I don't think the art card is up right now. If I'm looking at the live show, we have our Twitter up. When Ryan's ready, because that is true. June 4th, we will not have to worry about it. There we go. The PDT rule elimination.
And I believe it's just going to be after 25 years, the $25,000 minimum will change. I believe the minimum will go down to, I don't know what, 2,000 or something like that.
I don't know, but anything is better than what it's got going on right now.
Effective.
I wish they would have no minimums because all people are trying to do is close their trades. That's really all they're doing.
Intraday margin requirements will replace the existing day trading margin provision. So maybe it won't exist at all. I don't know. You can find it. You can scan that QR code and find out more.
I encourage everyone to do so because I had to make a phone call on it. It's still confusing to me. Like it really is. It's very confusing to me. Okay, but today is Tuesday, Jenny. So we've got Kava, ADI, VFC, Zim, Target, Lowe's, TJX, and VF.
The only thing I really trade in this list is Target.
So I did want to look at Kava. Oh, no, never mind. I was thinking Canva. I was thinking that thing that went down with all the kids in college. Kava's the Mediterranean Chipotle, so we don't need to look at that.
Oh.
I do want to look at Target. Let's look at Target, and then Lowe's had earnings, and it didn't move either.
Yeah, take a look at Target. I usually like selling puts in Target. It's up $3 today. Was there an earnings leak? The whole market's down and Target's up.
There's a real possibility of that.
Check the vols. Check all the vols and see how much higher that 3-day is.
No. Yeah, it's got 107, so I don't think it's out
right.
Yet. But it's moved. Do we want to do anything in Target?
A Jade Lizard's not bad.
I think a Jade Lizard looks like a great idea for this. It's only $1,100 too.
Can you pop open the chart for me? I just want to see something.
Target hasn't participated in the crazy round.
Yeah, because I'm used to trading Target closer to 100. So it is higher. I don't know.
It's been high though. Target hasn't had the crazy rally that everything else has.
No.
So but for earnings, let's do a Jade Lizard in Target. It's only holding up $1,200 for a traditional Jade Lizard, selling 70 cents ish on a put, a $1 wide call spread. I'm actually going to see if I can go a little bit wider with it. No, I'm going to bring it back down.
No, it's a good Jade Lizard candidate. No. Sorry. Excuse me. Sorry, Liz, you're not boring me.
We gotta talk on. Just keep moving forward. The more if you bring it up, it draws attention to it.
We usually have a coffee on the train on the way home, and we didn't today. That's what I'm missing. I'm missing my afternoon coffee. So a Jade Lizard, you're selling a put for about 70 cents, selling a call spread, collecting over $1. And what's your risk on the trade?
Your risk is owning Target at 112 because I collected exactly $1. The markets were pretty wide, so I went down to exactly $1. Owning Target at 112. It's as if you sold the put for an inflated volatility. So it's as if you sold, this is what I love about a Jade Lizard. It's as if you sold the 113 put for an inflated implied volatility.
Excellent. And I'm going to get that pushed out right now to the fellow.
Because you're getting over a dollar on it instead of just 75 or 80 cents. That's exactly what it's doing. Or you have zero risk to the upside. If it gaps up, if it opens up at 137, you'll make a little bit of money, but you won't make that much. But if it stays up there, you won't make anything.
If it blows through the call strikes, you won't make anything. But if it stays in that range, which is about the expected move for earnings, we can make $100.
Yeah, you won't make anything. You won't lose anything. I also wanted to look at, only because I said it, I'm going to look at Kava. $77. I don't care to trade this.
I
Do you have any
don't
interest in
know.
Kava?
Have you ever eaten at one?
No, but I do like Mediterranean food.
I do like Mediterranean food. We don't have one near me.
No, we don't have, and the volume is a little bit on the low side. I kind of agree with that.
Yeah. Target's usually the only one I trade of that list.
I know of that list. Hold
And
on.
okay, so Lowe's has earnings and Home Depot was unchanged. So maybe.
Ooh, look at this, Jenny. Look at the price of this product.
Yeah. Okay. Perfect. If Home Depot was pretty much unchanged, and I don't know where it is now, but at 10 in the morning it was about unchanged. A calendar is a good way to play for a non-move.
And can I do the 217 calendar?
Yeah, where that's pretty close to at the money. That would be playing for a non-event or Lowe's to not move too much. Sure.
I don't mind this. It's a very low price thing to do. So taking a look at this, we're going to spend $1.15. I'm going to lock that price because I like that better than $1.35. $1.20, it's trading between $1.15 and $1.30. What we're saying here is we don't think it's going to move, right?
Right. Now, if it weren't 217, if we said Home Depot didn't move, maybe Lowe's won't move, we could have looked at a strangle, but because it was close to 217 and 217 is Liz upside down, we're going with the 217 calendar. We always do.
And you know what? I'll show a strangle just in case, but let's just go for $1 and $1. I just want to show this. So $1 and $1. You're using the tune, and that's why I like Target a lot better than this. We only use $1,200 in Target. Now, granted, it's a little bit cheaper of a product, but here it's $3,200 for the strangle with risk. So, and it's very similar. They're similar in nature. The calendar is saying that I don't think it's going to move, and this is going to decay. That's $400 in decay that could come out.
With what? The calendar.
Calendar.
Yeah, the calendar. There will be decay out of the 10-day too. If we're selling the 3-day, yeah, there will be decay out of the 10-day as well. But we've seen some earnings calendars. If it stays right there, you can make about 100%.
You can, and I tried to pay. You can see that is bouncing around, bouncing around. Oh, that's Target.
Down 52. I kind of like. Today in the train, we were talking about downside broken butterflies in S&P.
Those have been very good to me, Jenny. I put one of those, and they're not. I will tell you, they're not that good of a moneymaker because you're not collecting that much, but you got a shot.
Hey, I put one on. And I collected $1.50.
Those have been my go-to move for a long time. I do that in my IRA, but I only break the wing by one. I think you broke it by a lot more.
No, I ended up narrowing it. I only took $850 in risk.
So that's $10 wide, right? So this is a lot of times. I'm just going to show you what I will do a lot of times, and take in that. So I'm only taking this much in risk. I take very little risk in my broken wing butterflies, only because I have the jade lizards on as well.
Right.
But I like these. I like these a lot. So putting this on, you're getting 80 cents or 90 cents or however you want to do it. And I've had some of them pin. I really truly have, even without butterflying them off, meaning like moving the 73 to the 7305. I've had a couple of them, a handful.
And that's why I made mine wider. I wasn't, I didn't mind risking $850. I made mine wider, thinking if it does go down, I've got a $1,000 butterfly instead of a $500 wide. And I've got my break even to the expected move. So I made it $10 wide. Like bring up try the 73.30, 73.30, 73.20. And
you got to bring that in like crazy if you want $800 in risk. There we go.
So I took in, this is about, it's probably all shifted down one because I took in $1.50 and my break even. Yeah, this is exactly it. I
think for us, let's do the smaller one just in this account. Do you know what I mean?
Well, so I will say in this account, we've been doing weekly jade lizards or daily jade lizards where we're risking $1,500.
We have one in, don't we? Or are we out of it?
Well, no, what we have on is a full loss.
Okay. So if we don't have anything in, then I'm fine with that. The one thing I don't want to double up on is have the $1,500 in risk, then put another $800 in risk on. That's the one thing you don't want to do.
So the nice thing with doing these just a day out, and we could risk less. So there's a give and take. You risk less, you take in 90 cents instead of $1.50. You've got a $5 wide area to pin instead of a $10 wide area to pin.
Yes. And the more it's more risk, more return. You're taking $840 in risk here in order to make $1,100, where the other one you're risking $400 to make $500 or $550 or something of that nature. But you can create any kind of risk parameters that you want. Now, Jenny brought hers right to the expected move for the cycle. I usually have my shorts there. I think all these are 6 of one, half dozen of another. I'm absolutely fine with this.
And you could narrow it if you only want to risk $400.
And you know who I got this trade from? Mike Butler. He does it every day before, and he does. And so when he was doing that, I started it a couple months ago, and it's actually been pretty good. I've had a couple.
I do like it. I do like it. But yeah, sure. If you want to risk less, we're just showing a couple options.
We don't, but because like to your point, we don't have the Jade Lizard in. If we had the Jade Lizard in, I'd be narrowing it, but we don't right now. And then after this rolls off, we'll put another thing on.
Yeah, and with those short-term Jade Lizards, we've been taking $1,500 in risk in every one of them. And the Jacob trade we did that was $600 in risk. We said, oh, geez, this isn't much risk at all. So I don't think.
Right? Did I do this right? 30, 20. Or am I shifting down one?
Buy one, sell two.
I got the buy one, sell two. Hold on. 30, 20. There we go.
I think you've got to do 25-15 in order to get the break even the expected move.
It wasn't just a minute ago. That's why. Okay, so now we've got it. Yeah, but this is mine. This is risking only $450.
No, 25-15, and then because it's $10 wide, not $5 wide.
Oh.
And then you're only and then shift your last. Well, yeah, the little one.
There you go. Okay, 140.
It's really bouncing around. Try to get $1.50. I think you can get $1.50.
So this is working for $1.60. We got $1.60.
Yeah. Good.
Good. So our break even is right at the expected move for the cycle.
Mm-hmm. And I will get that pushed out onto the follow page. Let me take a look here.
Yeah, this is not looking good for JD's trade.
Well, it's not today. It's tomorrow, right?
Tomorrow, yeah.
Yeah.
A little bit of a pull up tomorrow. Okay. Well, we still have about 5 minutes left.
With this trade we just did, if we're up tomorrow, we just keep the $150.
Yeah. And that's really what you're playing for. Because you'll notice with these, Jenny, even if it does go down, it's not what you want until the very, very end of the day. So even if it opens down at your short strike tomorrow, you're in the words of Tony from Mexico, the house of pain for a while until about 250.
Yes, if it goes down to your strikes, we could be sweating it all day. Like, oh my gosh, I don't want to lose $850. What if it's right there? But you're just kind of sitting on it, leaving it till the end of the day. I don't know that there's a lot of management to these other than leave them.
I don't think there's a lot of management except for leave them. But that's good. So that is in, which is kind of fun. Okay, so I'm going to go.
The lows. Let's try to get into that calendar.
I do like lows. We can pay 125. But look at the markets. I mean, it's 60-cent debit at 190.
Oh, sometimes when products are not that active, it's hard to get filled. Like we weren't filled on that new product today. And were we ever filled on the Mag 10 when we tried to get in?
I don't believe so. No, I've traded Mag 10 since. And I got filled in and out both times. I've traded it in my account. JD's traded it in his account. And I've gotten in and out actually at very liquid prices, which is crazy. So this is the Mag 10. And they have 1 day, 2 day options, which is they're getting a little bit more volume. It's kind of fun.
Let's see the chart in the Mag 10 because we've had some pullback in the market. And I wanted to see how the Mag 10 compared to everything else. Not much.
No, it seems like it's not pulling back as much as everything else.
No, and do you see Intel had a little turnaround? Intel, instead of being down $3, is up $3 today.
Oh, good. Because I saw it. I was like, I thought when you were saying it had a little pullback, because I saw it up $3. I was like, don't tell me it's down 3 again.
I mean, it was down 3 earlier today. And then last time I looked, it was up 3.
Yeah. So it's had a little bit of a reversal. All these things have been all over the place today. So we were literally almost unchanged at some point. We were down only 14. VIX is still only 18.
It was boosted down almost 60. VIX really isn't getting a boost. It's almost like it's stuck. It's like, are these markets working? Is this updating? Can the VIX
turn these machines back on?
Yeah. Is this really working with this? Boosted down 60 and VIX at 18 hasn't changed. But again, Where was Vic when we started the show? SPOOs were down 55. When we ended the show, SPOOs were down 50. Now we're ending the day. SPOOs are down 55. They've been bouncing around, but they haven't been trending down.
They have not been trending down. Look at this. The range for the VIX, and I agree with you, Frank. It's the VIX has just been parked. The high to low is 1836 to 1766 with this whippy of a market.
I know. It's weird. Not weird, but I used to remember long ago when people were predicting a down move, and I always remember Slim talking about just looking for an orderly down move. It's easy to trade an orderly down move. If this market will have a little bit of a down move, it's easier to trade an orderly down move.
Yeah.
And you never get that huge explosion in vol, and you just step down slowly, and maybe that's what we could use.
I mean, I just don't in my heart of hearts, I think volatility is acting very weird. Because you're still seeing ranks of epic proportion everywhere. You take a look at SPX. It's got a 45 rank.
Yeah, but we're only at an 18 VIX, and that's average. And I
know, but that's what I'm saying. Like, so I understand where the VIX is, but the ranks are what are keeping their wings up.
It's like vol's been the same all year almost. We had the market going to new highs every day, new high, new high, new high, new high. Yet the vol was keeping its wings up. Vol never came in.
Then this number should be coming down. This IVR should be coming down if that maintains, it maintains, because this is saying it's greater than itself for the last year.
If 18 is a 45, then 18 is a 45, and it's not going to go down from a 45 until we get to 17 or 16 or 15. Like if 18 is a 45 rank, then 18 is a 45 rank.
For X amount of time period.
Yeah, a 6-month time period.
Yeah, I just think it's bizarre. I think this is really weird. Something about it doesn't sit well with me. Like it's not behaving right. I mean, we were talking about that with the traders in the trading floor the other day. You look at these, I would not expect an 18, an 18.5 VIX level. I wouldn't. You cover this up, I wouldn't expect an IVR of 45 in any product.
But what do you? Okay, I know that's the bell. We're out of time. But what if, because we're in the middle of the rise of the retail investor. There are more people trading options now than ever. And most people trading options are buying them. So if the rise of the retail investor is causing an inflation in premium, the average VIX is going to eventually change. 18 won't be the average anymore.
Oh, I think 18. I think the average was like 16 over the years. Like 18 seems high to me, but it shouldn't be. When I look at a chart like this is like cats and dogs living together. Because if you cover it up and say this, if I didn't tell you this was gold, I would say this is a 14 IVR or a 14.
And again, there's the more buyers than sellers, more people buying options. So the rise of the retail investor in options might just have created more expensive options.
I think they just did. I think they did. All right, Jenny, we have the bell has rang and we are cutting into the overtime.
All right, everybody, stay tuned for the boys. They have a great show coming up. Have a great day. Liz, I will see you tomorrow on the SIBO floor.
See you tomorrow, everybody.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like?
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
And we have returned, and what a day to return on. This is Overtime. I'm Ilya Spivak, head of Global Macro here at Tasty Live, with a very special guest for today's festivities, Mr. Mike Butler. Sir, welcome.
Thank you. Good to see you. How you doing?
Good. Ever since the stock market started to dip a little bit, I have felt much better.
Yeah, I mean, it's been not the most bearish environment I've ever seen. We'll say that.
No. And now that maybe we're getting somewhere a little bit closer in that sort of space where I've thought things might be heading, I'm feeling that much better. Of course, it's a little bit early days to sing the praises of the down move yet. And that's actually the perfect place, I think, for us to start. You just wrote our preview on the great and powerful NVIDIA earnings tomorrow.
Indeed.
Are we doing anything ahead of this thing? Can we trust any of the price action before this bombshell drops?
It's a great question. I mean, I think I'm going to play this to the upside just because we've seen so many other tech stocks in a related space just go straight up after earnings that I don't know how NVIDIA doesn't, but that's how they get you in this little market here. So I'm still going to trade it small and keep my risk defined for sure, because anything can happen, especially with NVIDIA and like these huge high-flying tech stocks. Like they could blow the numbers out of the water, but they say one thing that the market doesn't like and the stock sells off 10%. So I think you still got to be careful. But to your point about like the market movement today, and this week really, it's really interesting to see that the market is selling off, 0.5%. Nvidia is down from highs, but volatility still has not moved. Like volatility is just flat at 20, and we still are in contango across the board. And the VIX is hovering at 18. So nothing is sounding the alarm bells just yet. However, this recent rally in the NASDAQ and E-minis really have been driven by the semiconductor space. And
I'll just go ahead and put SMH right on the screen.
There you go. So yeah, I mean, if Nvidia really collapses from earnings, I think you could see a big unwind and a spiral out of a lot of the profits that people have had, especially when you consider people are buying this thing, they're speculating to the upside. If they start to see their profits go away, that closing selling pressure can just add downside pressure. So if Nvidia doesn't rally on Wednesday, which I guess is tomorrow already, time flies when you're having fun.
Yes.
If it doesn't rally tomorrow and it sells off in a meaningful way, for me, meaningful is 20 points or more. I think you could see a pretty big follow up there.
Yeah, I mean, for what it's worth, the expected move is not grand. We're only pricing in about a 5.4% swing up or down. So that's almost $12, 11.8. Not really a huge move. What's interesting for me is that out of the past 4 quarters, we've had this really interesting cadence. So first quarter last year, big beat on EPS, 9.9%, stock rallies 3.2%. Second quarter, okay beat, 4.1%, stock falls 0.8%. Third quarter, okay beat, 3.1%, stock falls 3.2%. Fourth quarter, bigger beat, 5.5%, stock falls 5.5%. So I'm kind of starting to wonder if maybe the market just has this benchmarked and the forecasts are so astronomical and the extrapolation of the semiconductors to infinity story is just so out there at this point that the bar to an upside surprise is in the stratosphere somewhere. Whereas the bar for a downside surprise, it wouldn't even have to be a bad number.
No, it could be an on par number, and that's just simply not going to. That's just simply not going to.
It's not good enough.
Yeah. And on par is still a massive
what's
number.
What's going on here with software? Because in some ways, it's kind of not quite the mirror image of what's going on in SMH, but certainly this is perking up while the other thing is coming in. Do you think there's maybe hopes for the index yet if there's rotation?
Oh yeah, 100%. I'm wholeheartedly in on software, and it's not
Me
even
too, actually. I'm long here.
Perfect. Yeah, I'm specifically long Microsoft, and I've been long Microsoft. We got the tweet or the news the other day that Ackman was invested in Microsoft, and that sent it up like $15 when the rest of the market was down, which I thought was a good sign. Because anytime a single name stock can significantly outperform its counterparts in a highly correlated space, I think that is a green shoot there. But today Microsoft was up too. It was up like $5 when the E-minis were down 5. So I think there's room to grow to the upside. But it's the same thing that I've said before. Like if you have a Mag 7 stock that's down 30%, I'm going to be buying that dip. Just because you might not see the narrative coming, you might not see why the rotation would happen, but the rotations happen all the time. And again, if Microsoft, to put it simply, do I believe Microsoft will retouch 550 at some point in the next couple of years? The answer is yes. I think that is the case. So I'm positioning myself for that, just like longer term trades, and also trying to play for near term bounces into sell-offs, that kind of thing. But yeah, I think Microsoft and the software space is not dead. I think it's really just a matter of how well these companies, and every company for that matter, can implement AI initiatives into their current business models and then expand upon their current business models with things that AI allow them to do now that they weren't able to do before. I think that's the name of the game. And that's really the use case for AI and chips. It's not like these are taking over the world. These are transforming how companies can use these products and solutions to make more efficient companies and X, Y, and Z.
Well, yeah, and I think you and I see it the same way. I think when you look at this kind of panicky sell-off in IGV, you go, okay, well, what's between two scenarios, right? Because we're going to need software. The question isn't we're not going to need software. Obviously, software is going to be needed. If anything, more of it. Okay, so here's two scenarios. Scenario one, big companies like Microsoft and Salesforce that have a tremendous first mover advantage, tremendous supply chain relationships, tremendous built-in heft in the space, are going to use those things to figure out how to use AI to their advantage, or AI will make a new Microsoft, it will make a new Salesforce, et cetera, et cetera. What's the likelier of those two scenarios? I mean, in my mind, it's not even close. So this kind of, obviously that's a vast oversimplification, but if you think about it kind of in very baseline terms, if anything, these are going to be the beneficiaries because they'll have the first mover scale to deploy in a way that others can't.
100%. And I think when you put it into the numbers here, if you look at IGV, if you look at December of this year, 200 days out, and you just look 30 points above and below the market, which would bring us to the highs that we were at in October of last year and, below the lows that we've seen, the probabilities, I think, speak for themselves. If you look at the 120 strike, it's trading for $2.25 with a probability of 19% being in the money at the end of this year. And to the downside, you only have an 8% probability of being in the money at 60 and a premium of $1. So I think this market is also kind of saying maybe this stuff is a little oversold at this point. Considering equidistant out of the money strikes, you have way more of a probability to go back to the upside versus the downside. And the premium is also 3 times more expensive to the upside, which is reflective of the call skew there. But I think that probabilities are really interesting, that they're higher on the upside, twice as high on the upside than they are on the downside there. 30 points out of the money.
Yeah, and I think from my kind of macro vantage point, if you were going to see this market start to weaken from a kind of sentiment perspective, the first thing you would see is money that's sitting in things that have done really well start to get uneasy there and go, okay, well, if I believe in the story, let me at least go to some place that hasn't had a massive run. Let me de-risk that way. I don't want to be out of the narrative, but I want to be out of these names that seem like they've had a run that's getting a little preposterous, frankly. I mean, these things are up over 50% since the beginning of the year. That's definitely a very different cadence from the bounce with that first ceasefire announcement in late March than was going on before then. Before, sort of from the start of the year, yes, semiconductors were outperforming. They were outperforming mags. They were outperforming the index. They were outperforming, of course, the equal weighted index, and software was weaker, but it was about the same story mirror imaged in software and semis. It was outperforming by a couple percent relative to benchmark, or underperforming by a couple percent relative to benchmark. NASDAQ 100 kind of as the anchor. Obviously, what's happened since April is something else entirely. These things have just gone off elsewhere. And something I've been harping on is that it's all kind of happened on diminishing volume, which is not what you want to see. I mean, you look at the S&P here, and we'll put the volume on the chart. There we go. You can see here, most of this way higher, volumes are fading. And you can see it in NASDAQ, of course, a little bit less because this is where all the heat and market cap is. But even here, you're not really seeing confirmation. You're not really seeing a broadening until this thing tops and volumes start to build as it kind of gets heavy. And lest you think that this is just futures, it's the same story in the benchmark ETFs. As you start to go off here, things fizzle. So maybe it's just a question of we've gone so far so fast while delaying 40% of data centers that were slated for this year because all the same bottlenecks apply to everyone at the same time, be it oil or interest rates or just supply chains in general, that maybe it's just frothy here and not necessarily larger. Now, I think it is larger looking at the bonds, but a step one would be let's get out of these types of extended things and go to where maybe things have been unloved, like IGV.
Yeah, I think you could totally see that. And I think you've already seen that earlier this year, late last year, like when things were very sector rotation driven, you already saw the writing on the wall. So I think, yeah, to your point, the fact that there's just been this massive green candle in the semi space, you could easily see, and I think that's an intelligent rotation anyways. Like if you're rotating out of semis and into software, you're still playing the game, but you're participating in something that is not yet at highs, and you're rotating out of something that just blew to highs and in a faster fashion than you might have imagined. It was funny because I was looking at different calls on the math check we have on YouTube, and just like looking at 7,700 in the E-minis and all these numbers that were like slated for the end of the year. And I'm like, end of the year, we're there in 2 days. Like we just came from almost 7,700. We were just above 7,500. So yeah, crazy rally. Realized volatility clearly exceeded implied volatility in a big way. But yeah, I like the narrative of rotation into software. And I like Microsoft just because it's your Mag 7 stock that's clearly in that space.
Yeah, I mean, I think, for me, it's the ETF, but that's one thing I have on the risk on side of things. The other one is Bitcoin, which I think
Can you say that again?
Has had a little bit of, well, I'm doing it through IBIT, and the logic that I had here was essentially, here was a market that really wasn't paying attention to the war narrative at all.
Mm-hmm.
Not this way or that way. It didn't really care about bonds or the dollar or any of those things that started to happen. I mean, here's kind of the peak of the war when it first breaks out. This thing is not going anywhere. And then when you get this kind of quiet shift higher in sentiment, it doesn't do what stocks do. It just meanders higher. And so right around here, I started getting long. And for me, this is kind of the line in the sand. Essentially, across this, and I think the trade's wrong. But right here for me is about where I think this still makes sense. What are your thoughts here?
Yeah, I'm long IBIT. I think you could see this thing significantly higher. And it's still early days for this space anyways. So yeah, I've been layering into positions and I've been using IBIT too. Last year I had a year-long trade in IBIT and just had a strangle on at all times, eliminating upside risk at all times. And I ended up collecting $3,000 on one contract, one strangle. But I now have 100 shares with a short call all the way out in December because I had to roll up and out to alleviate the share pressure. But yeah, I have 100 shares and a short call out in December. If it sells off more, I'll move the call back into a near-term cycle and roll it down, of course. But yeah, the premium in IBIT is nice too, and the price point of 43. Like you can do whatever you want in here. And even right now, if you opened a new position in June or July in IBIT, like you're picking up $3 for a 40-50 strangle, close to it. So yeah, I like the premium here, and the liquidity is vast. Like these markets are super liquid, penny wide, and that's what you want to see if you're trying to trade something like this.
Yeah, I mean, you can see I have these positions in here. I mean, even if you went out, and I mean, I like to give myself a lot of time on something like this because I want to have my exposure to underlying delta kind of diluted in a volatile instrument. I kind of want to give it time to come around and give myself the benefit of not getting the macro call right or wrong. But even if you were buying calls right here, and all you really wanted was just essentially a rebound back, you can see you're getting pretty solid risk reward here. I mean, that's almost 2-to-1 for a swing that's not that great. Even just very simple call buying.
Yeah.
I mean, in fairness, there's not a whole lot of IV in here to extract, at least from a kind of nearer term perspective. But this is liquid enough that you have an easy 2-to-1 risk reward. So if you were just saying, you know what, forget what this is, in sort of the spirit of being ticker agnostic here is a trend that's higher. You've pulled back to former support or to former resistance become support. What would you do here? What would be the risk reward idea? Well, you're really close to support. So if you're wrong fast. And if you're right, your upside is asymmetric at the very least this way to maybe, let's call it 47. So in my view, this still looks constructive. And the fact that it doesn't seem to care about what's going on in the bonds seems to be speaking favorably of it.
Yeah. And I think with IBIT, the nice thing is like if you bought a call spread, if it sold off, you could buy back the short option and just lean along with the naked call. But I like naked calls in here too, because there's two products that we know for a fact when they rally in a big way to the upside, implied volatility expands as well. And that's crypto and volatility. There is also your short squeezes in these random products that you can try and find, but they're harder to find. Of course, when that happens, it's crazy. But like IBIT, I can tell you, if it goes from 43 to 60 in 2 weeks, the implied volatility rank is not going to be 17. It's going to be way higher. The implied volatility in the product itself is going to be way higher. So the naked call benefits from the upside delta. It benefits from the increasing stock price, and it benefits from the expanding implied volatility. So to your point, like a 50 strike call out in July for 75 cents, like that could be a $2 option. And if you actually chart the option, it has been a $2 option, not once, not twice, 3 times from mid-April until now. So these things move around, and I think it's to the risk reward standpoint, your reward is greater than your risk if you time it right and you don't hold it to expiration. If you just get out when you get a doubling or something like that, like it's a solid trade.
Yeah, I think so. Before we run out of time here, I do want to take a look at the elephant in the room. And that is, of course, what's going on in rates and bonds. We have another massive sell-off today in notes here. At this point, we're basically getting into the area that was before we had the big tariff scare. That was this right here, where last year everybody said, oh my God, these tariffs are going to crash growth. Oh no. And we had this massive drive up in the bonds. Market started pricing in all kinds of rate cuts. We've erased all of it. And so we're back to the starting line here. Is this just the ticking time bomb that's going to finally tip this thing over? For me, the cost of money is the most important thing. It doesn't matter how good the story is. It's all about, does it make sense to bet on it? Do people feel good about parting with their money and taking market risk? And if the money starts getting really expensive, then they'll feel less that way. And really nothing else has to happen to dampen sentiment. What do you think?
Yeah, I mean, it's been a wild shift in the Fed bets here with the probabilities.
Yes.
Like interest rate cuts.
We're betting on a hike now.
I know. Yeah. Hey, I got
narrowly, but better than even odds.
No, it's insane. Like out in December, it's 0.3 of a percentage point greater that we get a hike than staying where we're at.
Yeah.
But like I said, I know you remember this. I was saying, show me the cut. Because every time we start a new year, it's like, oh, we're going to have 3 cuts this year. It's like, no, you're not. That's a joke. And now we're going the opposite direction. So yeah, it's been crazy, but it's also been wild to see like the movement in the bonds and notes not paired with the movement in the equities until the last couple of days. Like you've just
until Friday, essentially.
Yeah. It's been crazy. It's just been this like, oh, nothing matters. Let's just moon this thing and see what happens. So yeah, could be some turbulence down the road. But again, I think we need to see the vol structure change pretty dramatically if we're to expect that the market, comes down from these levels. But yeah, the bonds and notes are telling us that we should be paying attention to more than just the E-minis and NASDAQ. At least the last couple of days, we've been seeing some downside movement, but lots of question marks in the air. That's for sure.
For sure. It's almost like the war trade continues in gold and bonds and the dollar and rates and that whole structure. But until Friday, stocks were blissfully unaware. Maybe the Cerberus IPO was some sort of a marker where they were done with that and said, okay, that was peak happy. Let's see. And of course, NVIDIA is the next big check on that. So we'll see how all of that goes. But for now, overtime is out of time. We'll be back to this conversation as NVIDIA crosses the wires. But I'll be back in just a moment with macro money to break you down everything else that's going to happen tomorrow. We didn't even touch on the FOMC minutes, so I will. Don't go anywhere.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February. and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol. Andar por cima do céu. Fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou. Chegou. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar. Não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou. Madrugada chegou. Madrugada.
We are facing a moment of truth in markets, and they are looking soggy before it comes. That's what we're going to figure out how to benchmark here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we've got the big event risk in front of us now. The week started off a bit soggy, but certainly nothing like the fireworks that we had on Friday last week. But now we are entering the moment in the week's calendar where the big event risk will present itself. And so, of course, we are ready now for the markets to really make a decision whether Friday's sentiment meltdown is going to continue, or if this relentless buying of the dip that we have seen until this point, really from the lows in late March, early April, following the outbreak of the Iran war, if that is in fact going to prevail, and we are going to see a dynamic here that is more constructive. So as ever, we'll look at the price action first and see if we can't make sense of what that is telling us here. And then we'll take a look at the actual event risk that stands in front of us and see how that fits into the picture. So here's the S&P 500 to start us off. And we can see here clearly the situation is looking a lot soggier here than it's looked pretty much the entire way up from those lows that we just mentioned, late March, early April. And we can see here that what the market seems to be doing is worrying for two reasons. First of all, these are some of the largest declines we'd seen in weeks, and clearly the series of higher highs that we were carving out here has been breached in some way. It's early days yet, of course, but we are starting to get lower highs here, which is sort of challenging the implicit logic of an uptrend by definition. And also volumes are picking up as this kind of price action starts to appear, suggesting that while on the way up here, volumes were fading, on the way down, they seem to be building. Now, it is certainly accurate to say that markets don't panic buy, they panic sell. So you would expect there to be a little bit more volume on the way down after a big rally. But nevertheless, the kind of broadening conviction that you might see in a market that was really imbued with confidence in a lasting way, that was not the story of this move higher. And so putting these things together, it seems like maybe something is finally starting to happen here. And perhaps what this lines up with is the incoming crescendo of the corporate earnings reporting season. Because if we consider where the stock market really goes off on this very elaborated upside tangent, it occurs right here as the earnings season really starts to start producing big name results. And interestingly, this is also where the volumes kind of level down from about here to about here. Now, this is the Iran war breakout and the parallel sell-off. In this period, stocks generally fall in line with all of the other markets. It's when the earnings season starts that they wander away. And now that the earnings season is coming to some kind of a close, and in any case, the AI narrative that was really at the heart of that earnings season, the CAPEX announcements from hyperscalers and the extent to which that has imbued confidence into markets, of course, being the kind of main story there. Now that we're kind of through that news, and perhaps last week's Cerebras IPO was a kind of bookmark of sorts in that narrative, a kind of crescendo semiconductor IPO. After that, and indeed on Friday, the markets seem to be much more minded with this dynamic again and what's been going on in the war trade and the extent to which that's feeding inflation fears and driving up borrowing costs. That was this move right here. And of course, tellingly, it comes with renewed push higher from crude oil. Of course, since the war began, unlike stocks, this market has never really unclenched. It's still in its wartime range and near the kind of upper half of it, nearer to the upper half of it, we should say, than the lower half, but still kind of close to the middle or so area, but very clearly still signaling that as a consequence of this war, there is a higher price of energy that has become, in many respects, locked in. And that, of course, makes sense. Even if you reopened the Strait of Hormuz yesterday, you couldn't get output back to levels that were there before the conflict. Then you'd have to, and that would be the case for months. Then you'd have to figure out whether navigation in the Strait and in the Persian Gulf in general is as seamless as it was, and shippers and insurers are going to take quite a long time to be convinced of that. So traffic is likely to be diminished. In fact, think of the situation with the Houthis attacking shipping off the coast of Yemen, and those waters still haven't seen a full rebuild in traffic after there was a deal with the Houthis last year to stop those attacks. So there's quite a big lag here. Even if the US and Iran were to strike a deal immediately and commit to reopening the strait, there would be a flood, of course, out of tankers already trapped there. But would any empty tankers come back to refill again? Maybe not for a long time. And so this looks like an inflation concern that's increasingly locked in place. It's a similar story for nat gas, where things have started to creep higher again, and we're starting to see a more kind of concerted fear in the energy complex more generally, that the longer this continues, the more shut-in risk is going to disrupt deliveries. In fact, nat gas may actually be disrupted longer than crude oil is, even if you were to reopen the strait imminently, because of the damage to regional facilities. Expectations are it may take a year, if not more, to get output back on track to where it was before the conflict. And so in response, of course, bond yields continue to surge and bonds themselves continue to melt down. This is the ZN U.S. Treasury futures contract that tracks notes. And you can see here, we're basically back to where we were in early February or so last year, before the rollout of the Trump administration's tariffs created a growth scare and fueled rate cut speculation that, of course, sent bonds sharply higher and was a big pull down on interest rates. But we can see we've fully erased that at this point, and we're essentially back into this mode where interest rates are approaching those highs from early 2025, where the market got wobbly and where it was vulnerable to that kind of news. Now, of course, there's nothing automatic about this level that says, oh, well, if we get into this area, then stocks have to fall. But it is the case that the last time we got into this area on borrowing costs, stocks were not particularly tolerant of risk and much more minded toward defense, and perhaps having more expensive money that makes it that much costlier to roll again if you crap out on some of your positions. That certainly seems like a dampening effect and a vulnerability, especially with markets as elevated on Wall Street as they still are. The situation in gold continues to reflect its role as a non-yielding kind of asset in a world where rates are going up. It is sliding again and attempting to take out the underside of its range from late April. That would, of course, set the stage for a decline back down somewhere over here toward 4,300 into the ceasefire lows as they appeared in gold. Of course, these same lows appeared everywhere. They appeared in the bonds, and they've now been overcome. They appeared in crude. They appeared in stocks, and certainly in gold as well. It looks like we're getting ready to perhaps start to head in that direction if this rise in yields continues. But of course, bigger picture, here's another asset where the war trade is clearly alive and well. Yet another one is the dollar. It's pushing up just as gold is testing the bottom of its recent range here. The dollar is testing the top of its recent range. It pulled back maybe about halfway from that ceasefire announcement from a rally through the war, because of course higher yields on a given currency benefit that currency. Rate cuts have fallen away almost completely. More on that in just a second. But the sort of architecture of war trade dynamics seems very much back on display in recent days. And perhaps the key difference is that now, with the earnings season winding to a close, stocks have decided to care. But the dynamics themselves as they've presented themselves in these other markets, they are just unfurling into more conviction after the pullback from late March, early April. The trend broadly and across markets appears to be reasserting itself. One place where it perhaps isn't is Bitcoin. It continues to march to the beat of its own drum. It was very weak, clearly, in the fourth quarter of last year, unlike stocks. So it's difficult to call this a sentiment sort of thing. It did virtually nothing during the outbreak of the war trade here. And instead, what we have is this kind of meandering move higher out of this down move, these lower highs and these lower lows here. And now seems to be testing former range resistance right here as support. So we're sort of on the dividing line here between whether this breakout is going to hold or it's already run its course and the next move is down again. But for now, this continues to do its own thing, pay relatively little attention to what's going on elsewhere. And of course, what's going on elsewhere, as we've just described, is this inflation threat. We can see the break-evens in the bond market. These are inflation expectations that you get by taking the difference between nominal yields and inflation-adjusted tips. That gives you the magnitude of that inflation adjustment. You can see they've been surging right alongside crude oil. And that dynamic here continues as crude oil has taken its most recent swing higher. So this continues to be now the driving narrative. And if Bitcoin is standing aside, that perhaps stocks look like they're ready to rejoin. And that, of course, has given us a sharp move higher once again in really the full range of expectations for global central banks. You can see all of them pretty much, with the exception of the Bank of Japan, which is for a long time on its own time and is on its own time here again. For most of the others, we've had a dramatically hawkish shift in expectations. So we can see here, as of early this week, the Fed is expected to deliver 15 basis points in hikes, not cuts. Now, of course, the typical increment of movement is 25 basis points. So what this amounts to is a 60% chance that we are going to get a hike from the Fed at some point this year. And if we look and see where that could be, you can see the odds start to favor that as soon as December. So by December, you're already looking at about a 60% chance, 59% chance, as we've just shown, that you're going to be shifting from where we are currently up 25 basis points into this range. And as you go down the list here, you can see it's not the most convincing, because you can see that what you have here is starting to still hold a meaningful kind of likelihood, maybe about a fifth, that you're going to remain on hold. But as you move out in time, what you see is that as this probability holds relatively steady, though it falls here from 40 into the 20s, it's not like this probability is building. All of the expansion of the probability matrix is on this side. So more hikes. This, of course, makes the incoming minutes from the most recent April FOMC policy announcement a critical sort of thing. That was Chair Powell's last outing. The next incoming meeting is going to be chaired by Kevin Warsh. But the minutes should nevertheless be interesting for what they say about the tone on the committee. Because, of course, the Fed chair is not a dictator and cannot set policy without a plurality of votes on that committee. And so he has to be a consensus builder. And if the tone on the committee is hawkish, well, then the Fed chair can be outvoted just like any other small lone dissent. And so looking at the statement from April, we can see there's not a whole lot of big changes here. We can see that recent economic indicators suggest that the economy is still expanding at a solid pace, although job gains remain low and inflation is elevated, of course, in part because of energy prices. There's concern about uncertainty in the Middle East. And then if we look at the voting pattern, we, of course, have the obligatory call for a cut from Stephen Mirren. He is, by the way, now off the FOMC because they had to make room for Kevin Warsh to become a member so that he could be chair. So Stephen Mirren no longer this voice on the committee. Whereas the other dissents from Beth Hammack, Neil Kashkari, and Lori Logan came not because they were dissenting around leaving the Fed funds rate where it is, but because they did not want for there to be an indication in the statement that the next move might still be a cut. They wanted a more balanced statement that did not include an easing bias. Speaking later at the press conference and ostensibly channeling the committee, Chair Powell said, we don't know what the bias in the next statement is going to be, but we do know that near-term inflation expectations have risen and jobs growth slowing reflects largely what's going on in the labor force structurally rather than in the economy cyclically. And so nobody is really saying the economy is doing poorly, and so we need these cuts. But inflation is elevated. So the bias is becoming increasingly, well, we can't do much about sogginess in the labor market. It's not really a cyclical kind of problem that Fed policy can work to counteract with lower rates. It's more about the demographic shifts happening in the labor force with baby boomers now retiring en masse and the next generations having high labor force participation, but fewer numbers. Take that with the recent shift in immigration policies, and you can see how you end up with a kind of low hire, low fire labor force in aggregate. But there's nothing that the Fed seemingly can do about that. It's not the kind of issue that the Fed has tools to respond to. And so it seems like what the Fed chair is saying here is, given that backdrop, the focus has to be on inflation because that's where the Fed can actually do something to keep expectations in check. They can't reopen the Strait of Hormuz, of course. But by raising interest rates, they can keep inflation expectations at least relatively anchored. Or at least that would be the hope. And so we can see that there was a vigorous debate about guidance and whether there would be a change. We saw those three dissents that wanted more neutral guidance without a bias, but we can see the majority still wanted that dovish bias there. And we can see follow on from Chair Powell here saying, people are not saying that we should hike now. People argue going to neutral would reflect markets. Nobody at this point is voting for a hike. Now, that's interesting, of course. And when we look at the breakdown for policy expectations in the March update of the Summary of Economic Projections, we'll get another one in June, we see that upgrades get issued for GDP. Upgrades get issued for inflation, but the Fed is still looking at one cut each this year and next. The markets obviously don't see it that way at this point with this energy shock. And the degree to which the tone on the committee and the debate on the committee sets the stage for a more hawkish view, as some of those types of things get now backing in evidence. Of course, just last week we saw CPI and PPI numbers that showed not only surging energy prices, but the spillover of that into core services via transportation costs and warehousing costs, both at the consumer and at the wholesale level. And that, of course, now speaks to a much stickier inflation issue. So the kind of things that the Fed would have needed to see to rethink this are ostensibly now on the table. So looking at these minutes may well tell us Kevin Warsh might want to cut rates. There's no evidence that he does in this environment, but were he to want to do that right away, it would be difficult to get done because the tone on the committee seems like it's going to be relatively hawkish, and those voices that were hawkish in April have probably been reinforced by the evidence since. So with that in mind, these minutes may well feed into all of what we've been watching, the melt up in interest rates, the collapse in bonds, the stronger dollar, the weaker gold. And to the extent that stock markets get increasingly worried about these things, this speaks to them too. But stocks may well wait to make their final conclusion on where sentiment is set based on the release of earnings from one NVIDIA. Needless to say, the darling of the AI universe, and now an absolutely behemoth piece of market cap. When we look at sort of how we're setting up here, the stock has pulled back to what is essentially former resistance, now turned support, and threatened the sort of architectural stability of this up move. This is again from the late March, early April lows, and very much approximates what we've seen, for example, in SMH, the semiconductor benchmark. So looking at this now may well be the tell. This is such a huge piece of market cap that how this goes is likely to be a big kind of macro level sentiment event for markets. And it's probably less about what the company says and more about how the markets look at it and whether they think what is being said is sufficient. We can see here over the past 4 quarters, the company has beat on EPS every single quarter. But as you move ahead here, you can see, okay, so big beat, stock goes up. Slightly smaller beat, stocks falls. Slightly smaller beat, stocks falls more. Bigger beat, stocks falls more anyway. And so maybe what is occurring here now is some kind of a hype cycle exhaustion point where the bar for an upside surprise has been set so high that it's almost impossible to clear, whereas the bar on the downside is relatively modest. You don't really have to do a lot to undershoot very bubbly expectations now. And so perhaps what this sets up, even if, and certainly in the event that NVIDIA reports another set of stellar numbers, as they are likely to do, we don't get the kind of market response that matches the strength of the numbers. Instead, we get more of a, well, what have you done for me lately kind of tone from traders. And so with that in mind, positioning-wise here, I am still short gold, long the US dollar across a number of currencies, the Aussie, the pound, the euro. In the spot market, I'm also short the yen and the Swiss franc. The exposure here on Bitcoin on the long side continues. I'm going to start to have to think about this piece of it that's coming up on expiration relatively soon here, just 10 days left in it. But for now, I think the trend still holds. So I'm going to hold on to this for now. I'm long software, which seems to be the first destination for capital to de-risk into a kind of rotation within the tech space. This has been an unloved corner, and so I'm long here via these call verticals. Long the rise in interest rates with a pair of puts in IEF in the middle of the curve, and still these put verticals in TLT at the long end of the curve. I am long energy, looking for that to continue to build both nat gas and crude oil. And on the risk side of things, in stock markets, I'm essentially trying to balance the premium that I spent buying puts early in the rally and looking for it to top there by now selling calls, both in NASDAQ and the S&P, and of course having re-upped into the Russell the same way. So collecting premium to basically offset the costs of these puts while still maintaining bearish exposure, because the idea here, again, is that we're trading for the asymmetric possibility that the stock market may have topped. And so if we're wrong fast because we're near the highs. If we're right, there's a big swing to take. And that is Macro Money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, usually looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both. Woo! Hola, everyone.
Hola.
¿Cómo está? Bien, et tú? That's all I know. That's it.
That was pretty good.
Yeah.
That was pretty good.
Yeah, that's all I know.
You don't know pendejo?
Yeah, I know pendejo. Yeah, that one I know. Puta, I got that one. I don't have.
We're just start over. I'm so sorry. I'm so sorry to our native Spanish speakers. Lo siento.